Right, good morning, ladies and gentlemen. How's everybody doing this morning? Turning. All right, we got a lot going on this morning. We have a lot popping off here. Good morning. Welcome. I am Justin. This is the IB League live stream where we're going to cover the markets, what's moving, what's grooving, and what's not. So I didn't do a watch list last night. I was going to, and I had storms literally all afternoon and all day. All right, so did not want to go ahead and start the live stream and do a watch list or even record it and worry about the power going in and out. So I do apologize for that. We'll get into that today and this morning. We still have a lot that we've been watching from last week. I mean, there's a lot, right? Obviously, CHWY's on the list. We have CHWY, GameStop. We traded GameStop. I traded GameStop 2 or 3 times last week. It was either 3 or 4. It was either 3 or 4 times on Friday. Now, I will say this. I got over a 200% gain. 2, 4, 6. Yeah, it was over. It was 250% gain on Friday on GameStop puts. I ended up clocking. Let me go back. Let me log in real quick, and I will let you guys know. Now, I did not mean to take this. Now, let me tell you guys something before I even. I'm just gonna let anyone know that if they trade on their phone, and you may not do this because I was fighting for price. All right, Friday on GameStop puts, we were long twice. I got long twice on this move up, right? And we just could not get through $26 on GameStop. So today I'm going to be looking for 24 if we're able to do that. Now we can go in and see why this is selling off like it is. Okay, I'm not worried about CHWY. I want to know what's going on with GameStop. Let's go look here. So I ended up going long twice on GameStop. This move up higher. Okay, you guys are with us when we got long. We got long on the breakout. The pullback, we got long off this previous high here. All right, we got long the previous high, and this was a really nice move. Just base hit, double hits, just putting the money in our pocket because we know this level up here is pretty tough. And me personally, I was waiting. We got that rip through it, and I could just see that we were struggling to get through it. Now, I actually thought we were going to go a little bit higher. I got to be honest with you. Then I looked to that prior day's volume. I'm like, no. We're going to need a whole lot more volume than this. But then again, CHWY was going off, so that's why we were not getting the volume that we needed. So that was also in my mind. I'm like, all right. So I took profits up at this level twice. Now, I'm going to warn you guys. For anybody that uses their phone, I'm not saying you do, all right? To each their own. But I will say this. If you have an order, I was fighting for price as far as the puts. Now, when I mean fighting for price, I am either having a limit order that I have that I'm moving around, or I'm just going to tell you guys, hey, I have the order up right now. I'm going to market order in on, let's just go to a 1 minute, and let's just say on this wick move up, right? On this wick move up, I'm going to preview the order, see what they're trying to fill me at. Then I'll either go back and then preview again to see, if I can just get in on these, popped wicks, right? And see what they're offering me versus what I have on the level 2, right? Between the bid and ask. So I'm going to know where the bid and ask is and then versus what they're going to fill me at. Now, I had the order up to preview and I went and watched a video. I don't know if me leaving and watching a video when it logged me out that order that was previewed was logged in, but that was, I'm going to go to the orders right now. So that was the 250 or the 25.50 put. They filled me at 28 cents, which is crazy because that's the price I was trying to get. We were fighting between 28 to 32 cents, roughly in that area is what it was going back and forth from. And that fill was at 12:14 p.m. Okay, that's the 250 or the 25.50 puts at 12:14 p.m. For 28 cents, and I exited them for 70 cents flat. 71 cents. So 70 cents flat. Sorry, I'm just tongue-tied right now. Just trying to say 25.50 or 250 or whatever. So, and I exited them at 2:35 p.m. for 70 cents with an entry price of 28 cents. So, again, I did not enter that. Now, we wanted to. We knew, hey, we're just double topped here. We do not have the volume. And we wanted to get short, and I told you guys that. So right around here on this break lower, it's 235. Where's 235? Because I know it was around this area. 235. Yeah, right there. We were back down at low a day. Yes, I could have held it. Probably got a little more, but that at that time on Friday, you're running out of time anyway. So, and June, yeah, and they were the dailies. They were the June 28th, by the way. Or else I wouldn't have not, or else I would have just taken half off and then left some on, because that position would have been paid for. It would have been a free position with a little profit, and I still have the other half. Anyway, so we were long twice. What else did we take? We just had an incredible day Friday. UAL, we got the $50 UAL calls. Now I noticed, and I'm going to show you guys here, Boeing. So UAL, we were long literally on this pullback to VWAP. It was that one right there. Let me just double check with you guys. Sell close, dude. We got long Tesla too, bro. I knew it was a busy day, but dude, we got short Tesla. All right, yes, we got, dude. All right, so I had 1, 2, 3, 4, 5 trades on Friday. I had 5 trades on Friday, 5 for 5. All right, so I ended up entering the $50 UAL calls for July 5th. All right, for July 5th. And then we ended up taking those profits. I entered them at 10:20 p.m. All right, 10:20 p.m. is when we entered these. Right. Could have been better, right? 10:20 p.m. So that pullback right there is where we got long. All right, that second pullback, not this one, but that one. All right, that double top high there, pull it back, and we got long at 10:20. Literally that candle, that 1 minute candle right there, that tail, that's us. All right, just so you know, 2457 was my order number. All right, SEC can come knocking on the door all they want. So I do not lie to you guys. I have good days, I have bad days, and I'm doing it here on the live stream with y'all every day. So you're going to see the good, the bad, the ugly. Some days I'm perfect, some days I'm not. More than likely, I'm going to be right, at least on the direction, for the most part. 90% of the time, I can at least get my direction right. Now, the timing and all that stuff's another thing. So that's UAL. That was the other position. Again, we got into the 2650 calls twice. We got into the UAL calls once, took half off on those calls, and it took the other half off up at the top because I was actually thinking we were going to break back down, because you have all these people here that are long down from 47. You know, 50 was the target for a reason. Okay, Tesla 197 puts. We got short Tesla as well Friday. 197 puts. 197 puts. 197 puts. 1024. 1024. Right there. Pop up. Bang. Damn. What a beautiful... Yo, and I told you guys, Fridays, I fucking crush it, man. So 1024. Right there was that trade there. Order number 2458. Executed... Let's see. 1024. Executed at 30 some cents. 33 cents. So that's with commissions. Okay, so that's 5 trades, 5 for 5 on Friday. 250% on GameStop puts. 250% on GameStop puts. 28-cent dailies sold at 70 cents each. So I actually got to thank Biden for that one. Again, so be careful, guys. I just want to let y'all know that if you ever are a person that, whether you're, right, let's say, again, you're getting short into these pop wicks here. Let's say you're using your phone because you're out at work or you're somewhere driving or riding, I should say, not necessarily driving. Make sure if you have an order up, I'm not saying you guys ever do or put yourself in that position. Again, I am in that position. I am doing that again because I'm getting these wicks. Either I'm going to have a limit order and I'm going to move that limit order around and tell you guys, or I'm going to market order into that wick, preview what they want to fill me at versus, and I'm going to do my due diligence versus what the bid-ask spread is for those options and see if I can't fight for price and get a better price on these wick pop hires. So I left it there, watched the video, and as the broker logged out, because it was past 5-10 minutes, it put me in those positions. But it filled me at 28 cents, so I can't complain. It is a good thing that I had noticed it. I mean, they were already $1 in the money. All right, they were $1 in the money, so it would not have mattered. I would have still been able to, walk out of it with some nice profit. But I just, what if it was the other way around, right? What if something happened and then it just started ripping? And here I am, I'm down. I would have been down 100%, guys. I'm gonna tell you that right now. If it would have reversed, if GameStop would have reversed, I would have had a really, I would have been okay because we already had 4 green trades on before the puts, and that's why I was a bit reluctant to chase after it. And that's why I was fighting for price, because I knew if I could get the right price, I would be okay. And now let's just say it pulls back here and it holds again and just massive volume comes in. Let's just say news comes out, something, and it pops and I'm short and I don't know it. That would have been a losing position. All of it, right? Because it's a daily. All right, let's get into it. Hit that like button. Subscribe. Hit the like button for me, guys. Listen, I keep the stream free. I'm doing my best. All right, the thing is, you got to understand there's a lot of people out here in this world who run paid groups. Who can come here, take our ideas. So I need you guys, if you have any success with us making money, all we ask is a contribution or a donation back to the stream. That link is in the description down below. 1,000 subscribers. I'm going to do a giveaway for you guys. And any questions and tickers, throw them in the chat. Let's just go look at the indexes real quick. Again, I do apologize. The watch list didn't happen last night because I just had storms all day, all throughout the afternoon and all the way up until 11 o'clock at night. So I did not want to record or even do a live stream and just attempt to do something and continuously lose it with the power going in and out. It was really windy, lightning, all that fun stuff. So it's all good. So the S&Ps, we had a nice down day Friday. We shot up to all-time highs and got rejected. So what are we going to look for today? We have ISM manufacturing. All right, I'm going to tell you guys right now, we have a lot of data this week. A lot. All right, a lot. Like, not even really a lot, just like a piece just about every day that's going to, the market should move off of. ISM manufacturing this morning. All right. Tomorrow you have Powell. You also have Jolt's job openings tomorrow. All right. API. No, that's Wednesday. So the initial jobless claims are going to be pushed to Wednesday, not Thursday. S&P Global Services PMI, Canada's balance of trade, ISM services on Wednesday, along with, I know it's here, I know it's here, I know it's here. Unless they moved it on me. So initial jobless claims should be coming out. Here we go. Initial jobless claims are on Wednesday. So just remember that in case you're forgetting about Thursday being the 4th. And then Friday, non-farm payroll. Okay, that's going to be a big data point. So that should bring in some volume for us. I was reluctant on the volume and what was going to happen this week until I looked at the economic calendar, and I'm like, hey, hold up. We got not only Powell, we have labor numbers, we have manufacturing, ISM services, ISM manufacturing, and non-farm payroll. So last week, you guys saw that they added 80,000 state employees. Expected 40. So these numbers are cooked. They're cooked from the jump. All right, they're going to borrow Monday and force these numbers how they want them to look, just so they can get on stage and say something. Palantir. All right, let's go look at Palantir. Looks like Bank of America has upgraded the price target, but we're going to go into the indexes. It's pretty easy. These levels are self-explanatory. They really haven't changed. So Palantir is testing Friday's high. Excuse me, I'm sorry. I don't like to drink coffee in front of the mic. All right, so we have this flat top resistance here on Palantir. I'm not really going to be looking at Palantir too much today unless we can get up there. And the target area that I'd be looking for on Palantir would be a push up to like 27.50. All right, 27.50. If you can start closing up above this level, maybe we hit Friday's close. All right, maybe we pull back into Friday's close, 25.30. Look for a push back up to this area. You shouldn't really have anything to stop you up until 26 to 26.50, 26.47. All right, that is PLTR. So look for a break of Friday's high a day, guys. If you can get through Friday's high a day, I would look to take profits in front of 26 at like 25.80 and look for that run to 26.21. Write it down. Watch Friday's high. All right, and maybe you get a pullback into the Friday's close. Take a long, keep your stops where they should be, and look for another move higher. All right, there's news with Boeing. Now, Boeing was actually, and I'm going to go to the SPY and the Qs. I just wanted to bring this up real quick. Look at this chart. Look at that chart, man. So you're coming up to a flat top resistance zone up here with the 100-day moving average at 185. So I am kind of curious what happens with Boeing up here. There's some news with the Spirit Airlines, and that news actually came out somewhere down here, I think it was, or it was here, or it was there. It might have been that day. So I want to see what Boeing does here up at that 200-day moving average if we get a rejection up here at 185. All right, that 185 level looks like a level we could look at for a possible short. You know, I haven't done any technical analysis with it, but it was nice. I just wanted to see where it was at this morning, and I know that it just so happened that it ran up there Friday, and now we're starting to pull it back. You could look for a move back into the 50-day moving average over the next couple days. All right, energy's up this morning. Remember what I told you guys last week about GLD? All right, when you have these consolidations, you want to buy the lows. As soon as you identify them, boop, get this day, boop. What happened? We're already starting to run up. So you can already see this flat bottom resistance here on GLD from like 210 to 212. Just come down to this area and it pops. One of these days you're going to see this thing consolidate and it's going to make a low and it's going to shake everybody out only to just go on its second run higher. All right, not sure when that is, but if energy keeps climbing like it is this morning, all right, you could see a nice long possibility. So you could see a long. Keep an eye on energy this week. If energy keeps trying to trend higher. Now again, this is higher from Friday's close. Keep an eye on GLD. You can watch the dollar. Let's go to the SPY. So the SPY. Monthly candle. We closed our monthly candle last week. Low volume. Still closing up near highs on the monthly candle. Weekly We saw it the week prior. If you were here last Monday, I showed you guys. I said, hey, it's a pretty big tail there for a weekly chart. I know it's hard to see. But you know, you double topped up here, so 550. 550 is the number. Let's go to the daily chart. Again, if you guys have questions, post them in the chat. Let me know how your weekend was, how you're doing. What are some things you're watching this week? How can we help you? If you guys have anything you guys would like to ask on. Oh, by the way, expectation, because we do this every Sunday too when we do the watch list. And again, I do apologize because of the storms yesterday that power was going in and out. And I'm just like, I didn't want to get frustrated trying and fighting something that, you know, I can't control, which is high winds, losing power, and all that fun stuff. So my word of the week for the most part is going to be hold. I'm going to take my positions this week. The one thing I'm going to work on last week was expectations, understanding what the expectations should be and what they are, right? For whatever it is that I'm trading, understanding the move. What am I expecting to get out of this versus the volume versus where my entry and my exits are. You know, and not just shooting for home runs, because it doesn't mean that the market's going to give it to you. Unless you're in a high volume, high trending name, you know, understand your expectations. That was mine last week. You can have your own. Join me with mine, whatever you want to do. I do want to hear from you guys in the chat down below. What are you going to work on this week? What do you want to improve on? So this week, I want to start holding my positions a little bit longer. All right, until I notice that I'm like wrong, right? Sometimes I have a good sense of when things, just putting the puzzles together from time and sales level 2 and the way price action is reacting, that I've either entered a bit too early and I need to give it more room, or things have changed. So stick to the levels, right? Either the prior day's low, prior day's close, or just underneath. You know, give it the room that it needs. Depending, I can't just give you one exact example because there's many difference. So, all right, SPY daily chart. We closed just above 544. All right, 544. I know this looks backwards, like, hey, you're buying up here. Because I was actually thinking if we closed up here at 548, you know, I would look for another test higher along. But this is from Friday. I got to change my colors around. This needs to be a little bit brighter because it is the 20-day moving average. All right, let me do that so we're not confused here. All right, so what am I going to be watching for today? I'm going to be watching 547. 547. That's going to be the level we're looking for. At least I'm looking for. 547. All right. Friday's lows and 547. That's the range. All right. That's the range. Now, I still think, you know, that was a pretty mean downside. I think you're going to see somewhat of a consolidation here. Short the rallies or sell the rallies and then get short the pullbacks. Get short into the top end of the consolidation. I think you see us back down here at 541.50, right? But I also think we're not going to shy away from 548, 550. I think you're going to see us put in a range here for a bit. All right. Now, I would keep an eye on what NVIDIA does, because now that really matters. You got what you needed. You got the overweighted, you know, you got the adding of NVIDIA being 20, what was it, 23, 26, 27% of XLK. So it's going to mean a lot more than it used to. I think it was prior, it was only 6%. So watch NVIDIA now, because NVIDIA is going to move the markets a lot more than it did previously. All right. Pullbacks off of 546. Look for that. Look for last week's low. I'm actually looking right now. I would like to see if we could pull back into Friday's close, Friday's low, and see how we do with that. Let's go look here really quickly. Let's go pull up a 15-minute chart real quick. Sorry that this is right in front of the mic. My mouse. Alright, so yeah, that's really it though, guys. You know, 547 to like this morning. I would much rather see a pullback and a hold. I would much rather see a pullback and a hold at this minor level, 545. But really, your real support level is right there, 544 to 543. It's about $1 range. You can see these wicks down here, this whole area. So I could actually, man, we sliced through that. I wonder. We're still above there. Yeah, I want to see if we can get along and start to go back and reject 547. 547 is the area. And you did turn it into resistance Friday, so you don't technically have to go back up there. And you can see this little support level, boop, boop. You started to reject that already this morning. So we'll see what the data says. And then look, this level right here. All right, look at that. Pivot low, pivot high towards the end of the day. You know, and you're already rejecting that right now. So technical levels. They are working, they're holding, they're rejecting, they're doing as they should, which is good. It's good for people that can trust levels, you know. So we'll see what happens when this data comes out. The data is going to come out at 10 a.m. All right, data is going to come out at 10 a.m. So it's not going to be right when the market opens up. Let me see here. Where we at?
The question, I guess, is what do you see that others don't? But also, is it acceptable if there are bad days?
And tomorrow, by the way, I'm pretty sure that this Powell speech is going to be with Christine Lagarde. So you're going to see the European, the ECB's president, Christine Lagarde, as well. So you're going to get both Fed presidents there. So I know I'm pretty, you know, the market will be tuned into that. So consensus is 49 and forecasting 50 for ISM manufacturing PMI. Previously 48. And we'll see if this can get above 50 or if it remains below 50. I have to be honest, it was manufacturing, but the labor numbers was negative. So it was negative last week. Oh, come on.
Roger, very quickly, you think that the only resolution, if the president were to decide not to run again...
All right, so let's go into the watch list. Oh, shoot. You know what I forgot to do? I need to go see where we are as far as the markets. All right, you may not know what I mean by that, and I'm going to show you. It's good to know what indexes and what areas are leading or lagging, I should say. All right, which ones are leading or lagging? What, like, I'll show you. Give me 1 second here. This morning we have CHWY, DJT, Tesla, Bitcoin. There's a lot going on today. There really is. So strap up, lace up your boots, because 4th of July is already starting off bullish. All right, I got that. I saved that. So I just had to save this stuff real quick so that we don't have to go back and fool with it anymore. I just want to double check that I hit them all. All right. So if we were to look at the S&Ps, we had a close down here at the low. We have this bounce higher. And we are pretty much right above there. I'm going to use this pivot high. I'm going to use these two areas right there and pull up the Qs. So they're about tied up. Let's look at the Dow. So the Dow is actually a little bit higher. So there's, again, rotation. Remember last Monday? Goldman Sachs. Last Monday, I told you guys I liked Goldman Sachs for a long. And what happened with Goldman Sachs last Monday, I think you guys know. It was a nice trade. It was a really nice trade. It's 100% just on the day. So you can see, let's see if we end up getting some rotation here. This was Goldman Sachs. I gave this out Sunday night. I told you guys pullbacks in the 450.50. 450.50, stop loss below 448, 447, I'm sorry. And you got your move. All right, that was a $14 move, $12 move, and you're risking $2 to make 14. This is how you become a consistently profitable trader. Sticking to the formula. I mean, sticking to it. Understanding that, yo, it doesn't matter if I'm wrong because it's going to work in the long run. If I just stick to this. Because with this, you could have lost 9 times out of 10, and that 10th one would have put you profitable. That's a nice trade right there. Risking $2 to make 10. Risking $2 to make 14. Come on, man. You know, so... All right, that was last Monday's call out, which I gave you guys Sunday, along with all the others that worked out. All right, so let's get into it. All right, Coinbase. Coinbase is going to be on my watch list. If you guys can, please hit that like button, subscribe. Contributions and distributions and donations. That link is in the description. Let's get you guys where you guys want to be, and let's help make you guys some money. All right. I want to help you guys become better traders. I want you guys to get stuff out of life that you want. And I want you guys to just make some damn money. All right? And I can only do that with your help. So, you guys may not understand. There's a lot of people out here in this world that just use the channel for other ideas that they also have paid services. I'm trying my best to keep it free. And with your help, we can keep it free for everyone. All right? It just gets to be really easy to think about those things when you don't see any feedback or, you know, things of that nature. So Bitcoin this morning and this weekend had a really nice weekend. This in and of itself is still a break and retest of 64,000. I want to see if we can get some support on this pullback. All right, I want to see if we can get support on this pullback. Now, you saw Dave Portnoy talking about the 40s. He still could be correct, but I'm going to tell you guys right now, I was beating him over the head with buy it now. Buy a piece now. Don't try to call the bottom. Don't think you're going to be good enough to call the bottom because everybody and their mother is talking about 40,000. Like, you guys think that the market is this stupid? Like, come on. You guys know that it's not. Could it? Sure. But what if it doesn't do it until next year? And this thing goes to 75, 85 before it goes to 40. You want to be able to collect on that move. All right. So as of right now, this is just one big consolidation, which is still bullish. It's still bullish. Just like gold, buy the bottoms. Okay. Even if it pulls back a little bit. Now, again, I'm not telling you to do things. I'm just mentioning, don't try to outsmart the market. Don't think that you're going to just call the bottoms. All right, tier into positions over time. If it's a swing trade, these are perfect for swing trades in my opinion. If you can go out 3, 4, 5 months, a month, you know, get your few points to the upside. You're on those pullbacks. You're going to get a bounce back. You're going to get the reversal. Here's the problem. It doesn't look like there's much volume here, and that's not cool. All right, that's not cool. The volume still is not coming in like you would expect it to. So I think we still have to watch for 64 to be resistance. I would like a shake and bake. I would like Coinbase to really start to pull back and give you like one of these little shakeouts, and it's like, oh my god, and then you just boop, then you see it reverse. All right, those consolidations, I don't care where you look. If you just take, for instance, gold, okay, just like I told you guys prior. All right, I was long gold, I think November and early December of 2022. Look at this consolidation here, and look at that shake and bake, boom, and look what it started. That's what you got to look for in these consolidations. It doesn't have to look the same, but that shakeout, right? It shakes out those weak hands. You rally, put in a consolidation, it starts to sell off, and you're like, oh no, right? Bang, get long, and look at this consolidation through here. This is literally freaking 2.5 years, guys. Just buy the lows, So gold's kind of doing the same thing up here. That's why I was mentioning to I'm going to be looking to like buy the dips here, and just keep a small stop. Keep your stop where it should be. All right, keep your stop where it should be. All right, so I'm going to be watching Bitcoin today. Now, I am kind of concerned that there isn't really any volume, and I don't like that there's all this shit here because I want to be able to see it. Just, this sellers, in my opinion, are still going to be in control as long as this volume is showing up. All right, so 64,000. Look for rejections up there at 64,000. But we can also look for pullbacks. See if we hold 61.8 to 62. All right, 62,000 on Bitcoin. So I'm going to look for a pullback and try to go long that pullback today. But you got to be aware what's up ahead of you. Got to be aware what's waiting for you up here at 64. All right, let's go look at Coinbase. So yeah, that's going to be 62,000 on Bitcoin. Let's go look at Coinbase real quick. I'm so upset I do not own this in my long term. I remember sitting on the toilet, using the restroom, and I'm like, Coinbase is at $60. I had a chance. We all had a chance to buy it at 40 and 30 bucks, and I never did. So, missed opportunity there. All right, Bitcoin is flirting with the 50-day moving average. You came in today with a gap up above it. Right now, we're at 22,650 was the last order filled from when I read it. 22. See what I'm saying with my numbers? I keep getting them mixed up. 226.50. 226.50. We are right over top Friday's pivot high and the 50-day moving average. So I want to look to see if we can get 226 to hold and attempt for a long to try to get back to the 20-day moving average and try to use the 50-day and Friday and Thursday's close as an area to be a buyer. All right, so here's what we'll do. Let's go here. Oh my God, it's already 8:30. That's wild. It's already 8:30. I can't believe it. It's already 8:30. All right. So
what I would say to the American people on this is look at how well-reasoned this is going to be. I have no idea what they're going to do, but I know that the way they've been, you have Barrett on one side, you have 9 people who are going to bring a lot of wisdom to this decision.
I think we have to watch 225 on Coinbase, which is where we're sitting at right now, roughly.
There's a problem. There's corruption in the
220. So we have 220 here. And we have this gap fill back here on the 15-minute chart. I want to see, guys, if we can.
I'm just curious because I know you just said, look at these decisions and how proper they were. And then there are people who look and say, these people may be making decisions you think are proper.
See, we made this 220 level support.
That's completely improper.
We'll see what Bitcoin does. And if we can just get above here and we can hold 225, 224.50, I want to look for a long. All right, that's what I want to do.
In the Clarence Thomas case, if you had an employee taking money on the side without disclosing it, you would fire that employee. You don't think?
Andrew, it depends on the context. If an employee, no, we have an employee.
As a journalist,
Okay.
if I was taking money from people I was covering, I would be fired, and rightly so.
If you have a best friend from high school or college.
And then I wouldn't cover them.
Okay.
And then I wouldn't cover them.
Let's go to this. Is there any
So, yeah, they're just, I hate this, what they're doing on CNBC. All right.
across the board has deviated from their articulated tradition?
So we have this daily trade. You guys can see here, if we can hold the 50-day in 225.45, I'm going to write this down myself. And I still want to go into DJT, CHWY, all that fun stuff, because there's a lot moving around this morning. A lot, guys.
It never caused Joe Biden to do something different than he would have normally done. That's the same excuse here. You don't have much of a problem with all that influence peddling in the White House, right?
I have a problem with influence peddling in all stripes.
Let me affirmatively agree with you on something. Transparency is absolutely important.
224.
The rules of Congress need to change. I've been on this program advocating time and again for rules around trading. Let's let Congress people trade one time a year, absent hardships. That would eliminate all this. They could still be fully invested.
I don't understand why they keep making a big deal about Congress trading. Just let them fucking do whatever they want. They do it anyway. So that's what I'm going to look for, guys. I'm going to look for pullbacks into that 50-day, 225, 226, into that Friday's pivot high here. And I'm going to look for longs back into the 20-day moving average. I am a little nervy. I am a little skeptical of this and still think we could possibly look for a short. But I don't know if I want to take that short until we get up to, like, which we're there now, technically. I would much rather try to do it up there at 230. I got to be honest, in that 20-day moving average.
Coming up, a call to prevent China from going the same economic playbook that it's used in the past when it's been in trouble. We'll be joined by the ranking member of the House China Select Committee.
Yeah, if it takes this long to get to it, to get a watch list going, then it's probably not a good look.
To improve your digital security, just turn on NordVPN. Guard yourself from data snoopers.
Sorry, guys, I don't have the chat up. There we go. All right. Keep an eye on that. Maybe we pull it back all the way back into the 100-day moving average. All right. This was a nice gap up. I want to see if we can hold Friday's highs. If not, you have that 50-day rejection here. 226. That's the level I'm going to be watching. All right. 226. Does it hold? I don't know. We'll find out very soon. 226 to 224. Again, that's a $2 stop loss. All right, 226 to 224. It is Coinbase, so you got to give it that. You got to give it some room, because I feel like we have a lot of room up here. If we can find some support, you have some nice room off of, whether it be 224, 223. I want to see if we can try to get, you know, maybe like a move like this over the next day or two and get a nice bounce right into that area. But it's going to come down to what Bitcoin does. All right, it's all up to Bitcoin at this point. I will say also, be careful because that volume is really heavy to the sell side. Just understand where they're located. They're up in that area, right? They're up in that 240, 235, 230 area. All right, let's keep it going. So, you know, pullbacks, I'll look for longs on Coinbase. Let's go into some of the movers this morning. Let me move this over real quick. So what I'm going to do actually is I should move this line up. And I will make this the area for the long, okay? So if we get pullbacks, I mean, technically I would like that to hold all the way down into 222, but it's too big. It's too big.
Ambition is passion. It's enthusiasm directed towards a singular goal. When you make a
Because we could always pop back up into here and reject 235. I think that's where you want to be short. At least that's my opinion. All right. I feel like we're up here now. You can see support, support. We turned it back into support. We cleared that pivot high at 225.50. Look for that 50-day to become support. See if we can't take the long. Final answer. That's my final answer. Ooh. Ooh.
Analysts say left-wing and centrist parties are now scrambling to try to block the rival French national rally.
You could also look for a 230 rejection as well. All right, we'll leave that one alone. All right, we'll leave that one alone for right now. I'm still looking for pullback holds or a 230 rejection. Let me write that down. 225, 224 holds. Long, targeting 230, 235.
There was one time where I did say that. I was like, I had to go to the bathroom so bad. I'm like,
All right, CHWY. Let's go look at CHWY. So CHWY's been going off this morning. I want to look at Tesla too. Tesla, GLD was going this morning. Tesla. All right, so let's pull up the daily chart here. You can see we got up to the 200-day moving average. I still have a lot of lines here. You held Thursday's, you held this move up. Okay, so the level I'm going to be watching for is 198. I'm going to be watching for Friday's close. We're already back into the 200s. All right, so we're already floating up there. Come on. That's a nice pullback hold. That's a really nice move there. You really want to get off of this level, though. I'm going to be honest with you. You really want to get off of that level. Like, you're right in front of that prior resistance up there at 209, 210, 205. Alright, it's going to start getting fishy up there. It's just like being somewhere you shouldn't. There's going to be a lot of people out there to get you. Alright, so watch out for Tesla up here at that 200-day moving average. You should expect some sellers to start stepping in up there. I'm going to have to delete these levels because they're still bad. Let's see. So what you could look for here is a pullback in the 200, and I'll show you why. Pullbacks into 200, 198, 199, 200, 199. Look for longs into like 205. Could look for longs into 205, but you are getting a little overdone. I will say that. You're getting a little bit overdone. You saw that Friday, but I would just look for a pullback, guys. I would look to see if we could get a pullback. Ultimately, I would like to get a pullback down to 190. A pullback into 190 would be nice. All right. So that's what I'm going to watch. All right. Tesla 200, 199.
In a Newsweek op-ed, our next guest is warning America that an economically struggling China is trying to revert to a dangerous gambit of the past. That would be exporting overproduced goods at artificially low prices. Illinois Democratic Congressman Raja Krishnamurthy writes, "We are at a pivotal moment in which China depends on the rest of the world capitulating to its predatory practices to avoid making long overdue reforms." The congressman joins us right now. He is the ranking member on the House Select Committee on the Chinese Communist Party. And, sir, let's talk a little bit about what you laid out in your op-ed. We've seen this before from China, but you say that this is unprecedented in both the scale and the scope of what they are undertaking this time around. You want to explain?
Sure, and thank you so much for attention to this. Essentially, the Chinese economy is tanking right now, and Xi Jinping, the leader of the Chinese Communist Party,
All right.
to reinvigorate the Chinese economy, he's going to double down in an old Chinese playbook for economic reform, so to speak, which is over.
So that selling pressure got a little bit increased there on Friday. You know, we broke above this prior resistance here, up there at 190. We should expect there to be a pullback that comes in at any time. It doesn't mean that it has to, but let me do this real quick.
I think some of the numbers kind of jump out. I've heard Janet Yellen has talked about this, the Secretary of the Treasury, has talked about how all of the money that was previously being spent on infrastructure on China has been funneled into this. And the numbers kind of back that up.
207.50.
4 years ago, there was $83 billion that China spent on new lending for industry. That skyrocketed, you say, to $670 billion. And those are numbers that are coming from the Bank of China.
Yeah, these are astronomical numbers. Just take one example which we highlighted in our hearing the other day, shipbuilding.
So what I would look for, guys, is actually a pullback off of 202.
Ship that the United States builds.
Yeah, 202.
That points out two problems. One is
And look for that pullback again right there into 198.
demand requires, but secondly, the U.S.
Pullbacks into 198.
in global shipbuilding, and that impacts our national security as well. So we have to fix both of those issues.
You look at what we've allowed to happen in areas like semiconductors and even
Or if you just get a quick wick up there, which I doubt. I feel like you're going to start to pull it back very soon.
we've run into serious issues recently with
Look for pullbacks in the 198, and then maybe you can get that 205 200-day test. That's what I would be looking for on Tesla.
Mexico. They have an easy
Even though we pretty much got up in the 205 already.
Is tariffs, and that is something that both the Trump and Biden administrations have pursued. But part of it also is, working with our partners, friends, and allies to boost our own capacity for manufacturing the items at issue. So just one example are semiconductor chips. The United States used to be a leading power in manufacturing these chips, but we lost our edge in manufacturing.
Man, that's tough, man. You know, honestly, guys, I don't even think it's worth it to go long you know, unless you're looking for $4 or $5. We'll see what the volume is today. We'll see what the pre-market volume looks like, which we can do that right now if you want. And see. Okay, so 8 o'clock. It's nearly almost 9 right now. And you've had a lot more volume yesterday than you did today, which is to be expected. You know, it's 8:38. Okay, so it's not bad. Not bad. All right, so that's Tesla. I'm gonna keep an eye on Friday's high as well for a rejection. All right, keep an eye on that for a rejection point. I think that would be a better position to take, but I don't want to fight the trend. Sorry for staying on it so long. I was just looking at a few things here. All right, pullbacks in the 198 long, or 203, 204 shorts.
People on both sides of the aisle agree needs to be tackled right now.
Congressman Krishnamurthy, thank you.
Thank you.
Up next, we're going to focus on the potential economic policies.
So if you guys remember, I showed you guys Moderna last week. All right, we talked about mRNA. Moderna has a really nice little setup, and I missed it. I missed it. Oh shit, look at that.
For almost 20 years, Abacus Life has been purchasing life insurance policies from seniors. And in just seconds, you can use the free calculator at abacuspays.com to learn what your policy might be worth.
For many of my clients, selling their life insurance to Abacus was right for them and their estate plan.
Don't sell and lapse your policy without going to abacuspays.com first. There are no fees and no obligations. Get the real value from your life insurance when you need it with Abacus.
Businesses everywhere are turning to Gusto for payroll, benefits, and more. Save time. Save money. It's no wonder Gusto is G2's #1 product for small businesses. Get started for free at gusto.com.
In a world of uncertainty and disruption, how will your investments stay resilient? We've been navigating change for 125 years, always looking forward, anticipating risks, and trusted to manage over $1 trillion in assets worldwide.
Let's go pull up this hourly chart here. So semiconductors, I'm going to keep an eye on it again this week. I'm not really. We'll see if we can start to get some volume in here on NVIDIA and try and get another test. Let's actually go to. So that was Tesla, right? We said we were looking for that pullback. I don't know why this is doing this. You can just see we keep climbing higher and higher. And that's what Tesla's good for, but you want to buy the pullbacks. This is not a pullback, that's a bounce. So pullback in the double top highs, pullback in the 198. Let's go have a look at NVIDIA. Sorry guys, like, cause I'm looking at this area, right? Look at this, right? So if I show you guys, like, you guys can see this area, right? It's like 123 to 122.60. So that is what I was eyeing up, and I'm like, which one do I want to keep? Do I want to keep the 23 flat, the 123 flat, or do I want to put in the one, you know? So I'm probably going to put a square there, which you guys will see here in 1 second, to give me that level. DJT, man, what a beautiful short that would have been. Now, GameStop is all, dude, you got to be kidding me, bro. They crushed the shit out of this thing. It's already down to $22. So you guys know I was telling y'all that I was looking for the 24 short on GameStop. Never really got it. I did short it. I shorted it Friday, 250% gain. We shorted it, I think, earlier in the week, like that Thursday as well. I think Monday or so. It was back here. Yes. So Friday, Thursday, Wednesday, Tuesday. Tuesday it was. It was Tuesday. So Tuesday, I'm almost 100% certain that I got short that move down off of 24 because it got there. I took it. And I think even the end of the day, Monday or Friday, Friday up here, I've been trading GameStop. It's been really nice. It's been really nice. So what I think I might end up doing, so you guys can get the alerts, is either have a Discord or an alert system so I can just alert you guys in real time when I get into a trade and get filled. Because again, I don't, there could be still like a short little lag between this, and depending on DJT. All right. Because I want you guys to be able to get in these at the, right time. It does matter. So, Tesla, I'm going to look for, more than likely, I'm going to look for a rejection up here. All right. 203 rejections. I think you've already rejected it personally. It may try to run up there. I don't think there's any news with Tesla. But look for Friday's high as a rejection point or pullbacks in the 198 longs. All right, into the 200 day, targeting 205. We talked about Coinbase. All right, we talked about Moderna. This thing's still dropping. I'm going to be honest with you guys. I still think Moderna has some room to the downside. All right, I'm going to be honest, and I think you have room down to nearly, what is that, 110. I'm thinking you're going to get down to 110, and that 200-day moving average is going to meet you right around that area as well. It might take a little bit. So there was some news with RSV last week, and I brought this up on the watch list last week. We were talking about this. You are at the 50% retracement of this move, which is the 100-day, which is that price support. So we're gonna find out, right? But look what's here. Look where we're at today. We're already trying to pull back to Friday's low. So I would keep this 100-day moving average on watch, and maybe just to get a relief bounce, because I was trying to get a relief bounce last week, and it just wouldn't do it. All right, just wouldn't do it. You have a nice level here at 125. And just because something's oversold and sells off for a while doesn't mean it has to stop. It can continue. It can still just continue to sell off. There's a lot of people in this, and anybody that didn't take profits has a real nice shot at a possible break even or a lot smaller of a loss. And I just think you have a lot of sellers here. But I'll keep my eye on it. Again, you have a few different levels here, but I do want to keep my eye also on this one, which is like 125. So if we hold the 100-day moving average, 115. See, I don't really like it. I really don't, guys. I don't really like how it's.
Also been attacking supply with higher taxes and higher regulation. I think the top priority for the tax bill next year.
Watch that 100-day. You got that 100-day right here at 115.
Law which are expiring.
What's that 100-day moving average? So I can only show you really on the daily chart. It's right here. It's right down there. I think this move with this bear flag, that takes you down here to 110. So you can look for a bounce back on Moderna if you want. I'll let you guys know what I do. 125. 125.
And then Joe Biden is launching new economically significant regulations at about double the rate of President Obama.
125.50. 125. Close. It's just tough. You know, I kind of like this level too.
Narratives about what the let's just for a second focus on whether if Trump did win. Some people say 44 out of 50 of his former.
You know what? I'm going to keep that off. I need to go back tonight. You guys are going to see me delete all my levels. I'm going to be deleting levels today, guys. Or later on today after the stream. Yeah, we'll just keep this. I'm going to keep that 20-day moving average. I was hoping to get a bounce back down here because I thought we could have a really nice move. I want to look to try and get back to this. You can see support, resistance. Try to get back to like 125, 126. It needs volume though. It's going to need some volume. I don't think anybody's going to be watching it, but that'll be something. If you guys want to look for a move, just keep an eye on 115. All right, in the 100-day moving average. All right, let's keep it moving. You have. Let's go to. We already covered DJT, I think, right? We covered DJT. So DJT is holding up. Let's go look at CHWY.
So I think it'd be a very, very strong team should get back into the White House. What do you think happens with the Fed? And we've seen all the scuttlebutt that he wants it as an arm of the White House, and wants to be maybe wants to be on the Fed himself. Maybe he'll nominate him. He can be president of the United States and president, and Jay Powell at the same time. I can remember, you remember this, Joe, there was some discussion about firing Jay Powell, and one day out in front of the White House, I came out and said that we had had a meeting with the president, and we had discussed it, and there's no way the president's going to fire Jay Powell. The president respects the independence of the Fed. The day I did that, you might recall, the Dow went up 1,000 points, and that night the president called me up and said, hey, Kevin, we got to put you on TV every day. What do you think? Yeah, he understands the independence of the Fed. In that story in the Wall Street Journal, I talked to the president and know a lot of people that do, and none of us could figure out where that story came from all the way up to the very top. So I don't think that story was true about the president wanting to eliminate the independence of the Fed. No, and it said that there were, what was it, Andrew, remember there were like 8 people like a cabal that had formulated that or something of his advisors. You don't think they made it up? Think that was made up, Kevin? Well, one of the things that happens is that people want to seem important, and so they say that they're talking to the guy, and maybe they said hi to him on the golf course or something, but no.
So I'm just looking here real quick at
When's the last time you spoke to
the scanners here.
about a couple weeks ago. So you figure you'll be doing something. Excuse me? You figure you'll be doing something if you were to win re-election? Oh, I'm not sure. Yeah, I think again we have to see what happens, but I am of course really concerned with my country. Okay.
All right, so let's go to a daily chart here on CHWY.
Coming up the third quarter and beyond, we're going to talk markets ahead of
I did not like that tail that we put in here. Look at that tail. It just took it all back. All of it back. So
It's not a 9 to 5 proposition. It's all day and into the night.
pulled back in the 26, 25 area. Held that.
Keep us going. The places we cheer. Trust. Hang out. And check
It's already trying to go again.
choose the advanced network solutions and
just going to ruin it because that's a lower high there now too. All right, so you're starting to put in a little bit of support here. Is it going to be the week of the memes? Last week, I got to tell you guys, it was just incredible. Last week was incredible for moves, like just for trading in general. There was so much opportunity last week. There was opportunity all over the place. You just had to be. I mean, well, if I think even AMD moved pretty nicely. Okay, so it's. All right, where are we at? All right, so it's 9 a.m. Let's go here to our flexible grid. Pull this up. Oh, you know what? Let me not forget. I gotta turn this up. Just in case you guys weren't hearing me, which I'm pretty sure you were. Alright. So. I thought I moved something. So you guys can see here. This high volume break. Look at the volume we have this morning. I want you guys to pay attention to that. I want you guys to pay attention to that volume that you have here on CHWY. And if we can hold $30. And if we can hold $30 or not. That's a lot of volume. It's a lot of volume to the sell side at that. Like this pre-market volume here, you had about as much as you did Friday day. So let's go auto zoom, auto tune, auto zoom. So $30. Yeah, I'm gonna be watching. You have a gap down here. If we crack $30, then I think you have to look for the gap fill, right? And look for a pullback into Friday's open and Friday's close. All right, look for Friday's open, Friday's close. You know what this also looks like here? Tell me this does not resemble DJT. Let me show you what I'm talking about. Let's throw up a daily chart, right? Throw up the daily chart. Daily chart, pop, wick, all right? Let's go into a double screen. Let's go to daily DJT. Even Novavax shares the same, except you didn't really have this pop here. So what I was looking at is this consolidation. I thought that this consolidation right there was the same as CHWY, but it's kind of not, right? It's kind of not. I was thinking about this area, right? This pop consolidation, and then you pop higher with a wick. Oh, come on, bro. So you guys can see, I was thinking, right? Look, pop higher, consolidate, and then pop and send it right on back. Okay, it's kind of what I was looking at. So it's not exact, but it just kind of shares the resemblance there just a little bit. Nice gap and go, consolidate for like a week to 2 weeks, and then pop. You know, that's all. Okay, so that's CHWY. Looking for pullbacks to the Friday's open and Friday's close, or if this $30 can hold. Okay, watching for this $30 if it holds. All right, NVIDIA. I think we all know what's going on there. You broke. Okay, so we did break this level this morning. Does anybody know the news on NVIDIA today? Does anybody know what's going on here? You're right inside the 20-day moving average right now. Damn. All right, I was going to be watching 123, 124. So we broke down. Now we've ripped it back up. Let's see here. Let's go find out what's going on with this. Where's the news at? Let me see here. All right, so where the hell is?
To a lot of people in this. They also said that Klaus Schwab didn't step down from his position until after they had reached out originally
Come on.
to get
Have you really said anyone over 50 is gone?
Sorry, I was trying to get up the news here. NVIDIA shares were down following a muted session. I don't understand what that is. Let's go look. Let me look here and see. I know we looked up GameStop, so it's not the fake. So why did this? I hate that it wants me to do this, man. All right, so
but something that I think might get the market's attention at some point.
Yeah, it does really feel like an inflection point.
like, no, I do not want to open an account with you, Stock Twits, at all, whatsoever.
Generation of performance has really stagnated in recent weeks, and it's created this dynamic of kind of what's next for portfolio construction, and this idea of is now the time to really be truly diversifying away from some of the key winners that we've
What
seen
the
earlier
fuck?
this year, and it goes into this whole dynamic of breadth and versus the narrowness that we've seen, and is now kind of the time to really mix things up, or do you risk being left behind because the strong momentum-based winners of the first half, if you weren't in those, there was that journal piece that quoted a portfolio manager who happened to not be in NVIDIA, and he said that every day it is like getting a root canal without Novocaine. And you kind of think about this idea of taking NVIDIA off the table right here.
Although to your point, Mike, if equal weighted S&P, let's call it, annualizes at almost 9% gain, coming into the year, most people would take that. Obviously, you're going to lag, though, if you don't own NVIDIA, for example.
It's exactly how you frame it. Is it just I need to keep pace or beat this index, and therefore I can't? Or is it unnerving to, and it is to a lot of people, that the aggregate dollar amount of value being added is so lopsided toward a handful of companies, right? So it's like a third of the aggregate market gain is just NVIDIA. I mean, that doesn't seem
That
it
is,
doesn't
I mean,
feel right to me.
you should, well, it is something worth pausing on because it is stunning. I don't know if we've ever, I don't know that you have the historical references, but I can't imagine we've ever seen that.
I don't think so. Certainly not at this scale. Like there's always been the hot secular growth stock that was up a couple 100% in a year, but it usually isn't one of the biggest. So yeah, I keep saying we are in a market that the defensive, the quality, the faster growth, the most reliable earnings momentum, all that stuff is represented by the same relatively small subset of stocks, and so therefore you have all these multiple reasons to buy them. What's interesting too, Leslie, though, is that because the surface of the market has been so calm, right, very low volatility at the S&P level, it's because of this divergence underneath. And so hedge funds and many other traders are saying, we're just going to bet on that continued dispersion and low volatility. And that's a very popular trade right now. You don't have to get into the weeds of it except to say, index level, calm, under the surface you have slightly more volatility and kind of divergence among stocks. And there's a way to capitalize on that. And it seems like it's become pretty...
Follower telling me last week are turning a note tonight, both of which positive centric data points. So I will say for anybody that even listened to
Given it's July, but as we move ahead,
that anybody that listened to
a lot of people have said that kind of in those years,
Google's,
additional
or not Google, but Nvidia's
and then earnings expectations, as you mentioned, and
Nvidia's earnings, you guys will know that they said that they were going to be
3 years, just kind of given
they're pretty much full on orders.
predicting profits
So
500 firms to rise 9% in the April to
I don't see anything changing unless their earnings come out and say, yeah, some of these orders are getting ready to die or they're dying off. You start seeing sense of that, then you can start to get a little worried.
By the end of the quarter. So we'll see by the end of the week. While it is a low liquidity week, that can work in both directions. I mean, pre-holiday trading tends to actually have a little bit of an upward drift.
And finally, just in terms of historical references, Mike, you may have already mentioned this quickly, but first half versus second half and what it does typically imply when we've seen the kind of gains we have?
Something like better than 75% after you've been up big in the first half, let's call it 10 or 15%, you are up in the subsequent 6 months. And that's a little bit better than the historical average of just all years. And the actual returns, median returns, are like the high single digits or close to 10%. This is all depending on how you slice it and what time period you cover. I will say, though, the 3 months, like from here
All right.
to the quarter, are a little choppy. In other words, you've kind of made a lot of those
All right,
gains.
so let's go to a 3 minute. We got a few minutes here till the bell opens up. I'm still cautious again. That 20-day and 124, guys.
In the fall and rebounded. So something like that wouldn't be surprising, but that is the cadence that, just the
I would look for this area if you're a buyer at 123 for Nvidia. All right.
is that, I mean, you have to go back really far to find a better.
We'll see what happens here today. Again,
Finally getting that deal to
take
buy its supplier Spirit Aerosystems is
take in what goes on. There's still a lot to go over. Again, I didn't have much. I wasn't able to get through as much as I wanted to yesterday. But again, you keep rejecting this 125 to 127. It's a range. It's 125. Excuse me, to 127.50. So I would watch 125, and if you can reclaim 125, then you would look for that move back to 127.50, maybe even higher. But to just go out and think that you should front run the move, you know, that's up to you. It's not really gonna, you know, it's better to, it's hard, but it's better to pay up and know that, hey, you know, instead of buying into a possible level of resistance, if you're already in that level, which you're at 124, you got $1 to go. Like if you wanted to try a 123 long here, it's just hard because where are you going? What are you risking? What are you going to risk? 123? You're gonna risk this as your stop loss to go there or from here to there? Like it's not worth it. It really isn't. It's not even worth placing the trade. It's not going to make you anything. You might make a few cents. It's not worth risking to lose, you know, either, because you're not going to be able to make more than you lose on those type of trades. It's just my opinion. We'll see what happens today with NVIDIA. I'm not saying that I think NVIDIA is trash or garbage or it's going down or it's going up. I'm just going to watch it. This is your support level. Like, honestly, 122.50 is your support level. So, and if we get a pullback here at 122.50, then maybe we can buy. Hurry up and buy. Okay. Here's another thing. Let's keep an eye on the QQQ. Let me do this. Alright, so Tesla, pretty much everything from last week. We got some GameStop, we got some CHWY, we have Tesla, Coinbase. There's a lot. Hold on. So you have Tesla, Coinbase, or really anything crypto. CHWY. Shit. And we got these. Okay. And I may end up using the 1 minute for that. AMD. AMD has some nice support here at the 20-day at 161. This will be a nice little level of support if you can hold that. Just doesn't, AMD has not wanted to move, guys. That's the only problem with that. Doesn't really want to move here. But if you can get AMD to hold that 20-day moving average, that would be a really nice. You could get a nice little long back up off of 161 to 165. I mean, again, that's up to you to take something like that. Your support level is really at 160, but 160 puts you back underneath the 20-day. And I would just look for bounces off the 20-day back into 166, which would be Friday's high. Let's see. We talked about NVIDIA, Carvana. So you can see this huge like wedge that it's been putting in. Right? There's a wedge. It's just like, it's a little backwards though. I think if you see Carvana get above 129.86, you gotta look for a bounce into like 135. Hold up, let me move this.
To help you do anything from adding a new debit card, learning how to save smarter, even creating spending limits. With co-browse, we're always there for you on the road to here. Because there's nothing as powerful.
I'm not really sure what I'm gonna trade today, man. The more I look around, I'm just like, ugh. Doesn't look that great. CrowdStrike never got going either. I mean, it did, but it didn't. He popped in the 370 and then like that was it. Just been sitting here. CrowdStrike could be a nice little trade here. Come on, bro. Alright, so that's crowd. Let's go look at ARM. ARM's been trading pretty nicely too here. I don't know why this keeps doing that. Let's just say if we get a pullback here, there's two ways I would play ARM, right? We look for the support level. You've held it twice. Well, I guess you could say 3 times. This is also kind of like Carvana where it's putting in that backwards wedge. Could look for this to see you're underneath Friday's lows now. Let's see here. 64. So this is support, and you're back above it. Let me see here real quick. Give me 1 second. I just want to make sure that I'm reading everything correctly here. That sucks that GameStop is already doing what it's doing. Like, it already sold off pretty massively. I should have just gotten into that and made that a swing trade and just gave myself time. So again, that's why that's what's going to be in my, that's going to be on my watch list. Excuse me, I'm sorry. That's going to be my word of the week. You know, is to give myself more time or whatever it is I need to do. A blockbuster day at the Supreme Court. This is so ridiculous. Okay. Prior resistance, support. So ARM, you could see 162 area here. Hold as support, 162.50. And look for moves back to 167.50. Low volume type of bounce. I think I need to just do that, and I probably will here around lunchtime or so. is that I'm going to go ahead and delete a lot of this shit because there's just so much that doesn't need to be on here. That was a low volume pullback on Friday. We have 10 minutes, guys and girls. Not that we have anybody here. All right, let's do this. 16. It is ridiculous because the president kind of can't. It is ridiculous. It's even just ridiculous that all right, so CHWY, keep your eye on CHWY, GameStop, and CHWY, GameStop. I forgot about Google and Amazon too. We were watching them. There's so many. It's all good. Today it's Monday. We'll see where we are. Let's look for a pop. ARM might be a nice little play. I think I might end up looking at ARM today. All right, we only have a few minutes here, guys. We have 10 minutes. There should be, and there is presidential immunity, depending on what was said crime. Right? There's a difference. He didn't do anything illegal. Contracts, to be quiet, to not what you would call to not, I forget what the word is. I can't think of it right now. But like when you try to talk bad about another company or another person, whether it's related to the company or something that they're trying to do, it happens all the time. Defamation, right? You're signing and taking an agreement that you won't speak your opinion. Just like the court can tell Trump not to speak his opinion on some of the judges and people in the case. It's actually legal and happens all the time. So, all right, let's go. Okay, remember, keep an eye out for Bitcoin and all these other things that are going on. I didn't go through some of the news. I'm sorry. You know, I was a little tired with some of the stuff I was doing this morning and the storms from yesterday.
10
a.m. Remember, we have all this. We have this data here at 10 a.m. So if it looks like you're getting ready to get sucked into a move, please understand that you have data that's about to come out. Oh my God, to resume amid legal challenges. That's so ridiculous. It's so sick. The reason I do not trust him or guys like him is because they use that student debt shit to try and get people to vote for them. And they do some shit behind their backs that's not okay. I do not trust them. Because they want to lock in their votes. And they have an agenda. And they have stuff that's kind of, that's in my opinion, that's not okay. It's not okay. I mean, look at all the wars. And they want to go after, they want to demonize anybody that makes any type of money. The man does not like the stock market. He doesn't. Which is absolutely crazy, because if it wasn't for the market, half the people in this world would not have the opportunities that they had to own a home, to have a wedding, to go on vacations, to have a retirement, to go somewhere, to have a place to go to raise money for a business. You know, I don't like that he's so worried about paying taxes. I mean, guys, they are really going after and going to try to tax unrealized gains. Taxing you on a $600 transfer, anything over $600. The IRS should not be in your face. It's none of their business what you do with your money. Right? If you buy a vehicle, okay, it's different. If you buy a house, okay, it's different. The IRS does not need to know that you send somebody $600, $700, $1,000, $2,000. Like people that have retirements and they're going to try to tax unrealized gains, and they do things like student loan forgiveness to like throw these few shiny things at younger generations to try to lock them in, and they turn around and get screwed. And they don't even know it. It's fucking sick. The chip maker shed more than 1% pre-market. We're getting ready to open up as the second half of 2024 kicked off. So there's no real news there. I talked about Verizon last week. We know about Boeing. We know about CHWY. So we're pretty much on the right side. If you want to know why SoFi is hurting, it's because of that right there at the top of the screen. Biden's student loan repayment. These are things you do when employment's low. Like, it's just fucking ridiculous. Worry about childcare. What about worried about people also that don't have kids who are responsible? Because those people that didn't have kids because they couldn't afford life or wanted a home and are single, what about them? But no, let's not let me not get into it. It's kind of racial discrimination, isn't it? Not racial, but alright, so I'm going to keep semiconductors on my list. Not really AMD. I'll watch it. Right, AMD has to break that 20-day to get down to its support level, which is like down here at 160. So if you get a break of that 20-day, you could look for another rejection point, or you get a hold here, or you hold that 20-day. These are two big tails there on AMD. We have 1 minute. I'm going to be watching Tesla, CHWY, ARM. I'm going to watch NVIDIA. So like we said, looking for that bounce back there. $125. If you're looking for upside, You want to see NVIDIA break through 125, then you got to watch out for 126. It's a mild level where sellers been stepping up at. But 127, 127.50 would be your resistance level. Let's see what happens today. Good luck this week. Take your time. Remember to go through and look at your at what sectors are leading and what sectors are lagging. Let me pull up Tesla here. Is it already pulling back? It is not. I may have to wait for that pullback. I was wanting to try to get a 198 long. Looks like you might be able to get the short there right off the bell. I haven't done any analysis, but let's see if it pops there on Tesla. Starting off really slow. Okay, GameStop, huge pop. If we get a run back into 24, damn, look at that pre-market volume on GameStop. Okay, 23.50. 23.50. I still like 24. So again, for anybody that wasn't aware, those puts we talked about Friday, I ended up getting in those by accident, 28 cents to 70 cents. It was a 250% trade. All right. There goes NVIDIA. I'm going to give it till about 10 o'clock, guys. You have ISM manufacturing, remember. So if it looks like it's trying to suck you inside a long or a short, be careful. We have data that comes out here shortly at 10 o'clock. Sorry. All right. And there goes the SPY. It's at the low side of the range. You should expect this. Wow, the Dow's killing it. So it looks like it's going to be one of those days where the IWM and the Dow leads. Some of the banks were raising quarterly dividends. Like JP Morgan. Look at JP Morgan go. JP Morgan's ripping back to all-time highs up there at 205, 206, 205 in front of earnings. I still think they'll have good earnings, so I wish you could look for a pullback. If you get a pullback into 202 on JP Morgan, that's the only way I would do it. Is if you get a pullback into 202. So banks are doing pretty well. There's Tesla rejecting up there at 204. There goes NVIDIA. There goes NVIDIA. I told you guys it's underneath the 20-day. Look for pullbacks into 120. Let's do it. Let's get on it. Let's go. Let's go. I feel sorry for anybody that is not here right this minute. Man, Tesla's just a monster, bro. All right. That also is an area of support, but I think we get a rejection. Yeah. Yeah, I gotta fix a lot of things here. I gotta fix a lot of things. All right, so that 20-day and 90 MA is getting yanked. Oh my gosh, come on, bro.
made these commitments.
Fuck.
Free commitments.
It is true. I mean, on a linear level, that's the obvious reason, and the market is going to have to kind of create this huge premium in these stocks to make it seem like a great investment, so that we can build the capacity, and maybe so it becomes a bubble that ultimately busts. Because that's what happens.
I'm just trying to get the volume straight, guys.
Have enough.
That's all. I'm trying to see what we have.
5 years ago, and then those companies didn't do well, but the system did great. I also do wonder. I mean, you hear Jensen Huang at NVIDIA talk about how much more efficient each iteration is going to be, and all these other companies. I mean, you can solve for it two different ways: more power.
All right. Anybody that took that, nice job. I'm still watching 123. If we can get a 123. That's a nice wick. Nice John Wick.
More and more of them in the data center, which ultimately overwhelms the idea of more efficiency in a sense, because you're just doing even more computing.
At least at this phase, when all we're doing is just throwing, money and capacity. Raymond James, I think raising his price target on Meta today. Part of it is they said we're the street high for next year's capex number for Meta, $50 billion, and that's the bullish case, right? Is they're going to invest even more and faster in these kind of AI capacities and kind of have this internalized AI system, and that shows you the thinking.
And look, there it goes. They just hopped on that bounce. Wow. This thing's really weak, guys. This thing is really weak. So is ARM. Fuck. Tesla's just screaming. Screaming. All right, you would look for pullbacks into 203 on Tesla. I'm trying to get a bounce back, guys, on NVIDIA. I'm trying to see if we can catch a bounce back. I'm not sure if it's going to be doable because it's so weak. Oh yeah, CHWY and GameStop. GME went up to 23.75, right in front of 24. Why is that not there? Where is my... Yeah, why is that not there? Okay, that's why it's not there, because...
For one guy, of course, we know him from GameStop, and we know that in this most recent go-around in GameStop, he clearly came out well. CHWY was founded by Ryan Cohen, who runs GameStop, but Cohen...
So this is a support level you got to watch out for, 22.75. 22.75. And you have a small support level just right there at 22. Okay, so Tesla ripped through Friday's high, going to the 200-day moving average. Wow, just insane. Look at that volume. Just insane. NVIDIA is bouncing back. NVIDIA is bouncing back. That's kind of what I'm looking for is NVIDIA. Because it did not hold 123, 122.50. And I want to see if I can take this back down into 120, 118 really. DJT is getting sold. Okay, so DJT's pulling back. That volume looks low, and it's at the 200-day moving average. So keep an eye on DJT. Come on. Alright, so NVIDIA to the downside here. Not sure if anybody took that entry or not. That popped right back into 122. 122 is a clear level. Clear level. Let's see. Do you get a double bottom down here? I think you're going to sell it off. So what are we? 1.9. Okay, let's see if we can break through low a day here. Let's see if we can break through low a day. Again, I would like to try and take NVIDIA down to the low 120s. I'd like to try and take it down to the low 120s. I'll let you guys know if I get this entry. I'm just can't do nothing. My cat's just, and here it goes. She's holding up nicely here. Let's see if we can catch a bounce. I would rather catch a bounce than to be short at low a day and it pop. I would rather get a nice opportunity up there. It doesn't have to give it to us, but right here, right around there is where I would like to enter this position if I could get it. If we can get it. Just don't think we're going to. I think you're going to break the low right now. Let's see here. The SPY is still holding on. SPY is still holding the 545. Well, there's your extension for anybody that was watching NVIDIA that had the opportunity to get short right there down into the low 120s. Again, my cat is just really frustrating me right now. She's just... I just can't sit here and just open the window for her and do this and do that and do this and do that, man. I'm just going to lock her out. But it's all good. So, again, it didn't really give us an opportunity down there at another pop into 123. It's whatever. I'm not worried about it, but it is getting me frustrated. CHWY. Let's go look. CHWY. Let's see here. Pop. So we did break one. So you broke $30. Look to see what happens here. If you start to hold 28, which it looks like it's trying to, you're bringing some buyers in front of 28.50. 50. I only say that to look for the pop into 30 for the rejection. If you can get that. Tesla, is it trying to turn around yet? No, it is not at all. God damn, look at that volume, guys. That is, you guys hear that word, supply and demand? It's not support and resistance. They ain't the same. That is demand. That is demand. A demand to own this fucking name. Wow. Beautiful run. Let's see, where are you headed? I suppose. Damn, 218, really? You have the gap fill coming up here, so you are coming up into the gap, but you're there now. You hit the gap, it's still going. Guys, I don't know. I don't know where Tesla's gonna go. I mean, honestly, 220. 220.
And this is a man who knows how to party. I mean, look at him.
Well, you know the old saying, the clocks have no hands. That was a...
220. Good morning, Bingo. It's good to see you, buddy. I was like in that talk you talked last Friday. He said, I want to be no I forget what you said, but it was just funny. Oh man. Okay, so again, we talked about how if Tesla was going to break out of that range, you would look for the continuation for about 2 weeks. And we have ISM manufacturing, ISM data, getting ready to come out here in about 15 minutes. NVDA, so NVIDIA is back down to 120, so that trade has happened. Damn, so that would have been a nice 25% on those 120 puts when I was looking at them at 200 bucks or $2 a piece. They went to 245, 250. That would have been a nice little trade there to start the day out. I haven't looked at regionals, but like Goldman Sachs is looking nice right now. It's got some nice volume. JP Morgan, they're raising dividends. You know, last Monday you saw this same rotation into this type of name. Damn, 265, 270. NVIDIA's dropping even more. You gotta be kidding me. 265. I think 265 can be done. So you could look for, if you want to look at a name like Goldman Sachs, look for a move back into 265. Yeah, that would have been the entry point at 257.50. Yeah, 257.50 would be an entry point to try to take a long back up to 464. But I don't know. It's not really that much. I liked it last week a lot better. Last week was a lot better of a opportunity. So, and it's a bit overdone right now too. I cannot believe NVIDIA. Jesus fucking Christ. I'm such an idiot. I am such an idiot. I should have just taken it, and I should have just kept my cat locked out of my room. My office, whatever you want to call it. You gotta be shitting me, bro. You gotta be shitting me. You gotta be shitting me. Did anybody take that? Anyone? You're up 50%. Over 50%. Unfucking believable. I'm not doing this shit this week, y'all. I'm gonna tell you all that right now. I am not doing this. I'm not doing it. I am not doing it. I still want to look for a 122, but I doubt it's going to happen.
What's this? Yeah, no, thank you.
I ran the numbers on Quicken. It's telling me in my budget.
Come on, man. Just fucking sit. Look at Boeing. Are you kidding me, bro? Are you kidding me?
So it's easier to say.
Look at those down names and banks. They're really leading today, right out the gates.
Hey, Megan.
Hey, Leslie. So the Biden campaign spent the weekend in damage control mode, and some of its biggest donors were reevaluating the best path forward after that debate performance last week that alarmed some supporters. The campaign says it raised $33 million from Thursday through Saturday, with about $26 million coming from grassroots donors. Officials said Thursday and Friday were their two best days ever for grassroots fundraising, which they say shows that the voters are still with them. But Biden also needs the wealthy donors. He had 3 big fundraisers this weekend, and I spoke with attendees who told me they were reassured by how the president seemed at those events. He was strong and healthy. One described the mood in the Hamptons as concerned enthusiasm. Another said people at the New York event were resolved to do more to help Biden win after Thursday, with one donor giving an extra $500,000 on the spot. A third source said the debate was a, quote, cold shower shock for Democrats, and many are now more engaged because they're more worried about losing than they were before. But even still, some of Biden's biggest donors recognize the challenge ahead. Reid Hoffman of LinkedIn sent a long email Friday on why replacing Biden would be a bad idea. And his donor advisor, Dimitri Melhorn, told us the debate makes it more difficult to convince some donors to contribute.
So if there is a donor who was hesitant because they weren't sure Biden was going to win, those donors are definitely not opening their wallets this week. It makes that work harder, but the work continues.
Upshot, guys, is that there's a lot of frustration with the candidate that the Democrats have, but replacing him is seen as risky, and donors, for now, are standing with the party. David?
Megan, thank you. And Mike, thank you as well, of course, for joining this hour. Any parting thoughts for us?
No, we're wavering as I thought as we watch the bond market. So this is the game we're playing so far in July.
Mike Santoli. All right. You can catch him all day long, everywhere. The Supreme Court expected to announce its decision on former President Trump's claim of absolute immunity. We will have that for you in the next hour.
I don't know what to do, but I gotta get my cat out of this fucking 9:30. Just wanting to be fed when she has food and bugging me. I gotta get it changed. I gotta get her out of this regiment. I fucking lock her out of the door. She just fucking scratches and scratches and scratches at it. And I mean, it's not like she scratches it up, but her claws, like, look, like right now. Like right fucking now. This was an easy trade down to 220, guys. Or 120, I'm sorry. So I told you guys, look for NVIDIA's short to 120. It was just really weak. Really weak. Now the question is, do you take the long? Is this the range? You still got to watch out for 122, 123. Keep your eye out for that area. You have a little area right here, 121 you could use to reject. You also have to be careful that that volume on the bounce back is also pretty high too. It's not as high as the sell volume was, but it's fairly close. So that was just, it was just an easy trade. $2 a contract. It got you to 3. That was a 50% trade in just a few minutes. From, you know, 122, you know, up here, 122 down here. It's a 50% trade, and you're done. You're done for the day. I mean, 10 grand. You're up. You're up. I don't know, 5 grand before taxes. $1,000. You made $500 on the day. So, you know, 5 contracts would have got you about $500. Yeah, it would have got you a little bit over, but still, it's neither here nor there. So, like I said, guys, I use stuff. I look at stuff in I use percentages, like at least for what I need. I use my stop loss as an amount, as a specific amount, and percentages for my gains. Think about selling those puts down there. You're already up 50% just off of that bounce. Over 50%. If you would have sold puts down here, if you would have sold the 120 puts that were like 3 something, you could be taking that off. You know, trading really isn't that hard. You just have to. It's hard if you're new. It's hard if you don't. I mean, I wouldn't say that because, you know, you can give somebody some capital, even if they know how to use it, they still may screw themselves up with the emotional factor here, where they start thinking of every little thing that can go wrong. Listen, I still do it. I still do it from time to time. Like, I don't trust to get short this. Could I scalp this? Yeah, probably. Could I look for this pop into there and look for a pullback? All right, getting short that pop and look for a pullback into like 119.50? Maybe. You know, but that's not, it's not what I'm looking for. It's not what I'm looking for. I think we could get a nice opening range here and get a pop. Okay, so ISM has came out. I know I don't have hardly anything up right now. 48. I figured it was going to be down. They were expecting 49 to 50, but if you would have saw and if you read the data with us, you would have already known. Where we at? Where we at here? 2 likes? God damn, I ain't gonna be doing this much longer. Hopefully you guys. Let's see here. What's this ATR here? When is this? Friday, Thursday. All right, so watch this. You could get a little consolidation, guys, right here. You got a couple areas I would watch for. 121 and a minor level there, 122. Keep an eye on these levels here. Get another pullback, maybe back down to low a day. It's a possibility. You get a pullback down into low a day, or you just run back up to test high a day. I'm not sure. I don't know. Keep an eye on the Qs, see what they want to do. Maybe we get a pullback, it holds 478, and then you look for the run up. Could be an option there. Oh shit, I did not look at the base. I did not look at the base, the coin base. Alright, let's go look at this hourly chart. What are you doing, Beanie? I'm a baby. I know, I'm your baby, but she's such a punk.
For NVIDIA, then next quarter, 50% earnings growth, 30%, 17.5. You see that? That is decelerating earnings growth. Earnings are still growing. That's the thing to understand, but they're just not going up as fast as before, and that's a red flag to fundamental investors that are out there.
All right, you're getting some buying here. You're getting some buying opportunity. So it's 10. That's got to be the fastest half hour of my life. It's got to be. That's got to be the fastest half hour of my life. Unbelievable. Unfucking believable, bro. Unbelievable.
I would contend that the anomaly here is the S&P up 14% because of technology dragging everything up. The average gain in the S&P 500 on a yearly basis.
So semis are just pulling back.
So we're seeing a very normal the S&P 500. It's the tech side.
Could look for a Tesla long. You know, you just got to be careful because it could just go sideways and blow up in your face. It really could. I will say, that's some serious volume. That's some serious volume. That's a mean level right there. I didn't even notice that. If you follow this from here, pulls back, bounce, starts, that's when it starts making headway, boom. It just hung out, you just hung out right there at 195. 1-2 days, bang. That's crazy. I don't know where your resistance is at from here, guys. I really don't. I really don't. I mean, if I had to be honest, you pretty much have room to 220. You've already filled the gap, and you're above the gap. So you're above the gap. What I would do is say, all right, I'm above the gap, so I would use the gap as an entry point. I done filled that bitch. Now, it doesn't want to give me the level thing. Alright, so so 207.95, call it 208. And then you would look for come on, bro. So you have a double bottom. I hate this laser mouse. Look for 212. Look for 212. See if you can get a run up there. 210, 212. There's no fucking way, bro. There's no fucking way. You gotta be kidding me. I'm not paying $5 a contract for a 210 call. 9, 10, 11, 12. I'm paying $1 more than where I think it's going to go. I think you have a nice shot to 212. And once you get to 212, you still paid $1 too much, but you do have some time on your hands. So good luck to you. That might not be the best thing to do. You already got to be in this move to get paid. I'm just going to be honest with you guys. Now, unless you want to go to 220 and go out a few weeks, that's up to you. You could do that. I think you could do that. We can look. I think we're going to be paying a lot of money, though. That's the thing. I'd rather be in it equally and get this continuation trade that's happening right now. 220, 385, $3 to 220. We're only at 208. Where the hell do they think we're going? How far do you think we're going to move? That's crazy. That's insane.
Great to see you. Thanks so much for joining us. So just break down your base case first of all. It's for some kind of correction. To what extent? 10% or so in the S&P, and how soon?
All right. So let's see here.
The S&P through the end of the third quarter. It's many of the things that Bob Pisani outlined, and he does a great job on that. The deceleration of the earnings growth, the very high PE ratio, the stickiness.
Let's go back and look at NVIDIA. And look, so there you go. You are getting that pullback off of there.
It does put the Fed in a bind, and stocks are expensive versus financial conditions.
I still couldn't do it because it's $2. We had a chance to grab these at $2. Let's go look at what the ATR is. I don't know why it's not saving. It's just going to be a miserable day for me. I can already tell, guys. I can already tell. It happens. It's just real life over here. Alright, so you have 123, we'll say, and you got down to 118.50, 19, 20, 21, 22, 23, 50, $5 there. 23.50, 120. You've moved 3.50, so you have $1. You have about $2 left. Damn, that fucking blows, bro. I'm telling y'all right now, that fucking blows. Fucking Coinbase is selling back off. Coinbase is selling back off there. Dude, how did the 100-day moving average get so far down? That's insane. That's ridiculous. So look, you did it. You got that pop into where? 235. Told y'all. Oh, you did it. Yeah, you did it right off the bell, and now you're shitting the bed. All right. You have support at the 100-day. These moves are already over. You got to be kidding me, bro. These moves are already done. Well, this stream is about to be over, guys. Have a good rest of your day. I need to get this fucking girl off of this fucking 930 shit, man. She's really fucking dicking me, bro.
July, August timeframe. But we're looking for a little bit more on the S&P pullback.
Barry Bannister, great to see you as always. Thanks so much.
Good to see you.
A reminder, by the way, tomorrow morning, Sarah Eisen will be live from Sintra, Portugal, alongside ECB President Christine Lagarde.
Watch this 50-day up here, guys. Here we go. Gotta save the damn.
I mean, at this point, we're at the beginning of the AI journey, so I think it's there are going to be some casualties. Right now, I think you've seen the big get bigger. As we've said in AI, you need capital, users, and the data, and those are benefiting companies like Google.
Okay, so NVIDIA has reclaimed VWAP. I need to get... So here we go. Alright, I'm going to try for the short again here, but be careful because this could be dangerous up here. Let me... Come on, bro. Jesus goodness.
Yeah, there's a lot of smart money focused on this idea of the winners and ultimate companies being disrupted by this technology. Thank you.
I cannot believe what just took place this morning. I shouldn't have to lock my cat out of this room. So I feel like NVIDIA is going to be stuck. Like, you had to be involved in these. And if you weren't, you're done. You're done. It's just not, it's not happening. Okay, so there's your 9 EMA. Let me look. That's so weird. It really is so weird that this is the just this chart here. It's
Is this your dream of retirement? How about this week deal? I like fishing. Or is this a little...
I like fishing.
Retiring well isn't a guarantee, it's a goal. It's easy when markets are going up. But what about when they're not? That's why you need this.
Call for Fisher's Retirement Survival Kit, featuring your guide to surviving market volatility, our stock market outlook, plus the Fisher investment difference. 3 indispensable guides, yours free for all. 1-800-213-5317.
Fisher Investments' disciplined approach will help see you through the market's ups and downs and give you the confidence you need to reach a comfortable retirement. And our fees are structured so we do better when our clients do better.
Call now for your free retirement survival kit. 1-800-213-5317.
See if your dream retirement is on track. If your retirement portfolio is $500,000 or more, give us a call.
Call 1-800-213-5317.
Litter Robot has now solved the litter box problem for over 1 million pet parents around the world. Hi, I'm Brad Baxter, founder of Whisker and Litter Robot. 25 years ago, I inherited 2 cats and an overflowing litter box. I have a background in engineering, so I was thinking of ways I could automate the litter box process. The result was Litter Robot, a fully automatic, self-cleaning litter box. You'll never scoop again, and your cat will always have a clean bed of litter. Join the Whisker family and try Litter Robot today.
At Avocado, how you sleep matters. Whether you crave indulgent luxury and naturally cool night's sleep, ergonomic back support, or all of the above, sleep is never a one-size-fits-all at Avocado. And because your health and our planet is what matters most to us, Avocado's certified organic mattresses are made with natural and renewable materials. Discover why Avocado is one of the highest-rated mattresses in America. Visit our stores or your local retailer or shop online at avocadomattress.com.
I'm in, baby. Shark Tank. Tonight, starting 8 Eastern, CNBC.
Overtime is about understanding what just happened in the markets that day and preparing for tomorrow. I'm looking to talk to all investors, sophisticated investors, beginning investors. I'm always learning.
Closing bell overtime, 4 Eastern, CNBC.
The 6 largest U.S. banks reacting positively to the capital return plans announced Friday after the close. Just to summarize things, Wells Fargo had the largest dividend increase, up 14%, while JP Morgan had the biggest overall change when coupled with its prior first quarter hike. That was up 19%. They unveiled these dividend plans on Friday after the whole industry really showed.
All right, let's see here. So the S&Ps were still consolidating. You had to be on those moves. Like I mentioned, that's what it kind of felt like. Not to say that we couldn't, extend higher or whatever. I just don't think that's going to happen. I think we're going to be stuck. So that's where my frustration was this morning. Was NVIDIA was just a prime candidate for a move, and it just sucks. It is what it is. It is what it is. See, I don't even like the rejection at 122.50 either, or off of Friday's double bottom. You could get this thing back down to 118, but
Supreme Court writing that under our constitutional structure of separated powers, the nature of presidential power entitles a former president to absolute immunity from criminal prosecution for actions within his conclusive and preclusive constitutional authority, and he is entitled to at least presumptive immunity from prosecution for all official acts. There is no immunity for all official acts. So,
yeah, David, to be a win for former President Trump in the Supreme Court. The Supreme Court writing that under our constitutional structure of separated powers, the nature of presidential power entitles a former president to absolute immunity from criminal prosecution for action
for doing something for a campaign.
Inclusive and preclusive constitutional authority, and he is entitled to at least presumptive immunity from prosecution for all official acts.
For all official acts.
Unofficial acts. So that is largely what Donald Trump has been arguing, which is that for official acts, a former president needs legal immunity. For example, if a president were to order an airstrike in a military context that accidentally killed an American, that former president would not then be liable in the courts for that decision. Now, this seems to be an indication that the court on a 6-3 majority has sided with the former president, Donald Trump. But it is a long decision, guys, and we're going to go through it here to see what the carve-outs are, what the caveats are here, and what the implications are now for this court case involving the former president, which has been on hold since March 4th, whether or not that will be able to proceed under this decision. Guys, back over to you.
Eamon, just remind us how it's split down there. 6-3?
6-3, yep. So this is, you know, there were a lot of observers who said that the court, if it wanted to have credibility with the country, ought to be unanimous on this one. This is not a unanimous decision. So there will be some skeptics who say this is a partisan decision coming down on a 6-3 conservative majority. But again, that's just the top line here. We'll need to read the rest of this decision, which is a lengthy one, in order to figure out what the tests are, what the carve-outs are, and what the implications are.
Yeah, we'll let you do that. I mean, I would assume, are we going to get some definition of official acts versus what is considered an unofficial act, I guess, Eamon?
We may. David, there's 119 pages here, so this is a long decision.
Yes, I mean, it's common sense what an unofficial act would be. Beating the shit out of your wife for nothing. Drinking and driving behind the wheel and killing an innocent family. That's the type of shit that you get in trouble for. Not saying, okay, she's trying to defamate my name, I'm in a presidency run, she's asking for money to not say anything, give her the money, and if she does go out and try to slander my name, we can, in fact, sue her for defamation. That's what this is all about. So anybody that wants to talk felonies and convictions, like, listen, you just sound real dumb. You sound real dumb. Like you have no brains, and your emotional feelings towards another human is showing when you say that. Because if you're willing to vote and criticize him but support a person who demonizes success and demonizes you for making a good life for not only you and yourself but for others around you, that you get demonized because of the sector in which you work, come on now. Don't listen again. Don't be fooled. That man is not union. Delaware is not a union state. You want to talk about union states? Go to New York and New Jersey. Those are union states. Those are places. Those are states where you go to, and the majority of the physical jobs, whether it's just anything to do, let's just talk construction. It is unionized. Gas lines, not just a union electrician. Right? Iron workers, roofers, all union. Any labored skill, you're union. Not here in Delaware. You have union electricians, you have a couple unions, and that's it. But that's because you need it by law. That's the only reason why. So don't believe in the horse shit. I'm just telling y'all, he's not a union guy. He says he is. He says he is. He's just out to take taxes and take from people that make a lot of money. That's it. And he just covers it up with, they make all this money and this person pays this much in taxes. Okay. Guess what? The person that pays that much in taxes, along with the other corporation, has an opportunity and a choice in life to not do that and go to that route. Like it just demonizes it. It's just not telling the full story. It's also not telling the full story. Because the company does pay those same taxes. Because those same employees that are working at that fund, at that hedge fund, at that investment bank, those people are getting taxed. Like, there's just not clarity.
And now how the Supreme Court came down on that.
Yeah, we're not going to let you get to pages 16 to 32 quite yet, which seem to be where they're directing us in terms of offering guidance on that very distinction between official and unofficial.
Because I just don't think there's a short here because of maybe I will. I'm still unsure. Let's see, because we had. We can try it. We can see if we can get back down to low a day. What do you guys think? What do you guys think? You guys want to try to wait until you get up to 124 or 123.50? What are your guys' thoughts? Think NVIDIA gets back up to 126? 125? But that exempt of defamation, having a woman that's defamating his name say, will pay me X amount of dollars and I won't say anything. Okay, here you go. Sign this. And if you do, we're gonna sue you for it. It happens every day. It happens between businesses. Like this, it's not illegal. It's not illegal. It happens between businesses all the time. But again, something like getting behind the wheel, blatantly shit-faced, and you kill a family, that's not going to help you. Right? That's not going to help you. You're going to get in trouble for it. You deliberately did something you know you shouldn't have done. That had nothing to do with work. So... This isn't even a big deal. Look at CNBC. Look at them. Just soaking it all up. It's not even that big of a deal.
You know, it's quite a bit of reading ahead here, Peter, for any number of people. But what is your take on what you've heard thus far in terms of the decision?
Well, I agree with Eamon, and I'm likewise going through and reading this. I think from a high-level perspective, it's highly unlikely that we're going...
Let's see if we can get a rejection up here, guys. I'm going to try for it. I'm going to try for it. Oh, my God. I'm going to miss it. I'm going to fucking miss it. I'm going to fucking miss it. I know it. I got to fix my charts. I'm going to miss it. It's happening right now. It's happening right now. And I'm going to miss it. Like the fucking retard I am. Oh my God, bro. You guys saw me this morning, right? You guys saw me save these charts like 80 different fucking times. You did, right? I know you guys did. It's all good. Alright, so NVIDIA 120. Wait, no. I want the 120s. That is far away. God damn it. So the 120 puts, they are, I don't like how far away they are. Just hang on. That was some low volume right there. Let's see if we can get a pop. Yeah, watch out, guys. Don't get fooled. Don't get fooled just yet. We won't get fooled again. If you don't know who that was, you don't know classic rock. And I don't really care for them. I think it was U2. Yep, look at that reversal. Look at that reversal at low volume. I should enter the short right now. But I'm not because I'm a little pussy. Let's see. 1040. It's about 1040. Let's go to the Qs. Okay, so the SPY also rejected just a bit. I'm kind of curious what these goofballs are saying. If they're saying, like, oh no. Oh, we got to put on MSNBC. Yes, MSNBC. Oh, I got to hear these people cry and somber. But it's not fair. But we were so emotionally invested in another human being, but we tell other people not to hate each other, but we hate Trump. But you can't hate people. You need to be nice. That's racial discrimination. Oh, it's because of my color. He couldn't get a loan because he wasn't colored, or he was colored. Like, come on, bro. Nope, it's probably because you credit up. Let's just be real. Sure, sometimes, you know, the streets be, sometimes the streets take, shake the banks out of them. Okay, look, guys, I think, man. Okay, so the SPY. So the SPY is at support here. I am really hesitant. Yes, this is a big area of support. So what I'm going to do is I'm going to wait for the SPY and see if we can break 543. I just think trying to short here is asking for trouble. I do. I think this is kind of asking for trouble. And I'm not talking about shorting the SPY, but I'm talking about NVIDIA. So 543 is a level that is a major level of support for the S&Ps.
Lisa. So, Katie, in this decision, the Supreme Court is granting some, at least giving some guidance about not only these buckets, but specific allegations. And one of the things they're holding is that Trump is absolutely immune. This is not remanded for fact findings by Judge Chutkan. With respect to discussions he had with the Department of Justice, you'll remember shortly before the 6th, he was involved in conversations with an attorney named Jeffrey Bossert Clark, who was then serving as, I believe, the acting.
All right, I can't even do it. CNBC.
All right. Prosecution for the alleged conduct involving his discussions with Justice Department officials. So that's a pretty powerful ruling here from the Supreme Court.
It's not a powerful ruling, bro. You should not be surprised. It's not powerful. It's not anything because it's not even that big of a deal. You shouldn't even be convicted on that shit anyway. All right, let's watch the vid here and see if we can try to get a rejection. But I don't know, man. I don't know. You know, I don't even know if that guy over there knows what he just said, or even if he knows his own name. Well, you know, I don't have a voice and I can't talk like other people or sound like other people, but you get the accent, you know. Well, you see my swing. You think he could do that? I think not.
We're gonna get there, David. We gotta go through this point by point, right? We're on live national television reading a very complicated ruling. I want to make sure that we understand this before.
Listen to this. Like this is the media. Like seriously, do you guys find anything confusing about this or
questions? Any clarity on that further in the document, Eamon?
Well, we're going to get there, David. we got to go through this point by point, right? We're on live national television reading a very complicated ruling.
You guys think that that's complicated at all? It doesn't sound too complicated, does it? It's not complicated, is it? You guys can understand the difference, right? A legal document that was paid by somebody else with the campaign funds. This is a fucking mistake, right? And it was for business. He's not out killing families, drinking and driving. That would be separate. It's not confusing, is it? And it's not complicated or confusing. It's pretty easy to understand. It's pretty easy to understand. This is why the media doesn't get any respect.
Just having immunity. Again, the question is going to be whether even if not charged, whether or not the content of those communications and discussions can be offered into evidence.
There is no questions. So they're just, there's nothing to even talk about. I'm just being honest. There's not even anything to talk about. Everyone knew he was going to be granted this, that, and the third. He gets elected. He'll be able to do his job. That's it. See, this guy is stupid. He is so fucking stupid, or he is purposefully saying things that he knows is false. Listen to this.
And I would expect, extensive litigation about these questions of whether or not these were official acts versus
personal. Official acts are personal. Bro, it is a defamation case while he was running for trial to not say things and to defamate my name on some things that we did and the things that I said in the past. Because I'm running for president. Well, it's pretty clear that that ain't personal. Fucking retards, man. This is why CNBC MSNBC, and you fought like just none of them can get any type of respect. Let's just tell it like it is. You know, it's not that big of a deal. We figured this would happen. You know, there was a case with paying someone off so he could not have his name or actions defamated and brought up. She asked for money. They paid it. It was a legal document, a legal agreement. And, you know, it wasn't personal. It was literally a court case for this entire thing. For running for president. I wonder if Bill Clinton ever got charged for not only cheating on his wife, but getting some, you know what, in the White House on federal grounds, because that's illegal. In a sense, that's illegal. All right, so I'm watching NVIDIA here, thinking that this could be a nice area for a short, but I'm not sure. I just don't trust it. The opportunity was this morning. You had a nice breakdown on this. So let's go look at the S&P 500, and let's see if we can break 543.
My immediate reaction is no surprise. Quite frankly, a president has to make the most difficult decisions you can possibly imagine. That president has to
543 would get you down to 542 if it breaks and you really start going. Okay, so you did make 544. He should be immune. Exactly.
That's absolutely true. But if you're not acting in an official capacity, we don't have a situation where we have a king in this country. And so if you're acting in a personal capacity, non-official capacity, you still remain potentially criminally liable for your actions. And so I know there will be disagreements about, well, what constitutes an official act, and obviously I think that's something that has vexed the court for these past few months in looking at this case. But you know, having been with President Bush during making some difficult decisions on the war on terror, I know that the president has to have confidence that he can exercise his best judgment without fear of criminal prosecution. And obviously, you don't want a president to be reckless. But
all right.
We've never had that problem in this country, by and large, from my perspective. And so I think this is a right decision. Again, the most difficult aspect of this will be decided.
Okay, so the SPY's holding up naturally okay, or the Qs are. I guess because NVIDIA is still holding up.
Why then do you think it wasn't a unanimous decision, and do you think it is a worrying moment, a disappointing moment that it was split along, I guess, left and right lines that we may have possibly predicted 6-3?
You know, I think there probably was a very serious, prolonged attempt to try to get unanimity on this issue. That didn't happen. Obviously, this is a very controversial issue. Over a controversial.
It's not controversial. It's really not. And the fact that they compare Donald Trump and his mindset to Biden, but you're 80 years old too. The only reason you're talking about him being old is because you're talking about Biden. And to sit there and say all this shit that they sell him is fucking disgusting. He's out there golfing every day. He can communicate. He knows what you said. He doesn't get lost 2 sentences into him talking. So the Dow sold off, guys. The Dow sold off. So that's good that we did not go long banks, because they were. I didn't trust that move either, because. So if you guys notice, like JP Morgan, I was like, yo, 202. I'm not taking JP until you get down to 202. Down here. It reshapes the presidency. That no man is above the law. He didn't fucking do nothing, guys. Like this is what's even crazier.
business acts. I dissent. That's the opening of the dissent here. We also have a statement now, guys, from the Biden campaign putting out a somewhat less blistering statement. The Biden campaign, the senior Biden campaign advisor here, saying today's ruling doesn't change the facts, so let's be clear about what happened on January 6th. Donald Trump snapped after he lost the 2020 election and encouraged a mob to overthrow the
No,
results
oh
of the
my
rigged
God, you
election.
gotta be.
Trump is already running for president as a convicted felon for the very same reason he sat idly by while the mob violently attacked the Capitol. He thinks he's above the law and is willing to do anything to gain
Yeah, that's true.
power for himself. So that's the reaction from the Biden campaign, which of course can't do anything to undo this decision. And Justice Sotomayor's dissent also doesn't do anything to undo the decision, which is a broad grant of presidential immunity to former presidents, which is something we haven't seen before in the United States. So this is new territory, guys.
Eamon, thank you. Obviously, we'll continue to hear from you. Judge Gonzalez, let me come back to you and just quote Justice Sotomayor. I mean, what about this idea of a president conceivably acting in a treasonous fashion? Would that no longer be something that could be acted upon, at least on a legal basis, given this immunity claim?
It would depend on the facts, the circumstances, quite frankly. Look, I think that the court has set up a framework that, while I think is probably the right framework, it's going to be a difficult one that will depend on the facts, case by case. And fortunately, we don't have a situation where I think presidents have acted with reckless abandon, ignoring criminal statutes left and right. That just doesn't happen.
It's not gonna let me.
Why the president relies upon the White House counsel and the Department of Justice in making decisions, because they want. Certainly I can speak with respect to President Bush.
Obama ain't bashing him. Obama is just wants him to run. Maybe Kamala.
Rely heavily on advice from lawyers throughout the administration, and that's the way that I think most.
This is funny.
That is, they consult with the lawyers, they get the best advice they can get, and they make a decision going forward. And in that particular case, the president shouldn't be penalized, should not be indicted, and hauled off into a criminal court based upon a decision.
Oh man, I want to say some shit so bad. I'll do it later. I'll do it later. All right, JPM, JP Morgan. Yay. QQQ. I'm running a couple things right here. I gotta delete. Are you kidding me? You see this? You see that, right? God damn it. You gotta be fucking kidding me, bro. You gotta be kidding me. So I missed that move again because I was worried about Twitter.
And I'm just curious, given what you know about the first Trump administration, whether you do share any concerns in terms of what he's going to be asking a White House counsel that he can do and what he's going to be told. Yeah, you can do that.
Yes, I do have concerns about what it's going to do, quite frankly, given his record. And I don't know if it matters. First of all, I don't know whether
people have this imaginary thing made up in their mind about Donald Trump. They do not need to be concerned or worried about him making rational, crazy fucking decisions. It's either the people that he puts in office, in the cabinet, who are professionals, do their job. If they don't, they get fired. That's it. Like, TV is so fucking ridiculous. I hope people do the right thing. Vote for the person who doesn't demonize businesses, small and large, making money. Votes for the person that does also believe that government does not need to be in your business 24/7. You do not need to raise taxes if you want to worry about the right shit. Only raising taxes just takes more and more from everyone and just gives to the government. Oh, anything over 400,000. Well, yeah, so you have shit to claim like a house, capital gains. Don't get fooled. It's just crazy, man. It just I don't get it. I don't know why they shit talk this person so bad. This is one of the best presidents that I've had in my life. For the first time, we did not have to worry about. Or we just didn't, you know, it was just somebody that went and solved the damn problems. And if they weren't solved and they wanted to start shit, okay. It's the first time you actually had a generation that believed in them. Now, you just go right back to Obama, Biden, and they have to do a draft because young people don't want to join the military because they don't trust nor do they like them, and they're not going to work for them. And they know he's a load of shit. They do. People aren't stupid. They really think people are stupid. They really do. I don't. I know y'all aren't. You know, it's funny that the president can decide that he can work for Intel and give Intel tax credits, but Amazon can't decide to pay for iRobot and keep people's jobs and to buy another company and work with another company, but yet they can't do that. Like, it's just the most ass backwards shit. Just like Lehman Brothers should have been with the rest of every other bank. Those people should have never lost their jobs. That money should have went to Lehman Brothers as well. Like that's the shit that I don't understand, that I try to point out. Is like the most ass backwards shit. And they slowly take. Even with guns. Like you can't have a bump stop or all this different. Oh, okay. Okay. You can have F-22s. You can have planes flying over people's houses. Remember, it's a law-abiding citizen that doesn't break the law or decide to go out and harm others. That's just where they slowly take it. They just slowly take things and they just slowly strip it by just slowly taking things away. Oh shit, soon enough. They're trying to go after cigarette sales. It's crazy. But we're for rights. We're for rights. If you want, it's about democracy. It's about rights.
Want the effects of Viagra, but faster? Meet Rose Sparks. They contain sildenafil and tadalafil, but Sparks.
Okay, so let's do a check-in here. We got that mild move back down. I just don't know. I just have this feeling that we have had this move, and that was it. You had to be on it. If you weren't, it feels like the day is already about to fly by you. The SPY is actually down 0.8. It's 0.2%, we'll say. 0.19% down. So let me throw up Tesla here. Did Tesla pull back yet? Let me see. It has a little bit. I was hoping that we could get Tesla down to 198. I was hoping we would get like a 198 test or even like a 202 pullback, but I figured it would, you know, bounce into that 200-day and reject and then start to pull back, but that wasn't the case at all. It just ripped right through it. NVIDIA, I'm watching right now. I'm trying to get like a 122.50 pullback into like 118, 120. Let's go to the QQQ. I have Goldman Sachs up there. QQQ. It's just, it feels like you're getting the Dow to pull back, and tech is starting to try and jump back into the lead. A little bit of tricksterness going on. Sweeping and historic ruling. No, it's really not, bud. Dude, if we gotta fucking hear about this thing all day. Official capacity. So I can't even have CNBC on because this is all I'm
Just Jabbers has that for us. Eamon, you've been going through more than 100 pages for this opinion.
Yeah, look, this is a sweeping and historic ruling.
Yeah, suck my dick. It's not sweeping. It's not historic. Just leave it alone. Beat it with a bat. Leave it lay there dead. Let it rest in peace. Alright, so this level here on the Q is 478. If you guys notice here, I'll give you guys a 30-minute chart, the SPY. The SPY is what I want you guys to see. Because this is the level where you have some support. And I feel like if you break 543, you start turning it into resistance. And I think you have a really good shot at testing 540, which would be the 20-day moving average. Let's see.
High-profile court cases. Is the risk of that now very close to zero?
Yeah, this clears the decks for the Trump campaign, right? I mean, this doesn't eliminate all the legal problems that they've had, but this removes some big stumbling blocks that they might have had.
All right, the Qs are holding up. Let me show you guys. Here. NVIDIA. Sorry, she was sitting at the door. Okay.
Wall Street want, what corporate America want out of this campaign? I think this is very early, but I think one of the first things you can see is that it gives an enormous boost to the Trump campaign, and it also tells you that a second Trump presidency would be less constrained by sort of rules and norms than the first Trump presidency was. And I think that if you are somebody who is a big supporter of the president,
What do you guys think? You think there's some volume that comes in here? Or you think that's it for the day? The volume's done. It's a vacation week. Shut it down.
I think it is the way to read the initial reaction. I think this does make it more likely that Donald Trump goes on to win in November. This obviously removes a whole bunch of distractions.
You know what's so funny is that they talk all this shit about the spending that he did, that if any of them even paid attention or acted like they wanted to give you guys the right information, they would have talked about how that was on their list to solve it. And they had a lot of the COVID money that they gave back, and they got mad at them that they gave it back. Because you have people like Steve Mnuchin, not Janet Yellen, trying to run the place. And they're going to run it as a business, right? Which is, like, there is no reason why Joe had any reason to even spend close to the amount that they did. And yet he did. But you don't hear that from them. You don't hear that from them. Ask yourself why. He didn't have COVID. He didn't have no reason to come up with $7 trillion in liquidity. So, baby, I don't know what you want. Listen, you have food, my love. I don't have anything for you. You have food. I don't know what you want me to do for you. I don't know. Alright? Let's see here. Can we get a rejection up here? Yep. Looks like we're going to try here. Let's see. It's going to probably be low volume, so, you know, don't rush into this. Just watch the overall market. And let me see here. Let me pull up a 15-minute chart. Let me pull up a 15-minute chart. The guy just said it. The guy just said it. He said. So here's the thing. He's already lying. The only part to tariffs that Trump wants to raise is companies that do not work with them.
I mean, when you look at and they're spending money like no administration has spent before, and that's saying a lot because they all do. Then you have an administration that could be coming in that wants to raise tariffs, and both want to cure inflation. And
no, he's talking about raising tariffs on countries that do not want to work with us, and that continue to charge us tariffs and or produce things that there's no benefit other than a one-side benefit. China making and selling cars, or making them there, selling them here. Yeah, they should be tariffed. You want to well, I mean, I guess selling them here also helps, but he is right. Just go watch it. I'll say it again. Go watch the Chmoth podcast. Go watch it. Every time people talk about him, I know that they have not seen the real him.
In the more medium to long term, and maybe therefore they're not factors for the second half of this year for the stock market, but they're pretty worrying if we're talking about the U.S. Treasury market.
All right, looks like you might get some follow through here. Man, this really sucks, guys, because I just hate that. I don't know. It's just hard to have pets, and one, for some whatever reason, she needs to be locked in on me at 9:30 in the morning, literally when the bell rings. I don't have the TV on out in the living room or out in the kitchen, so there's no way that she could hear the bell and kind of trigger. There's got to be something that's triggering her to do it at that time. Okay, so let's go look at some names like CHWY. If you guys have any tickers or any questions, you guys can throw them in the chat. I might wrap up this live stream here in just a couple minutes. Oh shit, that was a nice one. 2350. Look at that 2350 area. That's a nice level. 2250 could be a nice level of support. You got some support right there. There's your rejection point. I do not want to add a bunch of levels here. Dude, you could get a nice long, if you get a gap fill here, this could be a really nice gap fill. If you get a long here and you do end up trying to rally even back up to 24, you could see a nice rally there.
moment ago, JP Morgan was going to probably have a closing high. You know, sort of exciting. We've just been climbing and climbing. And you know, for example, Michael Brinking just said, you know, gains, get more gains going forward.
Yeah, I mean, the trend, Nicole, is certainly higher here, but I think, you know, we all have to be very cautiously optimistic. There's so many things, in my opinion, that could derail the market. But boy, the momentum is squarely to the upside right now.
All right, let's get to your first name here, and that is Kava. The Mediterranean Foods had their IPO here not that long ago. Tell us your thoughts on this name, which is up 2.1% today.
Yeah, this is one here that, you know, is probably not for growth investors unless you're really willing to take, you know, some volatility with it here. It, like you said, just had its IPO. You can't measure this stock with its PE ratio. It's in the 100. So, you know, if you're going to look at that and say it's overvalued, you know, this stock is not for you. But when you look at the analysts out there, there has not been one earnings estimate that's been lowered in the last couple of months. In fact, 7 analysts have actually raised estimates, and the overall consensus estimate has been raised as well. When I look at a technical look at this, and, you know, the stock hasn't been trading that long, but there's been some pretty big resistance right where we're trading right now, and I think this thing is going to break through. This, you know, but besides, and I've been to this restaurant, besides it being what I think is just fantastic, doesn't really matter what I think, but when I look at this is a little bit of a cult right now, if you will. This has a huge following, and I think there's going to be a big upside breakout. So I'm buying a September call spread, like pretty wide call spread, the 100, 115 call spread, because I think we break through these, you know, this resistance area here, and that's kind of the next stop up around 115.
Yeah, it's interesting because, you know, you're talking about making brand new highs. This is about a year old from that IPO.
Yep.
The high was 97.64. So this, you know, move that you're talking about with these calls would mean new highs for this company.
Yep.
Let's take a look at the chart with Ben. Ben, your thoughts on the chart?
For sure. I was actually at one of the locations last week, and Scott mentioned the devout followers. They were halfway out the door, full of devout followers, right? And by the time I was at the counter, the line was out the door. So we had good timing, but the place was packed, to say the least. And the stock, I think, is a reflection thereof. Let's take a look first and foremost. I wanted to begin with a more intermediate time frame because I started off with a 5-minute candle chart. It was just a mess. There was really not a lot of conviction there over the last week or so. But as you step away and look at some of the price activity we've seen since the beginning of April, you're going to see a lot of conviction here. Bottom left, top right, exactly what we like to look for. Areas of consolidation that are formed at higher and higher levels. You can see where the market's kind of paused and sort of regained composure. Scott was talking about potential for a breakout. That 97 level, that's the upper extreme that we're looking at. And you've got a kind of a line in the sand in terms of this momentum to the upside being 80. Now, the bulls don't want to necessarily see it below that June low that we saw down around that $84, $85 level. But again, the area balance that I'm focused on is the one prior to the one that we're currently forming. Bulls want to see another breakout to the upside to continue the staircase type pattern, which has been continuing, not since just the beginning of April. Here we're going all the way back to, again, October last year. We're talking $29 all the way up to $97.64. Again, now we've stepped away from an hourly candle chart into a daily candle. But look, almost an identical situation playing out. A well-defined trend up, simply put, off that October low. Bottom left, top right, it was around 29. Just shy of 97 back in May. Currently in a balance, it's forming up around 90. I like this in many ways. This is acceptance of the most recent run-up that we saw into the beginning of June after earnings. If you remember, a high conviction move up through that $90 level, and then basically no rejection as of yet, overlapping rotational price activity. Last chart I wanted to show you real quick where we are relative to the 50, the 200-day moving average. You can see, again, holding above both convincingly that test of the shorter dated, again, back in April. Provided, again, just support for the bulls. Here you can see RSI, no real lean one way or the other, but well-defined trend up here, that's for sure. Looks like bulls remain in control.
Okay. You know, it's interesting. Thank you for that. So the bulls remain in control, and then Scott's talking about new highs. But what's interesting is a lot of the analysts some have buys, some have equal ratings, but they're not, I don't really see a lot of price targets over 100, Scott. So you're sort of an outlier.
Well, that's good. I like being an outlier, but I'm not sure that there are those price targets just because we're in, a territory that we've never been at before and because the stock is so new.
All right, next up, we're looking at Tesla. I saw that it broke 200 back above the 200 level, so that's exciting for folks. 209.75 here. I think people are sort of eager to take it out of the Magnificent Seven, but they won't because they are waiting for the August 8th date.
Yes, and listen, there's so much that everybody can debate about Tesla, about Elon Musk, right? So we don't need to get into the give and takes. Here's the bottom line, in my opinion. The Q2 delivery figures are coming up. Their margins keep compressing. China's not improving. Now, the stock on this morning is rallying. It has actually traded above the 200-day moving average, which is something I was looking at for some resistance. It is hard to fade the Musk. However, I am buying an August expiration put spread, which will take into consideration the next delivery figures, I think the next earnings cycle. So I'm buying the 190, 170 put spread. This stock, honestly, there's so much on both sides. You've got the bulls, you've got the bears out there. I like the downside from here. I just think that it's really up against a stiff fight at this point.
Look, there's been a lot of complaints about that it is overvalued. Most recently, the Cybertruck drivers have been listing the shortcomings, saying the battery power, lack of full self-driving, things like that. But there are others who still love Tesla and Elon Musk. Let's see what Ben says about the chart. Ben?
Yeah, I do feel like there's lots to get charged up about when you're talking Tesla, especially when you're talking about the technicals here as well. Scott mentioned the fundamentals, and I can understand why the bulls are excited, to say the least. Let's start off 5-minute candle chart. Perfect example of what I like to look for, guys. Two phases of price development. You have that horizontal overlapping, rotational, kind of random type price activity, and then bam, you get an open like what you saw today, and you get that high conviction move up, and then we transition back into that overlapping kind of rotational. You found the stopping price up around 211, and you sort of start to balance around it here. Let's take a look, stepping away from the 5-minute into a hourly candle chart now, adding a little bit of time on here. Stock was trading down around 138, if you remember. That was back in the end of April, and you can also see here a well-defined trend up. Again, bottom left, top right. You can see a few areas of consolidation that have formed. And here's that 200 level that we were just talking about. Again, the breakout right now that we're seeing above that. Nicole, you mentioned how we're recapturing that level. You can also see the vertical nature associated with this move here, the high conviction move up. So you get that higher highs, higher lows. Green candle, simply put, participation, energy, exactly what the bulls were looking for to start the week, the quarter, the second half of the year. Taking a look here now, they really got some heavy lifting to do, though. Get back above 250. Ultimately, you could, hey, I know this is a stretch, but you could regain those all-time highs up around 400. Another thing that I like is that you held key support around 100 here. Recent test held above the lows that we saw end of 2022, beginning of 2023. And again, if you get through this 250 level, you really build momentum to the upside. I got one more chart for you guys I want to show you because Scott did mention that 200-day moving average. Here it is. We're just back above it right now. Been kind of forming a bit of a bottom here around this 50-day moving average. Look at RSI here. We were talking a minute ago about how there wasn't really a lean one way or the other in terms of RSI in our last example. This one's screaming. The bulls are in charge here right now and screaming energy to the upside. It's screaming a nice big move here again to begin the week.
All right. Any thoughts here? You want to add anything, Scott?
I've got the contrarian position on, but that's why I traded with options. So if I'm wrong, and I am wrong at times, if I'm wrong, I know what my maximum risk is.
Right, understood. It's even when I'm wrong, I'm right, you know? All right, last but not least, let's take a look at Albemarle. We think of materials, chemicals, the manufacturing of that. It's at 96.14. 1 year, it's down about 56%. This year, down 33%. What's going on with this name, and where do you think it's going to trade in the future?
Yeah, you talk about a stock, you know, when you look at the charts here falling off a cliff, this one is really represents that. Lithium prices keep falling, and the EV market, even though we just talked about Tesla, and I'm not, you know, so enamored with Tesla, what is the EV market doing? You know, there's a lot of concern, quite frankly, about it. But contrary to my bearish take on Tesla, I think Albemarle is a really major value play here. This area here, around 95, if you look back going to 2020, this is a major, it was a resistance area, and then we broke through there. So as Ben will probably tell you, you know, former resistance becomes support. I'm looking at that. I'm buying an August call spread, the 100, 110 call spread. I just think this stock is really a big time value play right here. I'm a shorter term option trader, which is why I'm only going out, you know, 6 weeks or so to August expiration. But I think even if you went out further, September, maybe even the end of the year, I think this one pays off for you.
All right, let's get a final thought here from Ben on the technicals of this name.
Yeah, this one definitely has come off significantly, right? Fell out of a tree and hit every ugly stick on the way down. This stock is under pressure, to say the least here. Let's dive in first and foremost to an hourly candle chart. And you can see the pressure that it's come under over the last couple weeks. Sold off from, if you remember, it was trading up around that 118, 120 level all the way down to the breach of 192.29. Yep, there it is, that low recently below 92.30. Take a look at on the way down how, look, you get high conviction and you get this kind of hockey stick or L-type pattern that plays out where we go from a big move lower here into a sideways consolidation phase. Again, balancing around this $95 level, right? But I want to show you as you kind of take a step back here and look what happened on the way down. Again, how this pattern repeats itself. We're talking 1, 2, 3. I mean, you could go 4, maybe 5, 6 times.
Bro, I literally was about to grab these 126s. They're already up 10 cents. 45. 51. Bro, you gotta be kidding me. I was looking here for my target of like, you know, 126, 127, but these were just like $1.25, $1.30, and I'm like, all right, let's go after these. Let's go after these. Reasonably priced. They're up 25%. Microsoft. I'm not sure. I mean, you know, anything technology, you know, I would look for 454. I mean, if you're not long here, the low, you're doing a disservice if you're going to go long here. I'd have to look at I'd have to read the chart. If I would keep your eyes on the Qs. The Qs can get if we can get above like 480 on the Qs, you have some room to 482, and that could give technology a nice room to run. Which it looks like it's going to happen. Right about now. Looks like it's trying to happen now. Let's see. Let me go here. You know, Microsoft's tough because of the way it trades. You got to be careful. I would target prior days. Shit. It could break out. You know, if you're like, you know, I don't know what your thoughts are on it. I'm not really watching Microsoft because, like, I don't I don't have a reason to trade Microsoft. Do you know what I mean? Like, there's some volatility with NVIDIA. That's the only reason I'm looking at NVIDIA today, was because, you know, the Qs were starting to pull back, and you know, semiconductors were already trying to pull back last week, and Microsoft, I feel like, could just sit up here from like 445 to 555. You know what I mean? You want to be short up at 456 unless it breaks through with volume. It's a nice day. It's a nice day. Yeah, I would be prepared for a pullback, like, very soon, within the, like, by the afternoon, by like 2 o'clock. You got some upside, but I think here's what I think happens for Microsoft. You probably get a short-term downside, which you've already pulled back there. Maybe you get another pullback here, right? And then let me do this. Maybe get like another pullback down to like 451, 450, and then you kind of just like finish the day up here, 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 like here, yesterday's high. So I know that wasn't much of an explanation, but if you're looking to trade, you want to make sure you have a reason, right? An upgrade, a downgrade, a fundamental, sentimental, like, what's the reason? You know what I mean? Like today, for anybody that's looking at Meta, you have a reason. There's still talks about the EU going after Meta, and that's why it's been selling off. Semiconductors have been selling off, so that's why I was looking at NVIDIA. It had a nice quality setup with the 20-day moving average, and Tesla. So, like Microsoft, so look, it did pull back off of this level. Yeah, watch for pullbacks. See if the QQQ pullbacks here. I really don't, I just don't have much because I don't know. I don't want to give you the wrong information. It is. Oh, dude, it's incredibly strong. I mean, really though, you'll see that like that's almost every year. That's almost every year with Microsoft. Because, hold on 1 second. The thing that Microsoft has that Apple doesn't have really is a lot. Like when it comes down to like state, like local municipalities, like state police, firefighters, nurses, hospitals, office buildings, right? Banks. The majority of them probably use Microsoft in one way or another. So Microsoft is a steady stock, and it has done great. I've owned Microsoft for a while now. I've owned Microsoft for a while. And it actually wouldn't surprise me if they go to do another stock split. You know what's crazy? Is that I've owned this thing down in the low hundreds, the low... I don't think I got $80. No, I didn't get 80. But I've owned it down at the low 100s. COVID, it was a buy. That was probably the easiest buy in my life. But But I know what you mean. And that's why, like, you know, Microsoft is strong. It's really strong. You don't hear them worrying about The same thing again with like Apple with earnings. How many iPads did you sell? How many cell phones? How many new upgrades? How many new users? Or like just, stuff like that. So this thing will always do you good. And I'm actually curious if they'll do a stock split soon. I am wondering if they will do a stock split in the next year. I think you start getting up to $500. It's crazy, but you start getting up here to 500. 400, they'll want to make it, kind of, more reasonable for their employees to own it. Because once you start getting to 400, 500, 600, 700, it's a little harder for employees to own, their own company stock at that price, because they're talking about, I'm not going to say paychecks, maybe some, right? Depending on what state you're in. And like you're like low on the totem pole, kind of like the bad guy at a Microsoft store. You're getting 500 a week, 700, Yeah. Well, it all depends on. So the reason that they do splits, it's not really for retail, but it's more so for employees that work for the company to be able to afford it. So that's why I looked at it from 4 to 500, maybe 550, because Microsoft is just one of those companies that's going to be like, we want our people to be able to afford it. So let's just say, I don't think they wait until 700. I think you start getting to 550, and that's when they start considering it. It's just my personal opinion, but because if it's expensive and people, of course, Microsoft, I'm sure, has a 401k where, they match. So it is kind of, that could be a good point with your 700, if they're putting out 150 to 200 a week, and then Microsoft matches it, so, 400 a week, whatever, 300, if they do it. I just know why the majority of companies do it, like, so we'll see. We'll see what happens. But this thing has been a beast. Sometimes it can get hard to hold on to because it feels like it has these long consolidations. Like even COVID, right? Like this year. This was like kind of like, all right. Because what happens is like, what I'm talking about is like right here. Like look at this. Like all of that. That's almost a full year of sideways action. Almost. It's easy to want to get rid of it and say, man, Microsoft's just a dog. It's a piece of shit because it's not moving. But really, you haven't lost. Because what you don't see in this box with this thing going sideways is every other stock in the market that's just ripping, you know what I'm saying, to new highs every day. And you're looking at them and you're like, damn. Like, I'm sitting here in Microsoft, and I've been sitting in it for months, and it's just consolidating. I'm not making any money. A matter of fact, like, I'm losing it. So you just got to, like, hold it. You just got to be one of these names where you just hold it and just know that you're not going to lose money. You shouldn't. You shouldn't, at least. Hell of a run, though. A hell of a run. Really is. It's a hell of a run. I meant to look at Amazon and Google, and I forgot to. I didn't have much of a list today. I mean, I did, but I didn't because I'm pretty much watching the same thing as last week. Let me do this. I don't know why it just did that. I didn't double click. But yeah, I like Microsoft. I do. As far as a trade right now, you can trade it. Just, you know what I mean? Just look at the levels, just the high to low, and just understand if it's in a consolidation or if it's in a trend. And look to see if Microsoft can't get through those highs. I want to see if I can try to get long. Damn. And it's up today, right? Like if you look at Google, let's look at Apple. Okay, Apple's up nicely. Apple's going to go try for 218, 220. I was thinking it was going to do it last week. What are you doing, baby? I know. I know. Shit. Let's see. Damn, this could be a nice pop right here, but I wonder. Watch this. Let's watch this, guys. I guarantee you, people get sucked in. They're gonna try and be like, "Oh shit! Look, let's go for the break," and then it fails. Watch Apple. See if Apple fails here. What's your thoughts on AMD? The contention is brought this thing back from the day is now began putting more focus AI chips that complete direction with NVIDIA. I think AMD, I'm going to be honest with you, is literally kind of reminds me in a way of Microsoft, where it just sits sideways for a little bit, builds its, you know, not necessarily fundamentally from the company's standpoint, but as far as the stock, I think AMD, you know, I'm not sure. I'm honestly not sure. I feel like you're safe with your money. I feel like, obviously, AMD is a safe place to be. It's a good company. I have an AMD. I have a Ryzen 7. And I think, you know, I don't really think that. I think sometimes people forget that, like, there's a difference between a stock performance and the company itself, because you can be a great company and just have a crappy stock. I think as long as NVIDIA, here's the thing. All right, here's what I read, and it kind of made sense. Like, AMD is not going with the rest of semiconductors, because if you own NVIDIA, ASML, and even TSM, you pretty much own the whole semiconductor space. And why take the extra risk when you already own the best of the best? You don't have to. And you'll notice, keep an eye on it. Like today, what's AMD? AMD is red, and look at NVIDIA. It's about to go green. It feels like the days, and then look at this. This was a red day on NVIDIA. You'll see if some of that money starts to leave NVIDIA. Look, red day, and then what? AMD was green. So it feels like you're going to see some profits being taken and just a little bit get thrown into like AMD and some of these other names. I think until they prove it, it can start actually taking up NVIDIA's market share. It's going to be hard for them to... Do you know what I mean? It's going to be hard for an AMD to just like be considered an NVIDIA or even compete. They're not competing yet. I mean, they are, but they're not, because they're not really taking any of their market share yet. They got a little bit, but to the degree NVIDIA has. I would just keep your eye out for this. And remember, sometimes it doesn't mean that a company's doing bad. Sometimes there's a separation, like Lucid is a prime example. Beautiful, quality car that just, you know, just because you have a Lucid or like Lucid doesn't mean you should own the stock, because the stock is not going to reflect what the product is. It's really not. Because if it did, you know, it wouldn't be where it's at. But I would, I think you just have, when you have some of these down days in NVIDIA and TSM, you're seeing some money get put into these names. I like AMD. I'll always buy it. I can't buy it until it gets lower. We just bought Snowflake. Snowflake might not turn around for a little while. If it goes down further, I'll buy more. I don't know why the CEO stepped down. And look, we bought this thing down here. So we're already up, and you can see some institutions are doing the same thing. So I said the low 100s. If I had the chance to buy Snowflake at the low 100s, I would. And we kind of got down there, so I had to. I had to buy a small piece. But, you know, as far as like investing and stuff like that, you know, I think you just, if you buy good quality companies, you'll get rewarded. Like at the end of the day, unless something drastically goes wrong, which shouldn't, because you have auditors that do, you know, have your back, that say, oh yeah, well, they're not in bankrupt. They told you that everything was great. Things aren't, you know what I mean? So it's not like you have to worry about some fraud stuff. You know, I think you stick with the AMDs and some of the major companies, you'll do good over time. I mean, especially as long as if the you know, employment rate stays around where it's at, you know, you're going to always have someone else to bid it up. There's always going to be people buying. But take notice to those days where NVIDIA is down and AMD is up. NVIDIA is up and AMD is down. It's important, because you started to see it with the S&Ps and the overall markets. All right, let's get back on track. It was good to talk with you. It was really good to talk with you, Ken. I had a frustrating morning because I was really eyeing up NVIDIA short this morning, down into the low 120s, and my cat was just going crazy and just would not let me focus and do what I needed to do. But it is what it is. Would have been a really nice trade. I'm gonna eat a couple crackers here, so give me just a minute, guys. If you guys have any other
$20, I think they're
right
seeing
there.
some major customer adoption going forward for Snowflake, albeit again, it's still trading at a rich valuation around 200 times this year's earnings, or 2025's earnings, and about 113 times 2026 earnings.
So at this point now, very curious how you would go about an example trade on this name.
Yeah, so one of the things you'll notice is, you know, looking at a 2-year weekly chart, there seems to be an area of support that goes all the way back to January of 2023 last year. So I think that's an area that's interesting, to say the least, from a technical standpoint. The other thing is it's actually had a 2-quarter step down. In other words, it missed on earnings last quarter. It's pulled back.
I'm still going to keep an eye out for 23.50, 24, if we can get 24 on GameStop to get short GameStop. Look at DJT. Also, what I tell you guys, I said look for that 200-day moving average. If you get back to the 200-day moving average, that could be a place to be a buyer. We finally got back down there, and you're seeing it, but you have a lot of prior support right there at 33.34 or 34 or 33.50, and it looks like we might try to reject that. I'm gonna look at these names real quick.
Break even is at 132, and max loss, just in case that occurs, is at 125, and that's $7 a share. So you're earning over 40% return on risk on this trade. And the last thing I'll mention here is it has about a 65% probability that the options will expire above the short strike at 135, and that's what we want.
Yeah. Wow. All right. Thank you for that. George Sillis, good to see you. Appreciate it. Good look at our disruptors, Snowflake, today. Up almost 4% today. Coming up next, our 360 round will be focusing on alternative investing for the second half of 2024. We'll be right back here on Trading 360 on Schwab Network. We'll be right back.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. Time for a 360 round. We're looking at alternative investing. Let's bring in our panel. Brian Glenn's with us, Chief Investment Officer at Premier Path Wealth Partners, and Ed Witowski, Managing Partner at CHWY Investments. Brian, I'll start with you. It certainly seems that alternative investing has become more and more popular. Would you agree with that? Tell me what you're thinking. And what are people focused on?
We definitely agree with that at Premier Path Wealth Partners. Most of our clients were probably at a 10% allocation right now. We'd like to move that up over time. I think in the endowment space, they were at the forefront of this years ago. They're seeing very high allocations, so we probably have room to double or triple our allocation. We're excited about that. And two areas we like are net lease strategies and traditional buyout PE.
Yeah, understood. What's interesting, Ed, is you talked about a few ideas of different ways to do this. You know, you're looking at equities, but in a different way. For example, you looked at utilities 2 times, right? The utility index, or 3 times, I should say. What's the premise behind doing some different things other than just picking the Mag 7, Ed?
Well, the Mag 7, are going to do what they're going to do, but you have to have diversity just in case the Mag 7 don't perform. And I do believe in the thesis that interest rates are going to start to drop. And when they do, you're going to want to be doing better than just the indexes. So that's why I look at utilities, and UTLS is a leveraged ETF that is 3 times the move in utilities. It's up 17% year to date. It pays about a 2% dividend. Isn't the reason you're buying it. You're buying it because you do believe interest rates are going to drop. The same thing with LABU, which is another 3 times leverage. And you're doing that on the biotech index. And as interest rates drop, it proportionally helps small cap stocks and especially biotech stocks very well. So those are 2 leveraged ETFs that I like quite a bit.
Yeah, and you also said managed futures. Just quickly explain that, Ed.
Yeah, managed futures is non-correlated to the stock market. So I like WTMF, which is Wisdom Tree Managed Futures. And WTMF has basically it'll go long the yen versus the dollar. And then once that trade starts to show some sort of long in the tooth, then they'll go short the yen versus the dollar. So it's trend following, and it's never really trying to predict where things are going to go. It just looks at trends. And when you have any kind of stock market, you should always have managed futures in your portfolio. It's sort of like having a spare tire in your in the trunk of your car. You always want it just in case you need it, and you never know when you're going to need it.
Yeah. Let's talk more about private equity buyouts. Brian, you were looking at that and seeing popularity and demand. Clients are looking to do something different with their money, right? What are they really looking to do?
That's right. I think what clients want is they want exposure. They recognize that there's a lot of value being created in the private space. Companies are staying private longer. That space is being democratized. There's funds that are that you don't have to be ultra high net worth to get into. And so it's really bringing it to our high net worth clients, not just our ultra high net worth clients. And we think there's a misperception that everybody looks at, as Ed noted, the Mag 7 and the S&P valuation on a PE basis. And the reality is corporate buyout deals are not being done at extravagant multiples. And the other thing is private equity guys and gals, they can model in interest rates. What they're not great at is modeling in interest rates when there's large changes that happen over 3 or 4 years. So newer funds, we think, have great advantages. They know interest rates are high. They're able to put that into their deal pricing, and we think these are going to be great assets. And finally, about half of private equity returns comes from operational improvement. And so that kind of pushes that multiple issue aside a bit. And these guys are really operators. They go in, they operate the business better than when they bought it at inception. And that's where we think it's a little immune to the interest rate / multiple argument.
Yeah, and one reason you've been using net lease assets as an alternative, Brian, and you talk about the borrowing costs, and while we're not at all-time highs, we're certainly seeing rates higher than they have been over the last decade. And so when they start to come down and you're looking at these net lease assets, you think that will mean good news for investors, right?
I think so. So if you think about what a triple net lease or what a sale leaseback is, a fund or a buyer buys the real estate. These are typically strategic assets, so manufacturing facilities, distribution centers. That's purchased from the corporation. The reason they're selling is they have a better use for their capital than having it tied up in a building.
Yeah.
And then the fund buys it. The fund's able to put in a 20 to 30-year lease. So we're effectively locking in cap rates. If we agree with Ed, we think interest rates are going to go down in the future, and we like the fact that we can lock into these cap rates over 20 to 30-year terms with, by the way, 3% annual lease escalators, and that's a very attractive proposition for our clients.
Yeah, Ed, I was thinking at some of those alternative investments that you talked about that were 3 times leverage to the upside, right, for biotech and utilities and such. So are you a believer if the market pulls back, people are buying the dips and will head higher and such? Because if we're going to sort of hit a wall and sell off in a big way, that means 3 times to the downside, right? So there is risk involved.
Yeah, there's no question. That's the other side to this, is that if interest rates don't go down or if they go higher, you're going to be looking at some big losses in both of those. So you have to be very, very cautious, and you have to buy off on the idea. You got to make a bet. I hate saying that, but you got to make a bet that interest rates are going to drop. And when interest rates do drop, you're going to see both of those ETLS and LABU both do very, very well. So I wouldn't put a lot of money into it, but 5 or 7% of a portfolio isn't a real stretch to put into those.
Yeah, Ed Butowski at CHWY, Brian Glenn at Premier Path. Thank you so much, Brian and Ed, for being here today. Thanks for being with me. Fast Market is next.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Most of this has been.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
All right, so like I said, guys, I'm watching GameStop, and I'm gonna watch CHWY. I have my watch list here, and if I get into anything, I'll let you guys know. I just want to let you guys know I'm just eating some crackers, and I'm getting I'm just having a little bite to eat real quick, and then let's see, and then yeah, we'll look to see what opportunity, if we have any in the afternoon. I had that strangest feeling this morning that like that was it. Like when I did not get on that NVIDIA short, and I was like, that's it. I could just tell by the way everything was set up that that was it. Or I'm gonna have to sit in this trade for a long period of time for the same return, for the for the range higher to test high a day. Whether or not it would go higher and make new highs is completely here nor there. But now my cats want to play around, which is okay. But I was really mad this morning, guys. I don't know why. I was just irritable for no damn reason. Well, really, not really no reason, but where'd he go? My God, he's right here. I love when she's in the blankets and she goes nuts. She puts her ears back and she has her paws out and she's going through the. Oh my gosh, I gotta freaking save it, or I gotta get a video of it and put it for the intro. So yeah, I'm gonna watch. This is a nice support level at 123 on NVIDIA. You pulled back into it. Now you're going back up to test 125 in that 20-day moving average. Let's see if we can or we cannot get through the 20-day moving average. And that'll give you an idea on whether to swing trade the long, you know, get into the short. What are you so mad for? She's going crazy right now. Are you okay? What are you doing? What's wrong? You sneezing? You okay? Are you... Alright, the cool guy on the Harley. I don't know. If you're riding a Harley, I hope you're toting a pistol and just the true meaning of not a do-gooder or something. I don't know. I get old people gotta just ride them. You know, listen, there was my stage that I liked them and stuff, but I'm like, I just always think back to South Park. Anyway, don't mind me. Don't mind me. I'm just going off. I'm just going off topic. So I want to see if you can get a pop back into this high day, like 126, 127, guys. We'll see here if we can or cannot break the 20-day moving average. Abby, what is wrong, goof bud? Are you okay? Are you losing yourself? You okay? I don't know if you guys can hear her or not, but I'm gonna watch this 20-day here. The screen box, the 20-day moving average. If you don't know, it is 124.60 right now. So we'll see if we can get above this level. I don't think we will, but maybe we can get a rejection at 125 and take NVIDIA back to 122. Or you just go long, hang on for the ride, and if you can break above the 20-day, maybe you consolidate above it during lunch, and then you just rally to previous day's high. Listen to her.
You mentioned small caps, and the pullback seems rational to you. BTIG out with the note yesterday, staying in part. We're going to touch on this later, but just might as well hit it now. They say if small caps are going to work, we think they have to start sooner. They become the canary in the coal mine rather than a rotation opportunity. Agree or disagree?
I agree in the sense that small caps are always one of the indicators I watch in the market to either confirm or deny the broader moves. The issue with small caps has been, though, that they've been in this range. They haven't really been able to break out meaningfully. They do pull back quite a bit when we have volatility, but that's natural. If we really want to see a rotation that's lasting, and one that is predicated on the idea that we have secured a soft landing and that cyclicality is back and growth will pick up, we need small caps to participate. They just haven't been able to, and for whatever reason, they don't catch a bid even in those rotations. That proves to anybody that they're going to be able to hang on to it.
So, Jim, you've been bullish on small caps. Right now, are you seeing them, as BTIG says, if they don't start participating, they may be a canary in a coal mine as opposed to an actual rotation opportunity, as so many people have said, including Tom Lee? I mean, the list is super long.
Yeah, there's a lot of people, and I'm certainly part of the list, that believe small caps will rally. However, you know, integrity demands that I point out. I've been calling for that all year. So I do think BTIG has a point that if not soon, then when? Liz, you make a great point about the 10-year. I'm not sure, and I mean this way, I'm not sure that 447 on the 10-year is a kill or no kill as far as small caps go. I think really what this comes down to, just to distill it down, is whether the Fed will cut rates this year or not. I'm of the camp that feels they really need to, starting in September and then go again in December. There are cracks forming in the economy. I've been bullish for quite some time, but I don't think that this economy can withstand higher for too much longer. So this all comes down to whether inflation will continue to moderate. We've had some good reports last month. We'll see with the labor report on Friday whether average hourly earnings continues that trend or whether last month was really just a blip. But bottom line is, I believe we need and actually will see inflation continue to moderate, and that will give the Fed room to cut in September. But without that, I look at credit card delinquencies, I look at auto loans, and I see problems.
So it sounds like you're saying we might be at an inflection point. Actually, I have a bunch of other notes out, bullish, bearish. Joe, I'm going to bounce this one off you. JP Morgan saying there's no margin of safety anymore, highlighting that everybody's positioned long, the VIX at lows, the dollar is strengthening, and also the election risk, something I think a lot of us have been talking about over the last few days.
Well, basically, we're in need of a correction, which I think logically everyone on the desk would agree with. The fundamentals, the bar for the fundamentals is much higher, without question, given the significant rally that we've experienced. Have we priced in the fact that there's probably the Fed put back in place once again? I think that we have. But I think the most critical question as you look in the second half of the year is, do you finally get the broadening out? And you talked a little bit about the Russell. This is the most significant underperformance for the Russell relative to the S&P ever on record. We talk about the ability of small caps to begin to participate. This would be the fourth consecutive year of underperformance for small caps relative to their equity-sized peers, large caps. Right. So I think that's the critical question. The second half of the year, where do you want to be anchored? And right now, all the evidence, as I have it in front of me, what Liz and what Jimmy have already cited, which is the appearance of a cooling economy, the appearance of consumer spending that's on the retreat, the appearance of business investment that's on the retreat. What does the market want? The market wants what it gravitated towards in the second quarter, and that's the quality. That's the reliability, consistent earnings, and that takes you to the Mag 7.
All right, Steve, I don't want to leave you out of this one. I just want to bounce something off you, though. On the other side of the coin, Bank of America out with a note today, constructive on equity, saying heading into the second half, we see a constructive backdrop, but believe there could be more opportunity in cyclical pockets as opposed to the index level. We're going to show a chart right here looking at the cyclicals over the last 3 months. All trading lower, all underperforming. I'm talking financials, industrials, materials. Agree, disagree that this is where the opportunity is?
I disagree. And again, I don't buy sectors. I don't buy markets. I buy underlying fundamentals. Right. So if the fundamentals in the industrials or in the materials happens to be good in a particular company, then I'll buy that. So these calls, in my view, don't add a lot of value.
I do want to say they said pockets, though. They didn't say the whole sector. They did say pockets.
Right, which is nice sitting on the fence. But let me tell you why I'm worried about the market. And I'm worried about the market for a number of reasons. I'm not going to go through all of them, but it's a number of them are what JP Morgan said, and that you're looking at S&P that's on a trailing basis about 24, 25 times earnings, and on a forwards about 21 times. And that's incorporating the 9% growth in the S&P, which, by the way, again, will be mostly in technology and, you know, communication services stocks, right? Those are 42% of the S&P right there. And their growth is so significant that it overshadows the ones that aren't. And you've got some middling ones there. So in my view, everybody's bullish except for JP Morgan, which still is positive on the market. And analysts, strategists, economists, they continue to trip over themselves with saying this is where you should be.
I would keep an eye out, even though we already pulled back in here. Watch for a pullback off of this level. I'm actually debating, do we get VWAP or prior day's close? Because I'm thinking about if we get And we're not. Listen, I'm going to give you guys, like, what I think. And I think we're headed here. I think we're headed to one, like, yeah, like 126. Call it 125. 125. Because you got to break through 125 in order to get to 126. And I think 126 is the level. Or 125 is the level. You have the 20-day there. So we can't even influence that. So the point is, I think there's ample reason to be cautious here. I can't find cattle strike down, but you never can really. Valuations. It just keeps going and going. I'm just, the minute that I buy it, I feel like it's going to go down. Or it's going to reverse. I could have already been done today. But I got really tied up with my cat and her going crazy this morning. I don't know what's going on with her. But maybe it's probably best to look somewhere else. You know, it's an NVIDIA-ness. It's not an AI-ness. So the market may take a knee jerk down, but then it'll pull up. GameStop has a lot of volume today too. It's something else worth mentioning. GameStop has, you know, some really nice volume today. Just be careful if you do try to get short here. You could get a gap fill this afternoon. I know it sounds crazy, but you could. You really could. Look, this is what I was about to say. The minute you start holding view up, if you break 2350, you better be prepared for a gap fill, which will be 25 bucks, 24.75. Part of me wants to try it.
Seasonality where you were supposed to have a pullback in May, you were supposed to have a pullback in May about the election, we had it in April instead. We are far above where we normally are in an election year, return-wise. So I do think there's going to be natural volatility as we get closer if we have more uncertainty. If somehow the ticket changes, right, that will bring more uncertainty. And then the relief afterwards likely to occur as well. The difference this time is that there's not even that many big differences in policy between both sides right now. So I don't see anything aside from taxes, which probably don't affect us really until 2025. Right. Things like energy policy, all of that we've pushed out into the future. So I don't see anything that's that big that's going to affect the market election-wise before November.
So does that mean in the meantime, do you stick with what's working? I mean, looking at technology up just about 30%, comm services up over 25%. Is that just the safe place to stay?
Generally, you never trade on what you think is going to happen in an election. You might get the outcome right. You probably get the market reaction wrong. Okay. So trading on what you think an election might result in is always going to be dangerous. I still stand by. I think we are in late cycle. I think we are in a very elongated late cycle, especially if the Fed is about to start cutting rates in fall. In which case, you want large cap stocks. Right. If the Fed starts cutting rates, you've got a yield curve that's likely to re-steepen. You want things like utilities, staples, healthcare, and energy. That's what does well in a re-steepening environment.
You see, if Jim's right, and I agree with him, being cautious on the economy, then the Fed's cutting for the wrong reasons, right? And so will that 9% earnings growth that we're seeing, if the economy does more than teeter a little bit, if it's more than spotty in terms of the data we're seeing, then that 9%, you can't draw a straight line to 11%, 13%.
But can't the economy teeter and earnings come in line with expectations, maybe even higher, maybe just propelled by just a few stocks, just like the market has been?
Exactly. So it's just those stocks. So why talk about the rest of the market? Russell, in my view, should be down. Small cap should be down. There should be no bid to it. And as far as your statistics or relaying statistics of 83%, right, tell me about the occasion of the other 17%.
That's a fair point.
And tell me, because everyone has a different fact pattern. This is a unique fact pattern. And if we're that easy saying 83% of the time, those are pretty impressive odds, I'm just going to buy the market, then everybody'd be doing what we do. Right, but they don't. So those are so misleading. There is that
other 17%. Jim, I'm going to come over to you. I mean, stick with what's working. How do you see the second half of the year? How do you play it?
Well, look, my money's where my mouth is. I'm actually trimming Alphabet today. I do, despite what I'm saying, and Steve, you got it right, that I am cautious on the economy. I am still fully invested and overweight to the cyclicals. Could be wrong, okay? I understand the fall.
This is an opportunity for Joe Biden to go out there and show he has the stamina and the rest. And by the way, while the press, and for some reason they don't, there are healthcare professionals who think that Trump has dementia, that his his thoughts do not go together. And while he may be saying we're enablers, we see Joe Biden up close. We know how attuned he is to the issues, how informed he is. And I debate with him about legislation, and not debate, but discuss it with him. He's right there.
Bro, you know what's so funny is that they can get away with saying shit like this on TV to people that are in Missouri, Texas, California, maybe Florida, West Virginia. But you talk to a motherfucker in Delaware, and you go ask anybody who's been around him, and I'm gonna tell you right now, they're not gonna lie to you, and they're not gonna say this. Everybody knows it. It's a fact, and I don't even give a shit about it.
In any case, it was a bad night. Let's not sugarcoat that. It was a bad night. It was a great presidency. This is an opportunity for Joe Biden to go.
A great presidency, charging the American people $600 for transferring money to one another. It's a great presidency. Low unemployment, but you still feel the need to get college kids free tuition. Right, the underline to that, we're just baiting you into that free lollipop, sucking you in for that vote. Where everybody else had to go pay for theirs. That great presidency. That the leaders out there making phone calls and leading. Doing what's right. Not leave it, things like leaving the border open for months at a time, and then finally comes to his senses. Oh shit, the American people, I wasn't with it for 4 months. The people don't want this. Come on, you go so hard on Trump, but yet you yourself got your people running around doing whatever the hell they want, leaving bags of cocaine, having gay butt sex on federal grounds, but you don't talk that same way to them. It's okay, man. I'm just telling you, I want to go back to those days. I so desperately do, just because I know you cannot trust these motherfuckers as far as you can throw them. You really can't. You see them slowly, you've seen them throughout this whole time. Yo, where can we chip money from? Where can we chip money from? No, you can't. You guys can't merge. But they can do whatever the hell they want to do. I don't trust them. I really don't, guys, because I know what a fourth year means. They slowly will work through it. Then it's guns. Then it's just like he was trying to say, I want to get rid of menthol cigarettes. No, I'm telling you guys, man. For those that are young that don't know Obama, it's not a good look. It's not a good look. The government doesn't need to be in your business. You really don't. And they need to keep taxes down. Like, let's just be real. Keep taxes down. I don't give a shit how much you make. Just because you really committed and did what you put it in your mind that you were going to be a person that makes a lot of money, you shouldn't be penalized and demonized for it. Because it's fair. All right, you talk about all them stories, Joe, about growing up at the table. How about telling them about how your dad said life wasn't fair? And your mom said, well, life ain't fair. So I don't want to hear that fair talk. Because if you had a fucking brain cell, you'd probably been able to have already stopped this Ukraine-Russia invasion. But you won't. And you didn't, and you won't. While the media and your wife just came on TV looking like an idiot. Just because the rest of the world might not know you or haven't been around you doesn't mean others haven't. And they know the truth. People close to you know the truth. Forcing people forcing COVID shots on people and they lose their jobs, saying you can and can't go to concerts unless you get this shot. Come on. Come on now. Like, if it was that bad of a disease, it wouldn't have been just older people that were dying. While everyone around you tells you that they had COVID and it wasn't that bad. It wasn't shit. I didn't even really know that I had COVID. Or, yeah, I had some pretty bad experiences. Okay. But talk about how bad of a president. Bro, Trump was the very best president who put the right people in office and actually cared about you and everyone else. Not just foreign affairs and how do we suck the money and the blood out of the United States people and businesses. How do we suck it out of them and just we all split it between ourselves?
And what might the catalyst be? What might be the reason for some of that pullback? If you look at semis versus software, this is a pair that I look at pretty often just to gauge kind of market direction and what the appetite is. Software has taken over quite a bit in the last just couple weeks. Why is that? We talk about valuation constantly. We talk about how quickly stocks run up, and you usually hear the warning of the faster it goes and the higher it goes, the further it can fall. I think investors started to listen. And again, the rational behavior is, okay, I've got a lot of gains over a short period of time. Why don't I trim some of them, lock them in? But I don't want to exit the technology trade. We've seen this rotation before too. So if you don't want to exit the technology trade, where do you go? You go into things like software, you go into things that would be considered old tech, and that's why you're seeing some other things in the sector catch a bid because they are relatively more attractive on a valuation basis than semiconductors at this point.
Yeah, software taking a bit of a hit. Joe, I'm going to come over to you. Just last word on chips. You have some pretty broad ownership, Broadcom in the GOT, also Qualcomm, NXP, list goes on.
The list goes on, and I think it's important to understand how significant the semi-trade is. The semi-trade is what the U.S. economy is all about. Chips are the new oil. Semiconductors are what drive the tape. Look at the performance today of the S&P. We're seeing a nice little recovery in the price for the S&P. What does it correlate with? It correlates with the fact that NVIDIA came out below 119 early this morning. Now we're seeing progressively, as the day is unfolding, buying interest returning into NVIDIA, NVIDIA pressing towards its high. So if you're trying to understand the direction of markets, to me, everything begins with the semiconductor industry.
All right, SMH basically flat this morning, not moving too much right now. All right, coming up, committee moves and the top ideas for the third quarter. We'll review two of Joe's and Jim's latest trades, plus Bill Baruch. He's joining us with one other move. Halftime back in just a few minutes.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
This is funny. This is what's funny. You guys remember them going crazy about those encampments in Florida or whatever for migrants and talking about kids being left, this, that, and the third. Oh shit, just you wait. This is so funny. If I can find it, they probably don't have it up here. This was back in the first year.
Invest with an advantage with CNBC Pro.
CNBC Pro is for all those investors out there who are following news and trends and want to figure out what to do next. CNBC Pro gives you the tools that you need, access to market-moving interviews, global market experts, and insights from the world's top CEOs so that you can craft your own investing strategies.
Become a CNBC Pro. Go to cnbc.com/getpro now.
When we're young, we're told anything is possible, but only a few of us go out and prove it. Witness the greatness of Anna Hall on a connection worthy of gold.
Please let us in. Please. I don't want to fight for my own country. I just want to come to yours. They're not going to show it. So what they did was, what I'm trying to show you guys is all the, if you guys remember the stuff in Florida, the cages and stuff. What they did was right here, right? They went ahead and put hearts and different decorations on it. Swear to God. Swear to God. They're not going to let you guys see that shit. That's so funny. So funny. Fuck. Everything's trying to come up as new. I just hate a politician, man. I really do. I tried to say it. I tried to tell them. I said, go ahead, go vote for him. Guarantee you. We're gonna have bloodshed. We'll be right back to bloodshed. Guarantee it. 6 months later. Alright. Bloodshed and high taxes to pay for it. Fucking piece of shit. At least get a president that thinks before he acts and doesn't do stuff that's going to harm or makes things harder on us when it doesn't have to be. Listen, something like 9/11 is different. You know what I'm saying? You were attacked. You were attacked. You got innocent people and families that need to be defended. And there needs to be justice. But
what's going on in software. And I think a lot of people dismissed software and said, okay, you've got this massive rotation out of software in the technology sector. There's something unfolding here that might be secular in its nature. I get the premise that AI disrupts
so
products in the software business itself. You could look at Adobe and say, okay, Adobe's going to be challenged with some of their existing products by the introduction of content that's created off generative AI. But I also think you have to be aware that there might be a bottoming process that's unfolding for software. And Datadog is an example of a software company that, yes, is participating in the growth of AI.
alright, I'm going to let you guys know I might end up going short on GameStop if we cannot get up through that 23 level. I'll let you guys know if I do. I might end up, I might end this live stream a little early. Let's see if you can pick yourself up here. Just don't know if it wants to. I think it's going to get interesting.
The element that's monitoring, doing cloud-based monitoring of all the applications, and that's going to be incredibly important in terms of usage from the enterprise community.
Yeah, it seems like the perception of software has changed, and I actually had the opportunity to speak with the CEO of C3 AI on Worldwide Exchange earlier. He said there was a thought, it seems in the investor community, that enterprise AI would replace enterprise software. He says that's not the case. They actually work together.
And keep in mind, you know, this is a company that we have in the ETF. About a month ago, I talked about it on air, and I said, personally, I'd rather buy the stock on a breakout towards 120, 125. I bought it last week. That's, in fact, what's happened here. You're beginning to see price break out above its critical moving averages. I think that's significant when you combine it with the fundamentals that I've already elaborated on.
All right, back to Bank of America's list. We're going to go to their next pick. Union Pacific, that's another top idea. Jim, you own this one.
Yeah, this one's been a little bit difficult. I mean, it's had some good spurts here, but recently it's been on a downtrend. Ultimately, I think it's relatively fairly priced. So for the stock to move, the earnings need to come in better than expectations. At roughly 18 times forward earnings, PEG ratio of 1.7, you need earnings expectations to be beaten. We will see if that happens. It's not going to come from fuel. It's going to come from pricing. And in a reasonably strong economy, they may well get that pricing.
I want to ask you about this one. You know, this is in my wheelhouse. I cover Union Pacific and the transports. This being the top pick was a bit confusing. Union Pacific's heavily levered to that Asia-Pacific trade. At the same time, we're seeing a massive reshoring effort. I was just looking at the most recent stats. Foreign direct investment in Mexico, $38 billion year to date, 35% higher. 50% of that's coming from the U.S., more than 50% of its manufacturing. Doesn't that hurt the pricing power of Union Pacific down the line?
Well, it depends on what carloads you're talking about. You know, when you started, you were talking about Asia Pacific, and immediately I thought about intermodals. Now, look, you can look at the goods recession that's going on in this economy and say intermodal pricing ain't doing so well.
Right.
However, as you also alluded to, the CapEx that's going on, Frank, in America, all this factory building, requires aggregate material to be transported. You know, you think about, gravel, you think about steel, all this stuff needs to be transported, and that's where the pricing can come through.
All right, one more off the list. Goldman Sachs added to Bank of America's list. Weiss, you on this one?
I do, and it's the same story that I've been talking about, which is that a premier investment bank and asset manager, I don't think people realize how much they have in private equity under the roof. And that's nice fee-driven, but as the equity markets continue to move higher, this is part of my, not that I need a hedge on, because I'm not bearish. In fact, I'm pretty fully.
What he's not saying is that they don't have risk to real estate like others do in apartment buildings. That's what he's leaving out.
Investors look to allocate to that IPO and secondary pipeline, and as private equity firms look for exits, and as M&A with rates coming down increase, Goldman's in a sweet spot. So, look, I think you've got great management there. I've said that repeatedly. It's my preferred holding in the group.
All right, speaking of financials, Jim, you bought some more Citigroup. This is a stock that you had to defend a bit.
Well, yeah, thankfully the last 9 months or so, Frank, it's been good. But before that, it's been just an absolute dog. I think before the last 9 months, the market really was not giving Jane Fraser any benefit of the doubt on her turnaround plan. That's understandable after many CEOs preceding her did not do anything to turn around the company. But it's clear that she's doing a good job. The job is not over. We'll see in earnings next week how expense management is coming under control. But importantly, last week, you got the stress tests. And Citigroup is only just a slightly raising its dividend because they already have a high dividend yield. But what they're going to do is be buying back shares like crazy. They're going to shrink that share count, which, by the way, has shrunk by 35% over the last 10 years. So I see the earnings power going up on expense control, and I see my portion, my ratio of it, even going up more as more shares are bought back.
With Steve on Goldman Sachs, JP Morgan on pace for a record close today.
Oh, there we go. All right, we're going to move on. Tesla. Wells Fargo adding the stock to its tactical ideas list with an underweight rating and a price target of 120. The firm expects shares to get hit this quarter on lower demand and margins. Let's bring in a shareholder and a halftime committee member, Bill Baruch. Bill, good afternoon. You're buying more.
Hey. Yeah, thanks for having me. I was buying this and accumulating last week around the 195, 197 area. It's actually one of my top ideas here and to start in through quarter three. I think Wells Fargo's on their note here is wrong. I think what Joe and I last year on the show talked about Tesla trades like a commodity. I think the perception here, everything that Wells Fargo cited in their note is being priced in already. Look at China right now. They're talking about record sales over the weekend, and that's what's catapulted this stock out above 200. So if you're looking at this right now and the fact that it's run a bit today, we may settle in around 197 to 200, and I plan on accumulating more. But I also look at this into the August 8th robotaxi unveiling, and I think there's a lot of value. that we could see, because typically July is a slower month for semiconductors. And if semiconductors are not going to perform right now, people are going to look for things that are outperforming. And that's where the perception and trading like a commodity and positioning can be here as a strength for Tesla. And I think that could 220 would be my first target. And then we look at 235 to 250 from there.
All right, so Bill, obviously Tesla having a huge day today, shares up more than 6.
I kind of want to go short, but I might have to do it. I might have to try to take this back down to try to break VWAP. Let's do it. Fuck, man. This is
about 410 to
being so late.
Actually, Tesla, we do not own in the ETF. We've owned it in the past. It's obviously making a very strong technical breakout.
Let me log in real quick. Now I'm scared to death that it put me in a video, but I made sure that I backed out of that order. I don't even know what that is. I don't even think he does. The funny thing is like, he doesn't put any plans together. I've done this. I put this plan together. Bro, you didn't even make your damn bed. That motherfucker is so fucking stupid. He's just shitting in his pants and doesn't even know it. He's done. He needs to retire and sit back and collect on all the money he done stole from the world. Didn't really, all the deals he made to get all that inside money, and just sit in your house that's in Dewey Beach and just wait for mother time, whatever you call it, to stop ticking until that day is up. You know, here's the thing, is like, I hate to be, like, I don't want to, like, be against, like, my own country's president, but Obama and Biden, I do not trust them. I don't trust them. I think they make stupid decisions. You know, like, it's just the half backwardsness of, you know, a lot of their stuff. Just high regulation, which costs small business, it costs everybody else money, and it's a lot, and it just has its effects. Higher taxes, higher regulation, choices that they can do but other companies and businesses can't. Like, I want businesses to thrive, and they don't with these people. Alright, so I'm thinking about going short game. GME. Okay, so hold up. So here's the 50-day moving average did come in as a area that acted as support. Hold on. Let's see.
To get waived installation at no interest and no payments for up to 1 year.
My boss said, Joe, it's not about just a paycheck. It's about your dignity.
That's 800-990-6845. Now. Did you ever worry we wouldn't get to
Well, I hope you got a whole lot of dignity when your ass sitting out on the curb when that job ain't paying you enough. So I don't think his dad ever said that. I think he just made that shit up. Just like, I don't mean to keep it on this topic, but this burden shit. Kamala Burden. What was? Doesn't even make no goddamn sense.
We're back on the halftime report now to Mr. Bob Pisani with today's ETF Edge. Bob, Frank, good to see you. Tariffs and bringing back more jobs to the United States.
Kamala Diddy party smoking crack and throwing people behind bars. Harris.
Moritz Pot is CEO and founder of CHWY, an investment management company that runs the American Reshoring ETF. RSHO is the symbol. They invest in industrial and infrastructure companies at the heart of American manufacturing and reindustrialization. Moritz, tell us what's in this ETF. How is this election driving this particular thing?
I love Tulsi Gabbard. I'm not even going to lie.
Is really at the heart of reindustrialization and reshoring of supply chains back to America. Bring jobs, bring manufacturing, bring innovation back to shores. It's led by a number of factors: supply chain dislocation, deglobalization, and also price inefficiencies. We think this is a major trend, and in the election,
What is this?
people focus on jobs, people focus on the big acts, the IRA
Look
Act,
at him.
CHIPS Act. These are hotly contested, and reshoring features at the center of these matters.
Burdened by what was? I just want y'all to hear it. So anyway, she's talking about herself when she talks about that. How she spent her life throwing the community behind bars. Not that they, didn't make decisions for themselves, but when the governor runs all the top companies out in this country out of his state, and then you have no real employer to do the employing, things can go south real quick. That's what happens when you just think raising taxes is the answer. And I don't think and it's a fact, you don't have to raise taxes. We are a consumer country, and allow people to get their money and spend it. Some will, some won't. Majority of people will spend their check. I'm gonna tell you all that right now. Ask me how I know. Am I one of them? No. I gotta be like, I'm gonna beat the brakes off of whatever it is before I go buying something. Because I would much rather be able to get to a point where I could have that 15-20% and try to get an apartment, try to get some type of some type of real estate, that even if I had some other people to go in with me that had some money.
Focusing on areas with lower side effects, focusing on areas of lower dosage, non-injectables, orals. So we think of Amgen focusing on lower dosage.
Alright, so let's see, 230.23.
Also cover beyond the two disciplines. In addition to the existing two, focusing on areas with lower side effects, focusing on areas of lower dosage, non-injectables, orals. So we think of Amgen focusing on lower dosage. We think of Alnylam taking a genetics approach to obesity. So really trying to also cover beyond the two existing players, what are the next generation players? And how are they maybe going to win in areas where the two biggest players are not already operating?
Okay, we're going to have a lot more coming up on the reshoring trends. We'll be talking about that and the election and the status of weight loss drugs. That's coming up on ETF Edge. That's 1:10 p.m. Eastern Time. Also joining Moritz is Todd Sohn from Strategas. ETFEdge.cnbc.com. Frank, back to you.
Bob, thank you very much. All right, coming up, energy in the second half. The sector is among the biggest laggards this past quarter. How the committee is navigating the trade. That's coming up next on Halftime.
Watch what happens up here. So the Qs are not there yet.
On a $100,000 margin loan, Interactive Brokers charges just 6.83%. Do you know how much your broker charges? Fidelity and Schwab charge over 1.5 times as much. E-Trade and TD Ameritrade are even higher. Move your account to Interactive Brokers and save at least $5,200, or much more if you're trading big bucks.
And we are back on halftime. The energy sector coming off its third straight month of declines, but strong demand and a sector rotation, it could make this a winning trade in the second half. Our Pippa Stevens joins us now with a look at what we could expect. Pippa, good afternoon.
Hey, Frank. Well, enthusiasm for energy stocks really petering out since the sector hit a record high back in April, and more than half the group is now trading in correction or bear market territory. Now, part of that is thanks to a lack of upside catalysts, with oil trading sideways and nat gas tumbling. Still, Global X's Rohan Reddy saying the group offers high cash flow supported dividends and is a natural hedge against a potential oil shock later in the year. Plus, energy stocks have lagged oil itself this year, meaning there is a catch-up opportunity. Now, in terms of looking forward, Kinder Morgan, Occidental, Hess, and Conoco have the richest valuations according to CNBC Pro's stock screener tool. On the flip side, APA, Devon, Halliburton, and Marathon trade at the biggest discount. And when it comes to Wall Street's top picks, Halliburton, APA, Coterra, and Conoco have the largest upside based on average price targets. Now, the refiners are also one area to watch. They've underperformed the last few months, but any pickup in gasoline demand could be a big tailwind. Frank?
All right, Pippa, thank you very much. Our Pippa Stevens live at CNBC HQ. I want to turn to you guys. Liz, I'm going to start off with you. What's your outlook on energy? We're talking about possible rotation over to energy.
Yeah, look, I think there's a lot of reasons to like energy, much of which Pippa already outlined. A couple others, if you just look at valuation, and if a rotation is underway based on valuation, energy stocks are relatively very attractive from that perspective. Secondly, in the second half of the year, if we expect the Fed to start cutting rates, that means there's likely to be a drop in the 2-year yield, a re-steepening of the yield curve. Energy stocks pay a healthy dividend, and they are one of the sectors that tend to do well in that environment. Lastly, more near term, we are in summer, we are in driving season. Oil prices have not really reacted as much as maybe people would have expected. There's always a possibility of an oil price shock. There's always a possibility of oil prices driving higher as cyclicality picks back up, or as investors believe that cyclicality is coming back into play.
Yeah, by the way, energy coming off its best week since April. Joe, you got so much energy ownership. I'm not going to read all the names.
No need to do that. Rainy day yesterday, so in the office watching the Florida Panthers Stanley Cup celebration. Congratulations to our friends there. And you know what? energy has actually performed a lot better than we're giving it credit so far year to date. If you look at the top 4 sectors in the S&P, we know communication services, technology right up there, but then it's financial and energy. Energy is actually outperforming utilities. So far year to date, crude oil is up 20%. Actually, reformulated gas is up 20%. Crude oil is up 15%. Natural gas basically unchanged. You've got a lot of energy companies that are performing really well. ExxonMobil, Diamondback, ticker symbol FANG. Jimmy, I know you like Marathon Petroleum. That's worked well. Valero, which just gave out a dividend. So you're in an environment, crude oil, the range is 69 to 87. I think from a positioning perspective, it speaks well for the potential for energy to do well in the second half of the year because you've seen a reduction in net longs as it relates to the bullishness that we entered 2024.
All right, coming up next, we have Mike Santoli standing by with his midday word. Halftime back right after this.
SUED.com.
And we are back on the Halftime Report. Senior markets commentator Mike Santoli joins us now with his midday word. Hey, Mike.
Hey, Frank. Yeah, interesting offsetting currents as we often have in the markets here between that Treasury yield move, which is definitely, I think, keeping a lot of the market in check. And we've benefited from some benign inflation readings. Economic numbers have been more soft than not recently. And yet we do have, whether it's the fiscal story reviving or whatever, yields on the upside. But it really has not necessarily fully counteracted this general upward drift. We have, everybody has been saying, generally positive seasonal factors going into the first couple of weeks of July. And you know, a few big caps doing what they're doing today, such as Apple, has been enough. But I do find it interesting that we're going to have to pay more attention, I think, to what's happening with bonds.
And also that you believe that the reactions to some of these early earnings reports have been a bit hostile and expectations are just through the roof. Goldman out saying they expect 9% earnings growth in Q2. Is that good enough to keep this going?
Yeah, that's going to be the big question, I would say, over the next few weeks. I mean, it's understandable that expectations are high. Earnings estimates have really held in very well for the second quarter. And, you know, you trade above 21 times earnings because people expect earnings to follow through, right? Markets generally lead fundamentals. And so that has to actually happen right here. We're a couple of weeks from when that really comes to the fore, but I do think that's something we have to be mindful of.
All right, Mike Santoli with his midday word. Good to see you, Mike. Stay with Halftime. We got our final trades coming up right after this break.
What are you waiting for?
NASDAQ.
And we are back on the halftime report. Time for final trades. Jim, you're up first.
Yeah, Oracle, I continue to find this a very attractively priced way to play the AI trade.
Oh, short and sweet. Liz.
Energy, for all the reasons I mentioned before, but I'll reiterate: dividends, yield curve environment, valuation, cyclicality.
Steve Weiss.
that was very, that was great.
Expressive?
All very expressive. That's what I was looking for. ASML, that was announced today by Taiwan Semi. They're going to spend $12 billion on their EUV machines. I just think ASML is a huge pipeline, 20-month wait list. I want to own this one.
Joe, last word.
Financial sector, Interactive Brokers. It's probably one of the better names you could own right now. Look for it to break out to another new all-time high.
All right, that's going to do it for us here on halftime. NASDAQ, by the way, hitting its session highs right now, or pretty close to it. The exchange starts right now.
Thank you very much, Frank, and welcome to The Exchange. I'm Kelly Evans. Stocks are mixed on the first trading day of the second half. The majors have posted a monthly gain in July every year for the past decade. Should bode well. And our strategist just hiked his year-end S&P target to 5,700 today. He'll tell us where he's putting money to work. Meanwhile, the manufacturing data showing a jobs divide. S&P Global reporting the fastest employment increase in nearly 2 years, but the ISM saw a drop in its gauge. And Goldman Sachs notes potential for slight upside risk to the unemployment rate in Friday's jobs report. Is the Fed's focus about to shift away from inflation and to the labor market? We'll discuss. Plus, the Supreme Court handing down a decision in former President Trump's election interference case stemming from January 6th, ruling a president has immunity for official acts, but no immunity for unofficial ones. Markets taking it as a positive for his election odds, with the yield curve steepening. We'll dig into it. First, let's get today's numbers, though. As you just heard, the Dow was up 320 points at the highs. We're up just about 0.1% now, as the NASDAQ, which started the day in the red, is outperforming, leading the way with a 0.2% gain. Now, this is all despite this climb in yields. Treasury yields are higher across the board. Rick Santelli noting the yield curve steepening after that Trump-related SCOTUS decision. You can see the 2-10 spread behind me there, kind of reaching a peak, up sharply over the past week as Trump's odds for retaking the White House climb, while President Biden's have fallen over the past week. You can see the predicted odds there. And check out shares of CHWY giving up earlier gains after meme stock trader Keith Gill, a.k.a. Roaring Kitty, disclosed a near 7% stake. He's now CHWY's third largest shareholder. He alluded to the position last Thursday with that picture of a cartoon dog on X. The shares were up on that news as much as 34%, but finished that day lower. They're down 5% now and overall down about 12% since then. Now, let's dig further into that June manufacturing data. S&P Global reporting business confidence hitting 19-month low, while the ISM index came in at 48.5, missing street estimates and further in contraction. Both also showed easing inflation, with ISM's selling prices increasing at their slowest pace so far this year. And one of my next guests says that helps set the Fed up for a September rate cut. Joining me now is Kathy Bus-Jancic, chief economist at Nationwide, and Jim Caron, chief investment officer of Morgan Stanley Investment Management. Also, our own Steve Leisman, who is the only one who didn't work at Merrill back in the day. So it's great to have you guys all here. Steve, just quickly, because there was a lot to digest this morning, what's the main takeaway?
Well, I think the takeaway is we still have weakness in manufacturing, and the extent to which the government is out there helping promote the manufacturing sector with some of the programs from the Biden administration, it's only sort of just barely offsetting what's going on in the private sector. Clearly, I think that high interest rates are starting to bite into the manufacturing sector. Along with the big takeaway, though, was maybe the prices. And I brought along a chart for you, Kelly, which looks at how the ISM price index does a pretty good job of leading by about 4 or 5 months what's going to happen with the goods section of the PCE. So it's okay. It goes along there, and maybe that suggests either continued stable and low goods inflation or disinflation in that sense, or maybe even heading lower. I'll leave it there.
Okay. So, Kathy, pick up on that. That paves the way for a September cut?
Yeah, we see signs, and the ISM report was just further evidence of that, of economic growth moderating and inflation as well. And that overall slowing in growth, that's welcomed to a degree, like as long as it's just taking the froth out of activity. And if we're correct that inflation continues to trend lower, and I think particularly on the service side of inflation, it's been sticky. We know the good side has been overall economic activity softer, and inflation is actually in deflationary territory. But if we could see some of the heat come out of the service side on inflation, I think it leaves the door open for the Fed to start cutting rates in September and get 50 basis points of rate cuts in by the end of the year.
Jim, do you agree with that?
Yeah, listen, I mean, I think, Kathy's, nailing it, right on. I mean, look, lower inflation, if we do get it, it opens the door for Fed rate cuts. And when I think about the markets, it's a question of is good news or is bad news bad news? And right now, it seems like bad news is good news, meaning that if we are having a slowing in the economy, and if that does lead to lower inflation, well, that's good because it opens the door for Fed rate cuts. But at some point, this potential rise in unemployment or potential slowing of the economy that weakens employment, that effectively could bite into consumption. And right now, companies have had the wind at their back that they've been able to raise prices to maintain margins. But if the unemployment rate starts to rise and if the economy starts to slow fast enough, then companies are not going to be able to do that, and that could actually start to put some downward pressure on the broader parts of the markets. And we're already seeing that. I mean, the broader segments of the markets are slightly higher, but not anything great. We know it's 10 stocks that are driving, the majority of the market. So for them, it might be okay. But I get a little bit concerned that bad news may become bad news at some point in the second half of the year.
Are you the strategist that just raised your price target to 5,700? Because I didn't think you were a price target kind of guy.
No, I'm not a price target kind of guy. No targets for me. What I'm thinking is that, when I looked at 2025 earnings, if I just let's take 2024 out of the equation. If we're looking at earnings around $275, $277, which represents a really good growth rate in earnings growth, and you multiply that times about a 19.7 or 20 PE, you're going to get levels in the equity markets about where they are today. So I think this is about where we're supposed to be in a relatively optimistic scenario. If we start to get a setback, unemployment rate rises, you get a pinch in consumption, margins start to fall, there is some downside scope to this. I don't think I'm still optimistic. I'm still I'm still bullish, on the market, but caution is warranted.
Steve, do you think they're going to start paving the way for a September cut here?
I think the data has been in line with it. I mean, I'm trying to think of, when you hear the train schedule, they tell you that the trains are running on or close to schedule. I think that the decline in inflation is running on or close, even a little bit ahead of schedule. Remember, the Fed's got 2.8, that's the median forecast, so not everybody's on board with that. But as 2.8 as the median forecast for the committee for the end of the year, we're running at 2.6. And I just want to pick up on what Jim was talking about. I've not done yet my deep dive on the jobs report for Friday. I'm going to wait for ADP. I'll probably read Kathy's piece as well. But one thing that came out over the weekend, which I read, is from UKG, which is a private sector software human resource company. They say, we see the labor market cool as the summer heated up with workforce activity completely flat in June. No particular points of weakness, but also no particular points of strength.
No particular points of weakness, so we're kind of in this middle ground, Kathy, and there are some who say the Fed needs to cut to kind of keep the expansion going. Are you one of them?
I am. I think, I think Jim and Steve make, really good points. The risks are to the downside for economic activity. We know that interest rates are having an impact, right? And it has in the housing market. It's completely stalled the existing home market. And we know business investment has been dampened greatly because of it. So they still have an impact. And now maybe we're starting to see consumers start to feel the weight of that because they've run through the $2 trillion worth of pent up, pandemic-related savings. So I think we're at this really interesting point now that consumer spending's aligned with employment and income growth, current income growth. They can't rely on the savings. They've run that down. In fact, we saw Friday the savings rate actually increase. So that's interesting. Consumers are already shifting to a more cautious stance. So I think there are downside risks here. And the Fed, if they don't cut rates, I think they risk being too restrictive for too long of a period.
Steve?
Yeah, real quick, I just wanted to report that the Atlanta Fed brought their GDP now down to 1.7%, much more in line with the rest of the street. They had been running as high as 4 at the beginning of the quarter. They had been at 2.2 before this latest adjustment. Now they're down at 1.7, which is, call it at or just a little bit below potential.
Jim, are you surprised that manufacturing has failed to go back into positive territory by now? I think a lot of people thought we were going to kind of hit a nadir, be back in positive territory. It's a great leading indicator for markets, for the economy, but it just remains mired in contraction.
Yeah, exactly. Look, I mean, I think this is a lot about inventories being built up, and it's like, you know, where is the cyclical, where is the broadening of the recovery? If that's not coming through, then I don't think you're going to see manufacturing pick up meaningfully. I don't think it collapses, but I don't think it picks up meaningfully. But Kelly, if I take this conversation a step further and I think about this, I really see this as the inflection point right now between inflation and unemployment. So for the first half of this year, we've been worried about, is inflation coming down? Will it come down enough to make the Fed comfortable to cut interest rates? I think we're making good progress on inflation. I think that's actually happening. But now the concern is going to shift towards the unemployment rate. It's going to shift towards the job situation. One of the magical things that for the first half of this year has been that jobs have been good. Jobs have been strong, and that's kept demand up, and that's kept margins and equity prices higher, and that certainly has been helpful. But if now the narrative is flipping towards, okay, inflation's old news, we think that's kind of under control at this point, now we need to worry about the unemployment rate. If that's starting to trend higher, I think that starts to become a bit of a headwind, and I think that's what we need to be worried about for the second half of the year.
You're exactly right, and here comes the train right on time. Goldman writing last night that worker flows suggest slight upside risks to the unemployment rate. Steve, I'll give you a quick last word.
You know, Mary Daly has talked about this. A couple other committee members have talked about what Kathy's talking about, which is the idea that risk to the downside. Daly puts it very gingerly, says they're worth watching. Maybe others are a little bit more concerned. What we need to see here, somebody said to me that I wrote this email to this person I said, well, here's the reasons the Fed should cut. And they all made sense based upon the inflation data. And the person wrote back, yeah, missing everything but a 0 or 100,000 on the employment report. So if Kathy's right, if some of these other indicators are right, and the Fed does get actual weakness in employment, that could actually seal the deal or even move up the calendar for rate cuts.
I see Jim nodding, but it still would be nice if maybe they could adjust policy before we get to that point of zeros or negatives. In any case, we'll leave it there. Thank you all. Really appreciate it today. Our Steve Leisman, Jim Karen, and Kathy Busjancic. Meanwhile, French stocks are rallying in the wake of the first round of parliamentary elections, as President Macron's controversial call for a snap election appears to be backfiring on his centrist party. Our Seema Modi has the details and the fallout for investors. Seema.
Kelly, financial markets getting a little relief after the latest data shows far-right leader Marine Le Pen winning but lacking an outright majority. We saw French stocks bouncing back but off the best levels of the day, and the euro hitting 107 against the dollar. More importantly, the premium that investors demand to hold French debt, that has come down, though just slightly. It's still elevated. Jefferies' European team writes that markets are still particularly worried about the fiscal implications of a far-right win and how Le Pen's party will manage France's budget deficit, which came in at 5.5% last year, and its debt picture currently at 111% of GDP. They also add that Le Pen has pledged to vote down clean energy policy, so that's starting to be priced into the market. We saw construction and energy stocks higher on the day, including Voltalia and Esso. Macquarie analysts say a weaker currency, a weaker euro, that could be good news, though, for the German industrial exporters, including the automotive names. Those stocks also ending higher on the day. They are betting that the euro will trade at 108 against the dollar by year end. And remember, the last time the euro traded in parity with the dollar, Kelly, was in the fall of 2022. The focus now turns to that second round of elections coming this week. In fact, many experts, Kelly, have been telling us don't put too much into this first round. There's still a lot of data we need to get that crystallized picture of what's happening there.
Where else should we be looking for macro impacts, Seema?
Tomorrow is the Eurozone inflation data, where expectations are that inflation continues to come lower at 2.3 versus the 2.6 Europe was at last month. So that will certainly be the guiding factor here. Is this the role of the European Central Bank, which, as you know, has already cut rates before the Fed? Can they continue to? Right now, the market is anticipating one more rate cut from the ECB in September. So that will be key. And we'll see how the central bank, if at all, responds to the political uncertainty, addresses it, I should say.
Absolutely. Seema, thank you very much. Seema Modi. Coming up, Bitcoin is rebounding from its worst week since March, but the crypto industry as a whole actually had a big week in Washington. We'll talk to Coinbase's chief policy officer about that next. But first, President Biden is in the midst of a fundraising blitz after Thursday's debate, and the Supreme Court ruling on President Trump's high-stakes immunity case. We'll break it down from D.C. and get implications for November and for markets. The Exchange is back after this.
This is The Exchange on CNBC.
Welcome back to The Exchange. Talk about whiplash in Washington, from Thursday night's historic presidential debate to the Supreme Court striking down Chevron Friday morning. We've got more news out of both the executive and judicial branches that could have a major impact on the election and the economy. And we have team coverage inside the Beltway. Eamon Javers is digging through the Supreme Court decision on former President Trump's immunity case. And Megan Casella is tracking President Biden's post-debate fundraising blitz. Eamon, let's start with you.
Kelly, the Supreme Court ruled on partisan lines this morning that former presidents have legal immunity from prosecution for official acts conducted while in office. The decision likely severely damages the special counsel's ability to prosecute his case against Trump for the former president's conduct in the run-up to the January 6th insurrection on Capitol Hill, and it sets a precedent that may usher in sweeping changes to the American presidency itself. The majority opinion, written by Chief Justice John Roberts, said, "We conclude that under our constitutional structure of separated powers. The nature of presidential power requires that a former president have some immunity from criminal prosecution for official acts during his tenure in office. Liberal justices on the losing side of the ruling weighed in with scathing dissents of their own, including Justice Sotomayor, who wrote of the president, when he uses his official powers in any way, under the majority's reasoning, he now will be insulated from criminal prosecution. Orders the Navy's SEAL Team 6 to assassinate a political rival, immune. Organizes a military coup to hold on to power, immune. Takes a bribe in exchange for a pardon, immune, 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 immune. The former president welcomed the ruling in his favor, writing on social media that he is proud to be an American and saying today's historic decision by the Supreme Court should end all of crooked Joe Biden's witch hunts against me. One person we've not heard from yet is Special Counsel Jack Smith himself. He now faces significant questions about how to proceed in his case against the former president. Unclear where all of that is going to land, but clearly some legal dust has to settle here before all sides can move on. Kelly, back over to you.
Eamon, quickly before we move on, how did the majority anticipate the criticism from Sotomayor and address it if they did?
Well, you saw John Roberts writing to that in the case here, saying that some of the dissents from the liberal justices were sort of overwrought, suggesting that their responses were out of scale with what it was that the Supreme Court is saying today. Clearly, Sotomayor, Jackson, and others, did not feel that way.
Elsewhere, Eamon, a big day for the court. It wasn't just that decision. There was more. What else came down?
That's right. Not just this one. In a pair of important social media cases, the justices sent a set of state laws back to lower courts this morning, arguing that companies have a First Amendment right to determine the rules for content on their services. And in a further blow to the federal government's regulatory authority after what we saw last week, the court held today by a 6-3 margin that a business can sue the government over regulation on debit card swipe fees, even though the deadline for lawsuits on that had expired. Now, that likely opens federal agencies to a slew of lawsuits challenging older regulations that are on the books. So a further blow to regulatory agencies in Washington from this Supreme Court this week, Kelly.
An area they have perhaps been the most aggressive. Eamon, right. Thanks so much. We appreciate it. Eamon Javers. Let's get over to Megan now with a look at President Biden's post-debate fundraising numbers. Megan Casella, what can you tell us?
Hey, Kelly, the Biden campaign is really looking to fundraise its way past the Thursday debate that prompted calls from some Democrats for Biden to step aside. The campaign says it raised $33 million Thursday through Saturday, with $26 million coming from the grassroots. Officials said Thursday and Friday were their two best days ever for small dollar fundraising. Biden also spent the weekend at fundraising trying to reassure his wealthy donors that he was doing all right. I spoke with one attendee who described the mood as concerned enthusiasm, while another source said the debate was a, quote, cold shower shock for Democrats about the state of the race, with some people now more engaged because they're more worried about losing than they were before Thursday. The best news for Biden right now is that some of his biggest donors are sticking with him and with the party. LinkedIn co-founder Reid Hoffman and his donor advisor Dimitri Melhorn have both been arguing against replacing Biden in recent days. Melhorn told us he's reminding donors that they have a choice between what he called an old but wise candidate with a strong team or one he called corrupt and self-interested.
If they haven't already decided, they're reluctant and a little bit of, double doubt and not sure if they even want to get involved. And you have to bring them into the conversation by reminding them that it is going to be one of these two. And so how do they feel about that?
In a sign, Kelly, that some jitters do remain, the Biden campaign will be holding a call with donors this evening to make the case that Biden is still the one to beat Trump. Kelly?
All right, Megan, thank you very much. Megan Casella. Speaking of fundraising, one key source in down ballot races has been the crypto industry. 4 companies, including Coinbase, contributing $155 million to the pro-crypto super PAC Fair Shake. And the war chest seems to be working, with 33 of 35 Fair Shake-backed candidates winning their recent primary elections. Joining us to discuss what's next for crypto candidates is Faryar Shirzad. He's Coinbase's chief policy officer. Faryar, welcome.
Thanks, Kelly. Good to be here.
Let me just dive. What do you think is significant in this electoral cycle about crypto that has the industry so emboldened to make sure that their agenda, whatever that might look like, gets implemented?
Well, there are 52 million Americans who own crypto, and ultimately they've deserved to have a seat at the table. And what we've been able to do as an industry is to create the tools for them to have that seat, be heard, and be a part of the process. And we're pretty excited about the progress that we've made. We've seen candidates up and down the ballot embrace crypto and kind of find their voice on the issue, and that's been very, very gratifying.
And yet you're focusing mostly on congressional races, if I'm not mistaken. No money from Fairshake is intended to be spent on the presidential election?
The focus for Fairshake at the moment is the congressional races. Obviously, we've given them funding. They operate independently, so they'll have to make decisions in terms of how they deploy the funds. But their focus is very much on returning a more pro-innovation, pro-crypto, pro-economic freedom Congress next.
Joe, you did such a great job. You answered every question. You knew all the... And let me ask the crowd, what did Trump do? Why?
That's a damn man.
Joe,
I don't care what you tell me. She got a dick under there. I'm telling you. Why? Holy shit. She's old too. Holy shit. Oh my god. You can't. Oh my god.
Did you see Trump last night? I mean it sincerely, the most lies told in a single debate. He lied about the great economy he created. He lied about the pandemic he botched. And then his biggest...
Listen, hold on. Hold the phone. Hold on. Hold the phone. Hold the phone. I can't even get through two of them.
Lie. He lied about how he had nothing to do with the insurrection on January 6th. We all saw with our own eyes.
We're going to walk down to the Capitol, and I'll be there with you.
We saw police being attacked, the Capitol being ransacked. He did not a single thing to stop it, nothing.
Nope.
Folks, I know I'm not a young man.
There's a difference, because Joe Biden is a politician who is against the people. It is not we the people with Joe Biden. It is we the politics and the poors.
I know how to do this job. I know right from wrong. I know how to tell the truth.
Listen. Hey, Anthony Scaramucci, push the narrative, all right? That when your tax dollars goes to who? And the Communist China Party won't let them do their job. So, okay. We no longer fund you. Biden's America? Ship them the money. I really don't understand. I really don't give a shit about January 6th. I'm just going to tell you the truth, because neither anyone that was in Washington that day was doing what they should have been done. If we want to start pointing fingers, like, let's be honest. Nancy Pelosi was going off. He was going off. I'm telling you, they all were. That is what we saw with our own eyes. Second, you're going to tell me that little blue line that just popped up did not make anybody think, and there wasn't not a single one for his? Please. No, I'm going to just go off. Because the market's not doing anything, so I'm just going to irate a bunch of people. This like guy like this and his beliefs are why we have been stuck in that rut that we were always in.
You can catch the Olympics, Kelly, on NBC and on Peacock as well. How great. Did you watch the hurdles last night? I watched the hurdles. I watched the women's 400-meter hurdle.
Oh, look.
There was some good stuff. World record in that one. That was great. Amazing. I love the golden.
You know what? Let me do this.
Coming up, Wolf Research's Chris Senek sees rate cuts on the horizon.
Whoa, 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 whoa. Whoa, 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 whoa. Whoa, 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 whoa.
Nike's performance lately has
God damn it.
It is yet another extraordinary.
All right, check this out. We might have a setup here. We might have a setup. Why does this not save? Stupid piece of shit. I don't want to be the one to short this, but I will if I have to. Just because I still feel like, you know, last week I'm saying in order to get some continuation out of this, you needed to get back to the 200-day moving average. But I'm wondering if the news is done, if this is like a buy the rumor, sell the news type of deal, and it very well could be. It could be. Oh my gosh, I got so much shit going on here. Fucking Saba. Alright, I'll let you guys know what I get into, what I decide to take, if I do take anything. I will say this, for anybody that's here, the NVIDIA, I'm going to watch for NVIDIA to sit up here. And if we just consolidate right in between this level, between the rest of the afternoon and tomorrow, then I would look for a breakout extension higher on NVIDIA. Some pretty serious volume that came in there though. I think you still have to watch out for 124. We still rejected the 20-day. There's a lot here. There's a lot here to really embrace. But I think that's the route I'd have to go. I think that's the route I'd have to go. Is if we just consolidate right through there. Look, this thing is still fucking playing.
Want the effects of Viagra, but faster? Meet Rose Sparks. They contain sildenafil and tadalafil, but Sparks dissolve under the tongue. Dissolvables work faster than old school pills. Connect with a medical provider at ro.co/sparks. You got guts! Tonight, real entrepreneurs, big ideas.
Hi, turkey butt.
I'm going to be on Shark Tank. Tonight, starting 8 Eastern, CNBC.
I mean, I'm just wondering when NVIDIA is going to try to make a move back to 132.
Welcome back. Between last week's debate and today's Supreme
I'd like to be there for it.
Valley is thinking more than ever about what another Trump presidency would mean for the tech industry. Let's get to Deirdre Bosa to break that down for today's Tech Check. Deirdre?
Hey, Kelly, call it a Trump tech basket. Trump said we benefit from a lighter touch when it comes to M&A intervention, a broader deregulatory agenda, and likely more China tariffs. A friendlier deal environment that can mean more strategic M&A.
What the fuck does China tariffs have to do with M&A? They just throw anything with his name. It's fucking ridiculous. It's a fucking lie. And it's nothing but it's nothing but, what do you call it? Hold on. I'm just so fucking tired of hearing it.
Social media, more of a wild card. TikTok ban, an obvious target in a Trump administration, but also some American names like Meta, Google, Snap. Remember, they are favorite punching bags of the former president, and he is now majority shareholder of his own social media competitor, DJT. There's still a lot of supporters here, Kelly, but ever since the debate performance last week, more and more have been trying to think about and face what another Trump term would mean for tax.
Right, and again, the valuations speak for themselves under the Biden administration the last 4 years.
I don't think many people have, bro. You know why? They're trying to think because they know what it means. We were already there. We were already in it. This isn't something that I don't understand. I really don't understand this fucking world and why they think it's okay to just regulate fucking steal, just act like pieces of shit anymore. That's okay. Keep suicide. Keep up the good work, America. Keep it up. Biggest epidemic of heroin. Drug addicted kids, teens, adults came under Obama. Started to get solved. It's because people started giving up. Suicide rates increased. Go ahead. I really don't understand how anybody could stand behind them. I really don't. After you know what they offer. That's it. They just steal. They want to raise your taxes and steal more so they can give it to them and their friends. That's it. And it's not okay. They don't try to save the United States any money. They don't try to run a country like it should. They just think they can spend whatever they want and then take whatever they want. Like, stop taking it so you don't have to worry about taking it from other people. How about that? Why not do that? Why not take in the revenue instead of borrowing it and then trying to come up with different ways to pay for it? Because, like, what do you need to consistently borrow for anyway? That's what I'm wondering. I don't understand. Like the $8 billion that they had for charging stations that aren't even up yet. Why is this on a 1 minute?
This bakery needs new equipment fast to keep up with demand, so they're going to OnDeck, the online lender.
We're going to be the leader in semiconductors. We're going to go with Intel. Fucking garbage ass company. Fucking garbage. Let's see. Let's see here. I'm debating on whether or not, like, I'm trying to figure out what it is that I'm going to do. Because we have ISM, and then we have Powell tomorrow. Baby, are you okay? Are you okay? Are you okay? I may try and go long NVIDIA down here at like 122.50, just so you guys know, and I might try to take that into tomorrow. I am a little nervous. I'm not gonna lie, I am a little nervous just because you have that 20-day there. I just don't want to come in with a gap down. That would be the worst. Do you know what I'm saying? Because you're vulnerable. You're vulnerable at that point if you can't take any profits off it going into the end of the day. So what I'll do is I'm going to see if I can get an opportunity to get long down here at like VWAP. I know you had to just undo yourself. Wait, hold on. I'm going to try to get long even though it's already down there. That was a long tail. That was actually pretty crazy.
Welcome back to the exchange. The 4th of July is historically the biggest beer drinking day of the year, but America's preferences are changing. People are still reaching for the SUDs. They're just opting for the non-alcoholic kind. Heineken's non-alcoholic beer segment is expanding rapidly, growing nearly 30% this year on top of last year's 30% growth already. Joining us to discuss is Maggie Tymony. She's the CEO of Heineken USA. Maggie, it's great to have you here. Welcome and happy early 4th.
Thank you so much, Kelly, and thank you for having me, and happy early 4th to you.
Thank you. So, okay, I've heard, people rave about, what's it, the Athletic? What's the non-alcoholic beer that's all the rage these days? Anyway, you would know better than me. This
Heineken 0.0, Kelly.
I'm sorry, yes, Heineken 0.0, right. This category is really taking it off, is it not?
Yes, it is. We are the pioneer of the category. We launched in January of 2018.
So what I'm doing right now is I'm watching this volume that's coming in to see. Dude, why do the cues look so much different than the SPY?
We don't shout enough about that from the rooftops, and that's why I'm here today, because we see more and more people opting for moderation, not instead of, but in addition to. So we see that 94% of non-alcoholic.
I would like to see the cues pull back to like 480 and see if we can hold 480 and then try to extend higher and maybe get to like 480, 250.
I'm like a 3, 4, 5% girl myself, but there's something about zero that I go, well, then why bother? I sort of lose the plot at that point, but other people are.
It might hold it here.
Maybe you guys can tell me, and other stock prices will show it better than I can say. That hard seltzer is kind of, I don't want to call it passe, but it's on the way out. It's time for something new, and I think that non-alcoholic beer, oddly enough, seems to be that thing.
Yeah, I think non-alcoholic beer is an enduring trend. People are looking for moderation. I mean, Kelly, if I go out for pizza with my boys who are 19 and 21 and I'm driving, but I feel like a beer with my pizza, I'll have a Heineken 0.0. Seltzers, the seltzer phenomena, and we see those horrible numbers this year and last year. I think that was aided by COVID, where consumers were more curious. They wanted to try new things. Now we see the immersion on ready-to-drink spirit cocktails. That's another trend. I don't want to say a fad because we don't know yet, but the non-alcoholic market, as not only Gen Z, but across all cohorts, are looking for another option, whether it be health and wellness, occasion-based. They want a quality, great-tasting product that doesn't have alcohol on those occasions where they don't want to drink alcohol.
I mean, I think we often should be thinking about this not as a beer substitute, but as a soda substitute. And that's the category where a lot of Americans have become so health conscious. They realize, why am I going to guzzle 40 grams of sugar with some, chemical product? And I guess, I do think a beer is kind of a more helpful organic option.
delivering, but it's compared to what benchmark. So typically, analysts tend to be a little too overconfident long term, and they get scared short term. They take estimates down. We haven't quite seen that this time, so it could be a little bit less upside this earnings season with this cycle. However, stepping back a little bit, taking a longer term view, companies generally are beating expectations. We may see a little bit less, magnitude of those beats, but we still see companies in pretty good shape. The economy is looking good, earnings generally growing, they're moving in the right direction. Tech stocks are that final piece, but so we're sort of pulling all these things together and looking forward to the kickoff of the big earnings season here in a week or two.
People, Mike, seem to widely believe two things. Number one, this is a real rally driven by earnings growth, expanding profit margins. But number two, that the summer often can make for some tough markets.
Absolutely. And I think feeding back into that is volatility. And you look at the VIX or the fear index, it's just, it's basically nowhere to be seen. It's as if investors % days, for example. So you're right, you are putting some pieces together for something that could be, maybe not as exciting as folks would hope. I know one way to think about it, it's 4th of July week coming up, people are going to be seeing fireworks. What are investors looking for? So the big pieces that are out there, the economy, that's nice, fireworks looking pretty good, earnings are pretty good. The last piece, the big finale, is really tech stocks and tech earnings. We haven't seen that yet. Investors are really waiting for that big finale, and that really could feed back into things. You mentioned the Intel disappointment years ago. The big AI-related tech stocks, that's going to be the big final piece investors are watching for the next couple of weeks.
We've spoken for 2 minutes, and I think for the first time in CNBC history, we have not mentioned the word interest rates or the Fed. Does the market have to have an interest rate cut to continue its march upward?
So a couple ways to handle that. I think it needs to be a cut at some point. There could also be a bit of a sort of the Fed saying it's going to be next time. It's going to be next time. There's the market is okay with anticipating something. If Jay Powell wakes up and says, "Forget it, we're done. Lock them in forever at high levels," that's a big problem. But I think Jay Powell's smart enough to keep just sort of easing that pain if he needs to delay the eventual.
Because that's what it feels like is happening here. Is that we keep not kicking the can. That's too harsh a metaphor and a terrible cliche to boot. But at any rate, we keep moving the ball down the field so that, but it is keeping the interest rate argument in the stew somewhere.
Agreed. And I think the flip side is, in the meantime, we're sitting here with relatively high interest rates. And what are companies doing? Oh, by the way, they're doing just fine. They're growing earnings and stocks are going up. So I think the situation is pretty good right now for companies, and they're able to handle a lot of the higher rates. However, the longer this drags out, or CFOs start to say, wait a minute, these rates are going to be high forever, and there could be a problem. But I think in the interim, as long as we're here, could be a few more months this year, maybe late this year, early next year, I think companies can handle that. And again, it's really that messaging and kind of finessing that for Jay Powell, that's going to be really critical in terms of the timing.
Mike, what do you make of the kind of general mood of the public here as its own gauge of euphoria and whatnot? So we have people broadly pessimistic and cautious about the broader economy, but very involved in the stock market. This morning, my handyman, I got talking to him, and he was bullish on Amazon, and he's bullish on Square, and he's got a whole trading setup for how he deals with oil as a sell signal for the S&P. And I'm just laughing. I mean, he was very sophisticated, and I've heard story after story after story like this the last couple of years. And even at a fundraising meeting the other night, instead of people asking how they could raise cash like usual to support this cause, they all said, well, what if we take trading profits? So how can it be that we have a public who's sort of pessimistic and conservative about the economy, very involved in the stock market, very sophisticated, almost making money in that way? What does all of this tell you, if anything?
Well, your analogy there of the handyman giving stock tips, my first reaction is, uh-oh, here we go, if it's that or the taxi cab driver, et cetera. However, I do think there's a bit of a difference between what people say and what they do. So if you look at consumer confidence numbers, they've been pretty bad for a while. That's what people are saying. What are they actually doing? Going out and buying stuff. And that's feeding back into companies, and profits are doing pretty well. So I think there's a bit of a divergence there about the way people are thinking and acting. In general, in terms of the big drivers of consumer sentiment, investor sentiment, generally it's incomes. Do you have a job or getting paid? Check the box, yes. And what does your balance sheet look like? What's the value of your home? What's the value of your stocks? That looks pretty good. So in general, I think that those are the big pieces supporting sentiment. So we'll see how that plays out.
The number from Chris Senek at Wolf Research last hour was $30 trillion is the increase in housing and stock market wealth in this country since 2019. That's a big number.
Absolutely. it's quite massive. It's almost hard to kind of comprehend. To be fair, a lot of that is concentrated in some of the bigger groups out there at the higher end. However, a lot of people, anybody on that auto enrollment for the 401k, they're seeing a piece of that is helping them. It's feeding back into broader investor sentiment, wants them to keep coming back and keep reinvesting. So that is helpful.
One of your picks is Amazon. Why?
So we like Amazon. I've noticed Amazon and Apple are both up today. I would be buying Amazon hand over fist over Apple in general. Both companies are okay, but taking a look at Amazon, they're both trading at kind of a similar multiple. We look at the growth of Amazon. This year, they're not going to cover off the ball. Even next year and the year after, 20, 25% growth, you're paying a sort of low 30s multiple for that. Also, what else is interesting there? They've got 3 growth drivers. You're not putting all your eggs in one basket. E-commerce is doing fine. They're kind of boosting margins there. Cloud computing, doing great there. And then you take a look at online ads. They've got 3 pieces of the puzzle doing quite well. Other tech companies are great. We own a lot of other ones, but Amazon's very compelling despite the move back up. We think you can continue to own it for a number of months or even years.
That's what my handyman said as well.
He was on Amazon.
He was bullish on Amazon. It was like his #1 pick more, so I feel like I'm talking to him again. It's bizarre.
Yeah, do you do electrical work? Mike Bailey, thanks, man.
I'll give you a call later on that one.
Yeah. We have some big moves in bond yields today. The 10-year especially reapproaching 450. Let's get out to Rick Santelli in Chicago for more. Rick.
Hi, Kelly. It's been a wild session for Treasury yields. Yields in general. Now, if you look at a 2-year and 10-year on one chart for the last 6 hours, what should jump out at you right towards the middle of that chart is the big drop in yields that occurred at 10 o'clock Eastern. That makes perfect sense. We had the PMIs, and the PMIs were weaker than expected, but especially prices paid. Prices paid moved from 57 to 52.1, and that definitely incited buying, pushing yields down. Well, that didn't live very long because right around 10:30 Eastern, we saw the Supreme Court hit the wires in terms of the immunity decision. And I hate to get political, but yields moved up then. Now, why would they do that? Well, there's a couple of reasons being talked about. One is that potentially could give us, and that would lead to higher deficits. I think it's so much more simple than that. Main Street definitely talk a whole lot more and write a whole lot more about debt and deficits with the Trump administration in the White House, especially considering the 2017 tax cut. So that indeed would be a motivation. Now, whether it actually politically happens or not almost doesn't matter. If you look at a 10-year right now, it's on pace for a 1-month high-yield close. You see on that chart that starts at the end of May. Other things happened today as well. The long end was leaning the way on those rates higher. Just look at the last 4 sessions on the 2-10 spread. It's basically gone from minus 50 to minus 29 basis points. A huge move. And if you open the chart up, should we stay at this level, that would be the least inverted in 2 months. Tyler, back to you.
Interesting analysis, Rick Santelli. As always, thank you. Well, the new CEO of Amazon Web Services hitting the ground running, looking to woo startups in need of cloud services. John Ford sat down with AWS CEO Matt Garman and has details. Next.
accountable for the last couple quarters. But if Mag 7 gives up or somehow surprises to the downside, earnings are at risk. I think everybody understands that. I don't think it's going to happen this quarter. And a lot of the AI enthusiasm, a lot of the earnings that have driven a lot of those stocks to this point, I don't think we're going to see huge cracks in it this quarter and probably not even next quarter. So when we're looking at earnings growth, no matter how frothy it seems, no matter how overly enthusiastic it seems, I still think we can pull it off for another quarter. And that's something that through summer, if we're talking about seasonality and we just have these almost optimistic feelings about the market, willing it to go higher, and then you have earnings that come in solid, they don't have to necessarily knock the cover off the ball, but if they come in solid and around expectations, I think investors are going to be pretty calm and pretty optimistic about the rest of the year.
Yeah, and again, this is David Costin from Goldman, and he's saying consensus per fax had up 9% year over year for Q2, which would mark the highest quarterly growth since Q4 2021. And I thought this bit was kind of interesting. So speaking to that Mag 7, in aggregate, the 6 largest stocks in S&P 500, Amazon, Apple, Alphabet, Meta, Microsoft, and NVIDIA are expected to grow Q2 EPS by 30% year over year, while the other 494 companies are seen posting 5% growth. I mean, that's highlighting exactly what you just said. And again, you said something interesting. I don't expect it to be in Q2, but it really is about Q3 guidance. And it really is about what a lot of their customers are doing on CapEx and whether they're monetizing the spend, right? And so again, we'll see that in the commentary and we'll see it in the guidance. And you better hope you don't see it in Q2 earnings, because that will be the sort of thing that takes the market lower. Liz, you brought some charts about seasonality. I think this is really important. And so as we head into the summer, you know, this week's a great example where there's some kind of important news, but when you have a week like this, where one of the days are closed right in the middle, and we saw this with Juneteenth a couple weeks ago, sometimes you can get some funky sort of action. I thought Friday afternoon was kind of interesting. There was a rebalancing and you saw some pretty interesting price action right into the close. And, you know, again, a summer Friday, oftentimes, you know, you can get some weird action. Throw some fundamental stuff in there, show some uncertainty about, I don't know, look at the way the dollar's moving, look at the way rates are moving. We're going to hit that. You know, you never know. I mean, the last thing that we haven't seen, we've seen plenty of volatility in commodities. We haven't seen equity market volatility. I suspect at some point that's going to come.
Yeah, well, one of the things that I don't think gets talked about enough is why that weird action tends to happen in summer. There's not as much volume. People are away, especially in the third quarter. When you take July and August into it, you get this period where you have low volume. And if you have even the tiniest little strange action, there's not enough people in the market that day to take up and smooth it out. So that's usually what happens in summer. I would expect that to happen this week. The seasonality stuff, I don't know which chart we sent first. So just pull one up and I'll start speaking to it. Okay, so the seasonality stuff that we sent is actually more about election years. And this in particular, this was in my mid-year outlook. That blue line on the top is this year, year to date. The other lines, the darker purple line is all years, and the magenta line is election years. So there's some seasonality. You hear about this a lot in commentary on TV, where in an election year, you tend to see some volatility in May, you tend to see volatility again in September, October, leading up to the election, and then this sort of relief when it's over. Here's the thing about this year. Look at that blue line, completely outside of the norm. We have totally bucked the trend. We didn't get volatility in May. We had a very strong May. We had volatility in April. So now you're hearing commentary about, well, are we just pulling this whole seasonality thing forward? Perhaps we are. What would that mean then? If you bring up the other chart, if we take it by month, what do months usually look like in the S&P? July is usually a pretty strong month. So the blue shaded part of this chart is all years. And then the magenta is just election years. So if you look at July on the left-hand side of this chart, July is usually pretty strong. I want to be clear that this is 2-week forward return. So if we're talking about today, this is what the return would be 14 days in the future. So July usually pretty strong. Look at that magenta line from early July up until August. Extra strong in election years. So what you might see in summer is, again, this wind at our backs from seasonality, not just because of regular seasonality, but seasonality from there being an election coming up. But then be wary of, look at what happens in September, election years that much more volatile as well. And that just happens to coincide with when we're expecting the first Fed cut. So I think August and September of this year are bound to be a little bit choppier than people are expecting.
Yeah, no doubt. Really quickly, let's just hit the NASDAQ 100, the QQQ here, because again, my view is that if some of that downward price action is going to happen. It's going to start here, and especially when we think about that narrowing of breadth. And it's interesting, from the highs in late March to its lows in April, the NASDAQ 100 sold off about 8%. Many of those big names that we talked about sold off a little bit more of that, but they've come back really hard. Look at the rally that, as of the highs last week, we're up about 18% in the NASDAQ 100. We know that those were powered by NVIDIA and Broadcom and Apple, which joined the party just a few weeks ago. Microsoft has obviously been making new highs. Amazon's at new highs. So again, I just kind of wanted to highlight that when you look at the NASDAQ 100, which is up nearly 18% on the year. And then the other point I'll just make is that let's throw up the Russell 2000 if they can, which is just totally flat, which helps, on the year, Liz, which helps make the case for a lack of breadth.
Yeah, the Russell 2000 thing, not even just a lack of breadth. I think it's a lack of being convinced that we're still expanding in an economy, and a lack of being convinced that growth is going to pick back up and support us. And maybe even a lack of being convinced that the labor market is going to stay strong. So when you look at the Russell 2000, it's that one thing, aside from the yield curve inversion, it's that one thing that even in broadening out environments, even with solid economic data, I continue to come back to and say something's still wrong here. There's still something going on in the market action that is saying we're not in the clear, right? There's still something that is up, particularly in the labor market. As we know, small caps make up about 60 to 70% of the US labor market. So this is definitely something to watch. Now, could it be that this time is different and this will be the one where if we rotate, it actually breaks out, it's durable, and we get the Tom Lee up 50?
Short this pop here. They're already fucking taking it. Shit. You have to watch 197.50. This is holding. Amazon is holding heavy right now. Oh my god. Holding this trade line. So you should expect it to continue to hold, but... Are you okay, baby? You worrying, Daddy? Are you just bored? Are you okay? You okay? Hi, baby. Hi, mama. Hi, baby. I know you're gonna hurt Daddy. You're gonna hurt me. Alright, so anyway, as I was saying, 196. I was looking for a pullback into 196. Alright, I was looking for a pullback into like 197, 196. VWAP is up there. This was a very low volume type of day on that push higher. Just practically had zero volume. Like literally. This is a nice consistent low volume push up. And you know what? You might even be able to get down to 194. I mean, honestly. 194 might be... I still haven't taken it. I'm sitting here telling y'all everything about this trade and what you guys can do to make some money for yourselves. I don't even think there's anybody even here, so fudge it. It's all good, because then I can just use this for myself anyway, worst case scenario. Alright, so let's see. Sell side volume is pretty weak. Oh. They used intimate images of me. You fucking retard.
The new California law took effect today, requiring bars and clubs to offer testing devices to protect people from spiked drinks. All 2,400 establishments in the state with licenses to sell beer, wine, and distilled spirits have to abide by the rule. Testing devices are required to be free or no more than wholesale cost. And the NBA League champions are up for sale. The ownership group of the Boston Celtics, led by billionaire Wyc Grousbeck, announced its intention today to sell all shares of the team.
Percent before the end of the year number, maybe, but I think we thought that the last 4 times that it tried to do so.
Yeah, no doubt.
What happened on a debate stage last week, which I don't want to get too far into, but there were things that happened on that debate stage, some good, some bad, most of them bad. And I think the market started to react to the possibility of inflationary forces that could be coming. But I think those inflationary forces still aren't even a story until 2025. So that's why you saw the 10-year move and the 2-year not move that much, because the 2-year tracks what we think the Fed will do. If we thought the Fed was going to hike rates in response to that, I think you would have seen a commensurate shift upward in the 2-year yield, and there just hasn't been much action there.
Yeah, and again, people don't seem to be bothered by the length in which the 210 has been inverted. Again, at some point that might come home to roost a little bit. Let's look at the dollar in the terms of the Dixie DXY here a little bit pressing up against that downtrend that's been in place for the last year or so. You see it's making a fairly nice little pennant formation. Again, if yields were to come in, maybe we see the dollar move back towards that uptrend, which is also the 200-day moving average. I know that we've seen a lot of volatility in currencies that, in the crosses with the dollar of late. And again, I would just say that it seems like maybe it's just been a flight to quality here in the US dollar, given all of the turmoil that we're seeing in some of these other nations that had these snap elections and the like. So talk to me about the dollar here. And again, if we were to see the dollar spike, it's probably going to weigh on US corporate earnings, specifically for the multinationals.
Yeah, that's something that would happen if we saw a sustained uptrend in the dollar again. I would expect it to affect earnings. I think so. There's two things that can happen with the dollar. There's a lot of things that can happen with the dollar, but the two things that I think about most are we in a global flight to safety? I don't think that's the case, right? I don't think we're in this sort of panic mode where the entire
My ears are ringing. You guys can quote me on this. I do not think
entire globe is piling into the
or let me say this. I think all of this talk of inflation with Donald Trump, because they fail to recognize what he in fact tends to do when it comes to tariffs, because they don't listen to him. They don't take their time to listen to regular speeches where people are asking him specific questions and how to do things. They just hear what he said to a couple of white goofballs from the trailer park, that he'll say anything to get them going. So I think it is a bunch of it's a bunch of hypotheticals that I honestly don't think is going to happen. That they keep saying that inflation's going to go worse, this, that, and the third. Listen, inflation would already still be continued if that was the case. I truly believe that. Unless you get a situation where you bundle a bunch of people up together and they can't do anything, and you give them some money, and China closes down, and you get some countries to close down, then I think that's the only way. I'm telling you guys, I don't think you're going to see inflation. I don't, especially if tariffs are there, because people aren't going to be buying things. So that's actually deflationary. First off, that's deflationary. Tariffs are deflationary, and there are only tariffs for companies that do not want to work and or, how did he put it? you know, do business fairly. So
the dollar because they're afraid of their own currency. But there have been a number of central banks that have started cutting rates ahead of the Fed. And even though after the big move we've seen in the 10-year, housing continues to be sticky. It continues to be sticky in demand. And I think your point is the really important one, that unless the labor market really starts to show cracks, I think housing actually stays relatively solid. Now, some of that could still be that people are not willing to enter the market again. Maybe they're waiting for as soon as the Fed starts to cut rates. If we do see a drop in the 10-year yield, I bet there are some buyers that are on the sidelines that are willing to come in and start to take action. But this is a group that, especially in a time like this where we have very little clarity on what's going to happen in the 10-year, I don't want to trade it right now. I just don't think the risk is worth the reward.
Yeah. All right. Let's talk a little bit about some of the big money center banks. JP Morgan, maybe they can pull that one up, is making a new all-time high today. Some of the other money center banks are very near them. Citi, Bank America, Wells. You know, if one of the big problems that we had during the CHWY situation in March of 2023 and for the balance of the year was just basically higher rates, and what that was the havoc that it was wreaking on some of these balance sheets or so. How do you explain this stock and some of the others? And again, we know they're in good shape. You know, maybe Bank America was one of the ones that people were a bit more worried about, but you know, the commentary out of Jamie Dimon when the company reported their Q1 results, and a couple times since then, wasn't particularly great. We had that huge gap on April 12th, and then when they reported, you know, down 6.5%. For JP Morgan, that was massive. So how do you explain, with rising rates now over the last week, you know, to see this sort of move that we've seen in the last week and a half, with the 10-year yield going from what, 4.15 to almost 4.5%?
Yeah, well, along with that move, you saw the yield curve inversion go from about 50 basis points to 33 basis points. So there has been some what would be called twist steepening in the curve. And as that curve, if it's on a trajectory to normalize, that does actually help banks in the long run. Regional banks, however, you mentioned the regionals before. Regional banks are much more victim to what's happening in that yield curve inversion and what's happening along the curve. That's not to say that big banks are not vulnerable to it, but they have a lot of other stuff going on. There's a lot of capital markets activity that they can lean on. There's bond trading activity that they can lean on. We've got bond spreads, investment grade and high yield, that have remained incredibly tight. So there's a ton of demand in the bond market. It seems to be functioning just fine. And you've got obviously a stock market that has risen more than anybody expected in 2024, which is increasing that capital markets activity, that IPO activity, that M&A activity, and some of these banks can benefit from that. There are some banks that are more exposed to the consumer than others, and I'm talking about big banks. There are some of them that are much more exposed to the consumer than others. So if the consumer continues to show cracks, and I'm saying continues because it's already happening, if consumer credit continues to show cracks, I would expect there to be a little more divergence in the performance of these big banks, and for the ones that are more reliant on consumer lending to see more trepidation in their stock price.
Yeah. So when you just talk about the strength in the stock market here, I just want to kind of throw this up. This is from Seeking Alpha. This is U.S. sector performance in the terms of, you know, these sector ETFs. And I think it's pretty interesting. Obviously, communication services and technology both up about 17.5% on the year.
Okay, so I was hoping to see if we got some volume here on this breakdown right here. I might go after it. The only thing is this right there. This pop with this volume is kind of holding me back from taking this. You know what? We could just do it. Let's just do it. There's nothing else going on. I'll put it on. But you just have to be careful, because once you regain this, no, don't duplicate.
Yeah, it's an interesting question, Kelly. I think that the decision calculus has to be one that is both moral and economic. And as I said earlier,
You just have to be careful, because if you regain this level and buyers step back in there at 33, you could get something like this. Oh my gosh. You know, you could just start going. You know what I mean? You could just start getting pops up there. Dude, I don't understand this fucking mouse, bro. It's a boring day, no matter where you are. I've literally been looking and watching small caps, mid caps.
And then when you just kind of go down, financial services, 9.3% higher, energy, nearly 9%, utilities up 7.6%, industrials, 6.9%, healthcare, 6.9%, staples, 6.3%, basic materials, only up 3.25%, consumer discretionary. This is an interesting one, 2%, because we've seen some consumer confidence data that's kind of hanging in there a little bit. And then real estate down in the year. When I look at consumer discretionary, Amazon's the largest holding, Tesla's number 2, then it's Home Depot and McDonald's. Home Depot, McDonald's down in the year, Tesla's of course down in the year. So again, this also speaks to the lack of breadth. And if you look at where the outperformance is coming from, those top 10 tech names or so, any of these sectors, Liz, you want to kind of pick at if we were to have a 5 to 10% peak to trough decline like we had last summer into the fall.
Well, my final trade on halftime today was energy. I would definitely pick at that. I've talked about this before. It's in my mid-year outlook. This is not a call for defensives, but when you have a steepening yield curve environment, the sectors that tend to do well, energy is one of them. The others are utilities, staples, and healthcare. Part of that is because they pay a decent dividend, and in a steepening yield curve environment, you typically see the short end of the curve coming down. So you're not getting paid as much on cash. You want to get paid in other ways. So you want to look for dividend stocks. So I would say even a dividend stock ETF, if we get a pullback, a dividend stock ETF might be a good entry point too.
Yeah, so it's interesting. We talked about the pullback in the XHB. You know, let's pull up the XLU for a second here, because this is one which is kind of benefiting oddly, well, not oddly, but to some degree of this AI trade and the power consumption and the like. And then I want to pull up the IYT. This is the iShares U.S. transportation. You know, again, never confirmed a high over the last couple months in the S&P 500. You know, down about, I don't know, close to 10% or so. The XLU is down about 7%. So that just doesn't act particularly well. Doesn't mean, again, that communication services and technology can't continue to rally here. So, all right, let's look at a few single stock names. I'm not asking you to opine on them one way or another, but I think this will be really interesting. Tomorrow morning, Tesla is going to report its Q2 deliveries. Now, here's a number that has been coming down all quarter. And so again, I think it's interesting. Let's look at the 1-year chart really quickly for a second. Expectations are pretty low. You see those moves from those highs there about a year ago. And there's a number of instances where it's kind of tested that downtrend that's been in place. The average kind of rally off of those, you know, lows we've seen, it's probably about 35% or so. If we had a 35% rally from those recent lows, that probably gets you to 230-ish or so. And then if you take a look at the 5-year off of the 2021 highs when the stock was near 400, it's interesting that a 35% rally or so gets you to about $231, which is basically right where that downtrend is. And our main man Carter likes to say this, you know, to the penny.
I missed that damn long. It's all good. On NVIDIA.
You know, you get the big headline, and really best to wait for that headline to sort of fizzle out, let the market to react to it, let that particular stock react to it, let the industry group react to it, and come back to its senses into a place that, and I don't know if it'll be higher or lower, but trying to trade beforehand, I think, is a risky game.
Yeah, so to make that point, let's pull up the SMH, the ETF that tracks a semiconductor index, and NVIDIA is about 20% of that. Taiwan Semi is about 13% or so. And it's interesting when you look at those uptrends that have been in place from the October lows, you look at the breakout levels from, you know, I guess that is in May or so, you look at how far above the 200-day moving average it is, you say to yourself, this could easily come back in to that uptrend that's, you know, that's the October low to basically, where we are today, that would be probably another 10% or so. And again, let's look at the NVIDIA. This thing had a nice little pullback as the S&P did not pull back a whole heck of a lot. At one point, I think it was down 15%. If you look at where that breakout level and where it comes into play with that uptrend that's been in place really since the start of this year, you get to about $100, right? So this was a stock trading at 140 just a couple weeks ago. Analysts have been tripping over themselves to raise the price target. You think about how much market cap this stock has gained in just a few months or so. I think it's about $1 trillion. And you think about the deceleration that's expected to happen, over the next few quarters or so. This one, again, I've said this again and again, and I've been wrong here and there. But it seems a bit dicey if you're trading this off the next quarter's expectations, because they're just going to have to put up routinely bigger than expected beats. So Liz, you were gone last week, so we saw this rotation. Maybe they can pull up the IGV, which is the the software ETF. So you saw money come out of major semis and into, let's say, some of these, enterprise software, some of these SaaS names. And it's interesting because, there was a bunch of gaps that were happening on the earnings season. You see that gap that we had about a month and change ago. And here we are. We just had this big power move. How do you think about semis into software? And ultimately, do you think that they end up moving together at some point in the not so distant future?
I actually think, and I believe I talked about this a few weeks ago, that the underperformance of software compared to semis, software would be one of the first spots that would be a beneficiary if people started to get worried about the valuations in semiconductors, or just even the movement that we saw in semiconductors. It's just rational for any investor to look at that in their portfolio and say, you know what, that's a pretty big gain over a very short period of time. I'd like to lock it in and just take some of those gains. But those are investors who probably want to still be exposed to tech, still want to be exposed to the theme as best as possible. So they rotate into the closest cousin of that, which is likely the software names. And I think that's what we're seeing recently. This happened earlier in the year too, where we had a rotation into what people were calling the old technology names, where there wasn't really any news, there wasn't any fundamental change that happened, but it was money that just wanted to stay in tech and go into something that had a more attractive valuation. So do I think they'll trade together at any point? Not unless we have another big multiple expansion move, which I think some people would say is going to be that first Fed cut. Maybe that will happen initially at the first Fed cut, but that's how I think they move together. Usually semis and software, I chart them quite often against each other as a cyclicality signal. And typically when semis are outperforming software, you have stronger cyclicality. Same goes for discretionary outperforming staples. So I wouldn't expect them to move together in the near term.
Yeah, it's pretty fascinating, the haves and the have-nots in the semi space. We have a quick chart of AMD, and again, February into March, the stock was raging as it really sounded like they had some chips that might be able to compete on the GPU side with NVIDIA. And look at how this stock has traded. I think it's right about to break that uptrend. You see that 200-day moving average. I think that's pretty interesting. All right, Liz, let's take a couple questions if you have the time to do that. So again, this is from Lawrence Giordano. We kind of hit this a little bit. Why is the bond market getting hammered? Breath horrible, yet the S&P is up. So again, the bond market getting hammered, do you think that has a lot to do with, again, some of the differentials, or is it something that, I know we kind of hit this already, but it seems like one of those things, the difference between how the stock market is acting and the bond market, if we were to go back toward 4.75 in the 10-year, and let's say the 2 doesn't do a whole heck of a lot, is we're still expecting, let's say, a 58% chance of a rate cut in September. I mean, something's got to give sooner or later, Liz.
Yeah, and the 10-year has been a pretty big head scratcher for a lot of investors, self-included, for a while here. So if you look at, just that trend channel there, right? It's still downward moving. And then this will be the second time that we've had an attempt to break through the upper part of that trend channel. I don't think that we're going to break through it unless we have some kind of news, a reheating in inflation, or some kind of jobs data that's incredibly tight, much tighter than we expected. I think that this is a reaction again, to some of the debate news from last week. I think this is in anticipation of possible inflationary policies that could go into effect in 2025. I think some of this will be given back. It was a pretty quick move upward, and I even see a little gap there. It was a pretty quick move upward. I think some of it will come back down over time.
Yeah. All right. Here's a question. This is from Scott A. What does Liz think of the GDX? And just really quickly, so this is the Van Eck Gold Miners ETF. And it's interesting when I look at the chart just really quickly, purely from a technical standpoint. Maybe they can pull up a 1 year really quickly here. And if you look at just there's support right in this kind of 33-ish level here, if you were just to draw a line from the high a year ago, and you see where this ETF is trading right now, and it looks like it's making a little top. And so this is the miners, and maybe they could pull up the GLD for a second, give you a little time to comment on gold. And if you look at the kind of breakout that it had from February up to those highs or so in April, and you see the consolidation that we've seen, what do you make of the miners' action on a relative basis, I guess, to gold?
Mm-hmm. So a few months ago, and full disclosure, I own GLD and GDX in my personal portfolio, but the timing of them was different. So when I first put a position in GLD, I also own CHWY. When I first put positions in those, it was because of some of the stuff that was happening in Japan. Some of those positions I've had for a long time because of central bank volatility and just uncertainty around it, and a lot of the currency behavior that was happening that didn't sit right with me. So the gold positions had been there. And then we saw this huge run in gold, and the miners hadn't kept up. So the GDX trade was a catch-up trade, figuring that as gold continued to run up, the miners would have to catch up. And they did a little bit. It happened a little bit. It didn't happen entirely. And now both of those charts are doing sort of the same thing. I wouldn't even say that they had a drawdown. They just sort of stopped moving upward, and now they're moving sideways. But there has also been a pause in some of the news out of currency land. We haven't had as much FX volatility as we had a couple months ago, and as much concern over maybe what Japan was going to do, how they were going to save their currency, and what they were going to do to save it. So this may just be a little quiet period. I have not exited anymore. I did trim some gold positions, not gold miners. I trimmed some gold positions a few weeks ago because the gains had been so big. And I think it was on a show with Guy that I talked about this. I trimmed them because gold is something that you don't typically see up in your portfolio 24% over short periods of time. So when you get a benefit like that, it was just time to take some profits.
Yeah, no doubt. And again, like just going back to the dollar, it's been moving a little higher. So that should put some downward pressure, I guess, on gold. All right, Liz, I really appreciate you being here with us. I'm going to drop you. We're going to say goodbye. We're going to say early happy birthday. So thanks for being here.
Thank you. Bye, everybody.
All right, really quickly, I just want to hit one name. Hold on. Sorry about that. Here's a question on Nike, and this is a stock that had its worst day, I don't know if ever, but in many, many decades. And this is coming from Jack CF. Lulu, a buy or sell after Nike earnings. And I just want to hit Nike for a second here, because this is one on Thursday's Fast Money. I'm sitting there at the desk, and I just want to say this. I think I've said this before. We have this thing that we've been doing forever. I think we do it on Fast Money, and we also do it on the halftime report. It's the one segment that I hate the most, and it's the final trade. And oddly, it's one of the segments that Amanda's listening to me, because she was our producer for many years, and she heard me kind of bemoan this a little bit. It's just a 45-second block where four people have to go around the horn and give one like stock recommendation or something like that. And I kind of hate it. I usually kind of put a little bit of a check on it. And we're talking about Nike, and we're talking about the guidance that the company gave. And, you know, again, I just didn't think it was horrible. I didn't think it deserved to be down, let's call it 15% on that. And when the stock was $83 at 5.59, I said, listen, you could probably buy this thing and use an 80 stop to the downside. Okay. And when I'm doing this, if you're trying to pick a bottom in a stock like this, you really want to trade with stops because, who knows where this thing could go. Aftermarket action is obviously, and this one was high volume, but it's going to be much less volume than you have on the opening the next day or so. And the fact that the stock traded down 20% on Friday, and it's up a little bit today, you probably want to give it a little time. If they could pull up a 5-year chart or so, if you just look at that sort of COVID low in 2020 that
Nike
went
did
down
have a day
to
today.
$60, and it had that epic move, up to 180. I mean, this is the sort of stuff that
going to
really
80
freaks me
bucks.
out a little bit, that sort of price action could happen. And here we are now with the stock at $76,
That's
down
like
more than
Snowflake.
$100
Look, we
from those
bought this.
2021 highs. This is not
bought this
some
back here.
overpriced internet stock that saw a
Day
huge
two
pull forward, or a
continuation.
fintech of some of that
Oop.
behavior. I mean, this is Nike. They have the Euros
a
going on right
40%
now. They
trade.
have the
Like,
Olympics that
technically,
are happening. Those are seasonally
if
usually
you want to
pretty
be
good
honest,
periods for Nike.
You're at least up, if you bought it with us, you're up 20% just in a week on the stock itself. Think about
Nike. So this one is in kind of no man's land right now. And again, I think they probably kitchen sink the guidance a little bit. And we know that, Donahue, the CEO, is going to be under a lot of pressure. And I would almost say that this is the sort of name that you might see an activist kind of get involved in. So again, if this stock doesn't fall out of bed from these levels and consolidates a little bit, one of the things we were talking about at the start of this program was how a lot of these companies that had huge earnings gaps, right, in early Q2 after the Q1 earnings, most of them filled in a good portion of those gaps. Okay, so back to the question about Lulu. I mean, this is one where this stock was trading over $500. This is at the start of this year. Here we are at about $300. And I look at something like this and I say to myself, okay, these guys are very differently positioned as it relates to Nike. And when you look at their geographic exposure around the world, China was a real problem for Nike. These guys don't really have that exposure. I'm looking at consensus estimates for Lulu and 2025 fiscal year, 12% expected earnings growth, about the same next year. Revenue growth expected to be about 12% this year, about 11% next year. Trading at fiscal 2025 at 21 times and 19 times next. I mean, this stock for I don't want to say cheap, but trading at a market multiple with double-digit earnings and sales growth, this is about as cheap as this stock's been in a very long time. So again, unless you think there's some massive issues as it relates to style, as it relates to competition, as it relates to margins. I mean, I'm looking at the margins here. They had a huge, kind of up, I don't know, like 3% margin increase since fiscal year 2023 to this year, expected to be about 48.5 or so, and basically expectations for flat next year. I mean, this stock does look like a buy, and maybe it's the sort of thing that you start kind of picking at a little bit. And again, maybe more so than you would with Nike when you think about how much this stock has come in such a short period of time. Obviously, Nike from $525 down to $300 is probably on a percentage basis more than what Lulu has done. But again, that percentage looks kind of interesting to me. The sales and earnings expected growth versus the multiple also look interesting to me. All right, we covered a lot of ground here today. I want to thank Liz Thomas again. We got honeymoon. And again, if you guys are planning a big vacation abroad, I would say this: rather than sitting on a beach or a ski trip or something like that, going down to Peru and checking out Cusco and Aguas Caliente, and also, and again, we're not getting plugged by the Peru vacation authority or anything like that, but it is a really cool place. So thanks to Liz, thanks to you guys for being here, thanks to our sponsors FactSet and SoFi. I'm going to be back tomorrow with Carter Braxton Worth. We're going to do a whole heck of a lot of charts, so come back, be here with us. Oh, one last thing: if you like these pods, you're sick of our voices, we have a great pod that we introduced about 6 weeks ago. It's called the Market Matrix. That's MRKT Matrix. Our team, Guy, myself, and the rest of our peeps, we take about 10 stories, we summarize them using one of these large language models, these interfaces. Usually it's Perplexity. We take the summary and we take the text and we put it into a voice bot, and you get a pod. You get the most important stories under 10 minutes. Go check it out. Go follow it, rate it.
This is Covered Calls with Kevin Simpson. This is Covered Calls with Kevin Simpson.
I'm just having some lunch, but Boeing, Tesla, NVIDIA. Yeah, Morgan Stanley lifted its price target on the semiconductor, calling it the most compelling narrative in the AI semi space. CHWY, Meta, DJT, pretty much everything we've already been watching. Oh, Neo and Li Auto.
Begins here. All right, let's check the Dow right now. It is up, but just barely 16 points, about 0.04% at 39,135. It was up 320 points at its peak right before 10 a.m. We've only got a couple of minutes left in the program. Several more stories we'd like to tell you about, so let's get to it. CHWY turning negative as the boost from Roaring Kitty's new stake diminishes. It had been higher by as much as 10%, but now down a little bit. The SEC filing showing that Roaring Kitty bought over 9 million shares, amounting to a 6.6% stake in the company, worth nearly $250 million. The stock is down about $1.50 or 5% today as some of that bloom goes off the road.
Still up from May, but he's he'll do fine in the long run if they can turn this around. If not, it's going to have to be back to boring Kitty. New hires are putting more of each paycheck into their 401ks, not necessarily by choice. Nearly a third of companies using automatic enrollment now start workers saving 6% of their salaries or more, about double the share of organizations that did so a decade ago, according to Vanguard.
So this would be when you come in, you automatically default to 6%?
Yes, which is a big number.
That's
but
pretty high.
Now that I'm coming on the other end of this 401, not the other end, but I mean, I'm getting there, and I'm going, you know what? I'm glad I did that for all those years. I really am. I hope everyone else does it too.
If you don't get it, you don't miss it. If you changed from 3% to 6%, you would notice it. If you started at 6%, you probably don't notice it as much as you otherwise might. All right, and starting Monday, the Food and Drug Administration will wield new regulatory powers over the makers of lipstick, shampoos, baby wipes, and other cosmetic products. This is part of a law requiring companies to clearly label allergens, register their facilities, and disclose every product they sell. It is during a time when regulatory agencies are being reined in by the Supreme Court, an interesting sort of counter move on the part of the FDA to extend its reach for cosmetics.
Oh, sure. And I'll be curious to see how quickly this kind of works its way back through. Maybe a boon for the package makers, companies.
All right. So we got the Dow basically flat on the day. Stocks otherwise
They do so much dumb shit. I mean, you can always look it up. There's a law that already tells them to show those things. You could have to look it up online, but like, come on. You got to put it on the label now.
Today, this make or break hour begins with a new month, a new quarter and a half, but a familiar push-pull between tech and treasuries. A few giants of the NASDAQ pushing higher to support the main indexes. You see there the S&P 500 up about 0.7%. NASDAQ is the leader, up almost 0.2%. Yet a majority of stocks continue to struggle. They've been held in check in part by the 10-year Treasury yield rising to about a 3-week high, pushing the 4.5% threshold just a little while ago, now at 4.48. Apple, the biggest upside contributor to the S&P 500 and the NASDAQ on the day. Both those indexes, as we said, posting modest gains after big first halves. Small caps remain a drag. The Russell 2000, it is stuck just above that 2,000 level, down more than 0.75% on the day. That all takes us to our talk of the tape. Should investors' strategy shift as the market takes the turn into the second half, with the S&P up more than 14% year to date, or are the prevailing trends the ones to keep playing? Let's ask Dan Greenhouse, Chief Strategist at Solus Alternative Asset Management. Dan, good to see you here.
Thank you, sir.
So, you know, the probabilities say you got a strong first half, you have this nice upward trend in the market, seasonally things look okay, you usually have upside follow through. But, you know, the complications come in the details. So how are you thinking about whether the first half pulled forward gains or really just reflect a continuing dynamic here?
No, I think continuing is probably the right way to put it. Obviously, this is an extending of the rally that began late last year. And to the point of the question that we posed at the outset, I don't know why anything is going to be different. Now, mind you, I came into the year arguing for a broadening out of the rally, which has not happened. As we know, obviously the market concentration, at least from a contribution standpoint, has been quite narrow. Although there are other themes that have played out. You've seen this in the AI story, which has caught fire, so to speak, not the chips, but the data center build out and the power side of things has really caught fire. But it's still a largely concentrated market. But in terms of what turns it, I think the one thing that I've been talking about, and I think remains true, is if you start to see rates come down over the next 6 or 9 months, is that sort of the contributing factor to a broadening out of the story, or is the AI, I don't know what the right way to put it, or is the AI story, will just be simple, just too powerful for everything else?
Sure. And I guess, you know, there's no kind of law of nature that says it has to be one or the other, but recently it really has been almost one or the other on a day-to-day basis. I think we're working on the 9th straight trading session today where the S&P won't move 0.5%.
Yeah, it's been quite a fun time.
And yet you have, you know, the majority of stocks are lower today. You have this really static index, and then you have, you know, whatever the market has to do below the surface to keep it that way. I guess the other thing I've been wondering about is in March of this year, we really did see a broadening out. And at the end of the first quarter, you were able to say we made a record high. Historically, strong first quarters mean, you know, strong rest of the year. All the things I just said about the strong first half. And yet April, you got a lot of downside chop. You actually had to go through what qualified as a pullback this year, 5 or 6%. And it was with yields going up.
Yeah.
So, I mean, what's your sort of diagnosis of the case in terms of why, after a pretty good PCE inflation number Friday and, you know, a lot of downside on the economic surprise index, we're sitting here with yields high?
And listen, I'm in the digestion camp in the sense that we had a real strong rally, 15% for the headline index, 4 or 5% for the equal weight to start the year. I wouldn't be surprised if we tread water for much of this month into the Fed meeting where you get some clarity on how they're thinking about things. To your point about the PCE, I mean, you have had a softening of the economic data, which everyone's quite well aware. Some of the jobs numbers have at least returned to normal, if not started to worsen, like jobless claims. The ISM today, construction spending today, were not booming. And so the economic data has come in at the same time that the inflation rate has moderated. And again, as we saw on Friday, the Fed's preferred measure of inflation is about 2.5% year over year, give or take. That's pretty good for government work. And so at the end of this month, they're going to provide some clarity on how they're thinking about things in that environment. And from an investor standpoint, that's going to be pretty important, obviously, in determining when they cut rates and if that point I alluded to earlier about a broadening out comes to pass. I will say about rates backing up here, I mean, the proximate cause to which everyone's attributing this is the idea that apparently President Trump is now a greater probability of winning, and he's going to be more fiscally irresponsible. Listen, my one pushback on this is like the supply story is so onerously bad for the next couple of years and going to be worse over the next 10 years. At a baseline, you're going to accumulate somewhere around $22 trillion of additional debt. That's probably going to be closer to 27 or 28 trillion. I don't know that one man or one woman coming into the presidency is going to do much, much worse than that, although I guess we're going to find out.
Well, no, maybe not. Although I think if the market's reacting to anything, it's on the revenue side, which is, okay, if the tax cuts are going to stay in place. But, you know, also it's like straddling the end of a quarter, and you don't know what the dynamics were in terms of rebalancing into bonds and out. But I do think it, if nothing else, it does underscore that it's been pretty easy to exacerbate those supply concerns in the market. You know, the market's been pretty good at talking itself into, oh no, we might not be able to absorb all the supply.
For brief periods of time. But I will say, and I'm sure you agree, over the last 40 years, how many times have we heard this can't be, this can't be, this can't be, and yet it always is. I don't know that this time is any different in that respect. I mean, there's the number of conversations I have with counterparties across the street, with investors in our fund, worrying about the debt, and you see this in any number of the Treasury notes that get written. I just, again, you've got 22, probably 27 trillion in additional debt expected. It's just so large. I'm always reminded of that one famous phrase, owe the bank $1 million. If the bank, you know what I'm saying. There's no,
it's the bank's problem.
There's no right way to rationalize $30 trillion in debt.
No, it's not. But we're also not pricing the next 20 years today. And there are going to potentially be Fed rate cuts, and maybe the economy softens up, and there's still going to be a
if the auction date, which I assume it will, not in the short term, but probably over the next 6 to 9 months, some of those auction sizes, which are already large relative to recent history, are going to start to get larger. And I just wonder if in the short term, the market's going to have to digest those headlines. I imagine they will.
Sure. Let's bring in Charles Schwab's Kevin Gordon and Wells Fargo's Samir Samana into the conversation. It's good to have you both. And Kevin, love to get you to weigh in on this whole market concentration story. I know you're focused on it, and I always like to get some clarity as to why various people think we should be concerned of it. What are the risks of it? Is it just sort of, this is not the way a healthy market behaves? Or is it something else of a kind of mechanical vulnerability in the market?
Well, you know, I think a lot of times folks will point to, you know, particularly those who are a little bit more bearish will point to some metric like, you know, the top 10 stocks in the S&P and how much of, you know, the percentage they make up of the index in market cap terms. That in and of itself, I don't think is the problem, and I don't think that should be villainized. I think it's, you know, what performance looks like under the surface. So yes, you're always going to have a large contribution to the index when you have a large stock, whether it's NVIDIA or Apple or Microsoft. That's just the index math. But what you really have to pay attention to, more so I would argue, was whether there is waning participation, you know, in the average stock world or, you know, down the cap spectrum. That started to take hold a little bit, as you were discussing earlier with Dan. You know, over the past few months, there has been a little bit more chop for the equal-weighted S&P. The cap-weighted S&P has continued to grind higher. You know, even over the past year, you've had less than 20% of the members in the S&P that have outperformed the index. You know, you can go on with the percentage of members above their 50-day or 200-day moving averages that has sort of, you know, taken the stair-step pattern down so far in the first half of the year. But I don't think it's yet, you know, at this alarming level where, you know, you started to see in the back half of 2021, where you did start to see, you know, more of a dramatic move lower, especially in the percentage of stocks that were in an uptrend. So I think that's actually probably the key for the second half of the year is if you can keep that, you know, above 2/3 of members in the S&P or in the NASDAQ that are above their 200-day moving average, I think that would still be a relatively healthy setup as we go through the softer patch of economic data, as you get through, you know, a little bit more clarity for where the Fed is going and what the actual timing of rate cuts looks like.
Right. Yeah, it seems as if you could make the argument that it's the majority of the market kind of resting to wait and see. And Samir, I know that you've sort of favored quality in various ways of defining that in terms of trying to, find where there might be outperformance in this market. On some level, it feels as if the market is willing to capitalize quality at a pretty high level when you look at the stocks that are leading in terms of their earnings momentum, their balance sheet strength. Is that something that encourages you or worries you?
We came into the year thinking that there would be an economic slowdown, and I think it'd be fair to say that if you listen to a lot of consumer-oriented companies, that it's here, right? I mean, you can call it bifurcated, you can call it starting at the lower rungs, whatever you want to call it, but clearly the consumer is slowing, right? And with it being 70% of the economy, it's just going to be very difficult for a preponderance of stocks to do well. So it doesn't surprise me at all that large caps have outperformed. It doesn't surprise me at all that people have kind of flocked to growth, which seems to have kind of decoupled from the economic cycle. And, I think for the most part, it probably continues into the second half until you see something give, right? Either I think you have to see a more pronounced economic slowdown and then some early cycle dynamics kick in, or I think we continue to muddle through, in which case I think people keep kind of holding on to those life rafts where they can show growth, despite the economy slow.
Although I guess, Samir, if you were really grabbing onto life rafts, you would think that there'd be more of a bid for outright defensive type stocks where, in a bad economy, those are the only ones that seem to hold up. It's not quite clear that that's what's happening right now.
Well, again, I go back a little bit to AI kind of having carved a little bit of its own secular cycle, which I think a lot of people are viewing as maybe a little bit immune to the economic cycle. Now, to your point, I mean, if things slow down and multiples
volume, I know I fully agree with him. In order for us to relax, and I think you're going to need earnings or a catalyst. Whether that's jobs, all that fun stuff. But look at GameStop. This is why I didn't go short DJT or GameStop or any of them just yet, because you're reclaiming 2350, and you are doing it with a massive amount of volume today. So let's see if we can get a pop going into the end of the day. And I pointed this out to you guys that this is, I pointed out that is why, I gave you guys, the boxes and stuff and said that, the volume and that selling pressure is why I'm not good at.
Said we were mid-cycle, and we were not in the 2000s, and that ended up being very, very late cycle. I think it's very hard to tell and ascertain, and there's ways that we do this, but it's very hard to ascertain with any seriousness that you are quote-unquote mid or late cycle. A lot depends on how you define it. I'll just piggyback on what Samir had to say about the AI thing. I sort of don't agree that AI has quote-unquote decoupled from the economic cycle. I mean, it has in a number of respects, but it hasn't in I think a better way to put it is that it's largely independent of the economic cycle right now. There's this gold rush, so to speak, to build out the data center, the cool the data center, the transportation of the data center, the chips, et cetera, et cetera. And I think you're seeing the AI sausage get made here, and I don't know that it's appropriate to overlay that onto the economy. Now, obviously, if there's a broader and more sustained and steeper economic slowdown, some of those CapEx budgets will be reduced for sure. But I don't know that I would link them in the sense that, well, the reason we're spending so much is because the economy is so broad. And I'm not sure Samir said that, but still.
No, exactly. No, it's absolutely catalyzed a lot of real-world spending that, in theory, has some kind of multiplier effects. Kevin, I guess more practically or tactically, what are the implications of this environment for you looking into the rest of the year? Whether the market is giving us some rebalancing opportunities or some neglected areas that look like they seem like better bets?
Yeah, well, similar to what Dan was saying at the beginning in terms of the broadening out and how much of it is to be believed, how much of it has been reversed. I mean, year to date, and especially over the past few months, yeah, some of that has been dialed back a bit. But I still think if you look over, you zoom out a bit and you look at the longer term trend, whether you want to take it since the October low of last year or, even since the October low of 22, clearly since the 22 low, yeah, it took a while for the rest of the market to catch up. But even since the October low of last year, things are still pretty healthy in terms of broad-based sector gain. Energy is really the only one that's been lagging a lot. So we still think that, with the disjointed nature of this cycle, and you're all talking about, mid-cycle, late cycle, where are we? You really just have to look to sort of pick which data point you want to focus on, and that will tell you where we're at in its own cycle, because things like housing, yeah, there are certain parts of housing that look late cycle if you look at home sales, but if you look at home prices, you're not necessarily late cycle. Vice versa, you look at something like services, it's still relatively resilient. So I think that the fact that you're still going through, a rolling recovery in certain sectors, albeit, choppy, especially with what we saw in ISM this morning for manufacturing, the fact that that's still in place, I think still argues for the rest of the market to sort of catch its breath and keep up.
Pop back up to 25 would be nice, man. This would be like a nice $1.50 pop if we can get it. I mean, the market's trying to put me to sleep, me personally.
And in our opinion, companies and industries that still have relatively high cash balances where they're earning a lot more on that. They don't owe a lot on debt. They're still having, so they still have a relatively high interest coverage ratio, in addition to strong profit margins and revenue that's expanding. That's probably a better way to approach this because of the disjointed nature of the cycle.
Samir, is there a level of, let's say, 10-year Treasury yields or corporate bond yields that would more concern you at this point? It feels as if we keep getting tested every few months about how high yields can go and the economy and the market can hang in there. But is that a key swing factor for you looking out in the next 6 months?
I think you've got to keep it in mind, right? I mean, it seems like anytime we push up kind of to those upper fours on the 10-year, and you could argue that 30 years even higher, it seems to at least give the market some pause. Now, again, I think we've entered kind of this phase where people are playing kind of the greater fool theory, where they're paying ever higher multiples for some of these larger cap growth names. So I don't know if it'll have an impact at the index level, but I think probably the most interesting thing about today is, as you mentioned, small caps are underperforming so badly. So rates are absolutely having an impact. Look at housing, look at small caps, look at housing-related stocks. So I think, at least for a moment in time, I mean, it's pretty easy in terms of what to do, right? You take your gains that you had thus far this year on large caps, even though we like them, and you rotate them into fixed income, right? Try to immunize your portfolio, especially on the longer end when the market gives you those opportunities. And then I think it's okay to spread a few chips kind of back into the areas like smalls and EM, just to make sure that if there are inflection points in the latter half of the year, you don't get caught off sides.
Yeah.
So just to bring this back to the broadening out trade that we started with, I think the larger question that all of us who look at markets from a top-down perspective, even partially, have to consider is whether or not this is telling us something. Is there something else going on in the market that the 493, so to speak, is telling us that the 7 or not? And I think that's ultimately what you need to sort of focus on and come down on. I personally think the answer is not. I think it's actually particularly interesting. If I told you the coming into this cycle, so to speak, the Fed would raise rates 500 plus basis points, and the 493 or the equal weight index would put together an average year, I think most people would say, I'll take that. And yet here we are, and everyone's, not surprisingly, lamenting an average year gain and wondering why it's not worth.
Might be time to strike. I was just starting to fall asleep too.
Interest rates, I think an average year is a pretty darn good outcome.
That is true, although we almost never get an average year in a given calendar year.
That's right. We also never get an average year.
Yeah,
that's
usually it's
the funny thing about the average.
It's kind of a lumpy thing for sure. Dan, Kevin, Samir, appreciate it. Thanks for the time today, guys. All right, let's send it over to Pippa Stevens for a look at the biggest names moving into the close. Hi, Pippa.
Hey, Mike. Well, Boeing is higher after announcing it's buying back its struggling fuselage maker Spirit Aerosystems in a $4.7 billion all-stock deal after first expressing interest in the company back in March. Now, Boeing says the move will improve safety and quality control. Analysts at Jefferies noting that while the deal will likely dilute Boeing's earnings in 2026, the benefits of reintegrating Spirit are, quote, priceless. And shares of Snowflake are climbing, headed for the best day since February after Goldman Sachs added the data company to its America's conviction list. The firm saying Snowflake is at an attractive entry point and believes the company's new CEO is likely to accelerate product development, which could boost top-line growth and free cash flow margins. The stock up
slow like this and you start falling asleep watching the monitor.
pepperoni on an always golden crust. Try the whole fiery flavors menu for a limited time. For decades, venture capital has arguably been one of the highest performing investments. But for most investors, it was out of reach until now. With the Fundrise Innovation Fund, you can invest in some of the world's top tech companies, including those leading the AI revolution before they go public. Now it's your turn to get in early and start building a portfolio of industry leaders, disruptors, and pioneers with the Fundrise Innovation Fund. The future is now open for investment.
I ended up reclaiming 2360 anyway.
Just turn on NordVPN. Guard yourself from data snoopers, encrypt your online traffic, and block malicious sites. Get the deal now. When you're cooking on a Blackstone, you get a better cooking experience. You'll have bigger adventures and become part of the outdoor cooking revolution. With your Blackstone, you'll love every breakfast, lunch, and dinner you create. From fast and fun to low and slow. Cook anything, anytime, anywhere. Go to your nearest Blackstone retailer or blackstoneproducts.com now and make everything better on a Blackstone.
The moment I met him, I knew he was my soulmate. Soulmate. Soulmate? Why do you need me? But then we switched to T-Mobile 5G home internet, and now his attention is spent elsewhere.
Been thinking it for a long time.
So diverse. Why is that thing invented here?
This is where it gets the best signal from the cell tower. I've tried everywhere else in the house.
There's always a new excuse. Well, if we got Xfinity, we wouldn't have to mess around with the connection.
Therapy's tough, huh? It's like a lot about me.
A home router should never be a home wrecker. Oh, this is a good book title.
At Harris, we know what a nightmare a backed up drain can be. That's why we offer our 93-year free drain clearing special. For just $93, we'll send one of our certified technicians out to clear the problem. And if for some reason we can't get it, it's free. Don't wait. Contact Harris today and get your drain flowing again.
Stocks are green across the board to start the second half of the year. Investors looking ahead to a key economic data over the next few weeks to determine how the Fed might or might not move at its July meeting and thereafter. Joining me now to discuss is PIMCO's Rich Clarida. He is the former Fed Vice Chairman, of course. Rich, it's great to have you today. Since we last heard from the Fed in a formal collective way at the June meeting, probably got some friendlier inflation numbers. It seems like the market grew more comfortable with the idea that perhaps things were developing according to the Fed's hopes and expectations. Where do you think that leaves the Fed with regard to how it sets the stage for any move it might make this year?
Thank you. Yes, we did get some good news, really confirming what we saw in the CPI report. We got some good news on the PCE index, which is the Fed's preferred index, and importantly, the 3-month average
Developing according to the Fed's hopes and expectations. Where do you think that leaves the Fed with regard to how it sets the stage for any move it might make this year?
Thank you. Yes, we did get some good news, really confirming what we saw in the CPI report. We got some good news on the PCE index, which is the Fed's preferred index. And importantly, the 3-month average on that is now down below 3. It had gotten up north of 4 a couple months ago, and it's now annualized at running at about 2.7. So that's good news. I don't think the Fed will have enough new information to do anything at the July meeting at the end of the month. And the other thing to keep in mind about the inflation outlook is that when you look at the year-over-year comparison, which is what the Fed looks at in terms of policy, those comps start to get more difficult in the fall. So our view remains that the Powell Fed does appear to want to get one cut in this year, but most likely if we got that, it would be late in the year, say at the December meeting. It could get interesting if we continue to get better than expected inflation data. It could make September a live meeting, but right now we're sticking to our view that there'll be one cut later this year.
So at this point, yeah, you would think that perhaps the market's getting a little bit too aggressive in terms of pricing a likelihood of a cut in September?
Well, right now, there's not a 100% chance of that. It has moved up, and that makes sense. And certainly, we'll get reports at the end of July, at the end of August, and we'll get a CPI in September. So there's a scenario where you get enough good inflation data, in particular, if the economic data continue to move in the direction of a slowdown, that it could make September a live meeting. But right now, I think the pricing is broadly fair.
Just looking at the Fed's stated framework, obviously, as you know, in terms of where Fed funds rate is relative to PCE inflation, they believe that means policy is pretty restrictive right now. They've always said they were going to be likely starting to ease before the actual inflation target was met. The current run rate year over year of PCE is kind of where they thought it might be at year end. So a lot of that stuff builds toward at least the room for a cut. Now, this other line has become a little more commonly repeated, I think, which is, Powell wanting to make sure that when they do ease for the first time, it could potentially be the beginning of multiple cuts. In other words, they don't want to just sneak one in. Is that relevant?
Well, I think it is relevant, yes. I mean, certainly both through the communication and history of the Fed, we tend to get rate cutting cycles. And although sometimes, for example, in the 90s, there were only really several cuts, and so that's certainly feasible. But both the SEP projections, which we now have, the dots, which we didn't have 25 years ago, and their comments indicate that from their point of view, if they're going to be cutting, they want to be cutting in expectation that inflation's down to 2%. And certainly if they were concerned that wasn't the case, it would make them hesitant, I think, to even get that one cut in. I agree with you.
What's your read on the current market action in Treasuries? You obviously have the yield curve steepening here for a couple of days, especially today. The 10-year up 11 basis points, the 2-year up only 5 or so. There's sort of idea out there that there's more focus on supply or the fiscal position or maybe inflation expectations.
I think all those are relevant. One of our core investment themes in our recent secular forum is we don't think an inverted yield curve is the new normal. We think the curve will re-steepen. We think largely as the front end comes down, but yeah, an inverted curve is not normal, and it will at some point begin to re-steepen. And obviously the bond market, the further out you go from the front end of the curve, the more other factors, including fiscal policy and global developments, become relevant for rates. The 10-year has really been in a range now for some time, and we think it'll stay in that range, but it will rise and fall, as information comes in.
We're going to hear from Chair Powell tomorrow, actually at the ECB forum, along with Christine Lagarde and other central bankers. Do you think that the fact that the ECB has cut and other central banks have moved in that direction has much of an influence on how Powell's thinking about things?
No, not in that way. I mean, each of those individuals who I had the pleasure of working with closely is going to run policy based upon what they need to do for Europe, the U.S., or the U.K. But central bankers do communicate at forums like this and in Basel, Switzerland, at the BIS. So I think they're aware of their colleagues' reaction functions and outlook. But no, on the specific question of is U.S. policy going to be influenced by the fact that the ECB has already cut, I don't think that's the case.
Yeah, certainly there is precedent for them kind of going in different directions at times.
Yeah.
Rich, appreciate the time today. Thanks so much, Rich Clare.
Thank you.
From PIMCO. All right, up next, your second half setup. Top technician John Kalovis is revealing the key levels he's watching in the second half and how he's playing the momentum trade right now. He joins me here at Post 9 right after this break.
My coffee shop. We just moved into a bigger space, brought on another employee, and ordered new branded gear for the team. It was so easy. I just chose my products, added our logo, and placed my order. Bring your own team together with custom gear. Get started today at customink.com.
This is a keepsake frame. This is actually a photo from my wedding.
Just does not want to just like extend. The market's freaking asleep, man. It's all good. It's a holiday weekend. It's to be expected. Along with Powell tomorrow and the other data stuff we have coming out. Me personally, I am freaking tired. I'm just tired from watch. I've been watching charts since 5:45 a.m. So doesn't seem, you are getting a little bit of volume. You are getting a little volume.
Blue Chew makes feeling solid, pun intended, very easy in the bedroom. All you have to do is make an account quickly online, order your chewable tablets, and they get delivered straight to your door. And then you get your first month's free.
Iconic brands speak for themselves.
We are so excited to welcome you to our community. Today is all about you.
If you want to manage your own portfolio, learn how I do it.
One of the key benefits for me is knowing where Jim is going to buy or sell before he does it.
Get invested. Join the club today. Go to cnbc.com/joinjim.
Welcome to CNBC's Crypto World.
CNBC's daily digital show has trading updates, the latest headlines, a global perspective, and high-profile interviews. Scan to watch CNBC's Crypto World, sponsored by Crypto.com.
Welcome back. The S&P and NASDAQ both trading just below record highs. The S&P losing a little ground in the last little while after posting double-digit gains in the first half of the year. But can stocks stage another leg higher from here? Joining us now with the technical setup is John Colovis. He's Chief Technical Market Strategist at Macro Risk Advisors here at Post 9. John, good to see you. Good to see you again. So with regard to the S&P 500, you say... Welcome back. The S&P and NASDAQ both trading just below record highs. The S&P losing a little ground in the last little while after posting double-digit gains in the first half of the year. But can stocks stage another leg higher from here? Joining us now with the technical setup is John Colovis. He's Chief Technical Market Strategist at Macro Risk Advisors here at Post 9. John, good to see you.
Good to see you again, Mike.
So with regard to the S&P 500, you say nothing to complain about, not really doing anything wrong. It doesn't sound like a resounding bull case. But why do you treat the move that way?
Okay, look, I'm a trend follower, right? Yeah. So series of higher highs and higher lows, that's how I have to operate, and I got to view it in that regard. So moving average in the right position. There's no discernible patterns in place. I can complain that it's overbought. Sure, an RSI that got pretty extended, but overall, that chart is fine, you know. But did it just come out of a base? And I could say we're going to go up another 30% from here? No, but it's in a well-established uptrend.
So nothing to fight at this point outright, even if it doesn't look spring-loaded. You know, you were flagging just exactly how extreme the upside in semis was last time we spoke, and obviously that's come off the boil. How are you thinking about that?
Yeah, similar. So what I did since then, I did a study, took a look at other transformative technology companies. I went back to 1900 for that, and the chart that I brought today was of RCA Corp, okay? And what I found there that it did exceed its long-term moving average.
Like in the 20s and 30s?
Yes, like in the 20s and 30s. And it's
Radio Corporation of America.
Right. And what it did was it exceeded its 200-day moving average 3 different times in the 1920s, okay? The first 2 times, it got shaken out pretty aggressively. But there was that third time in March of 1928 when it hit it, it went up another 400% since then. So the way I'm looking at things is if we view like the NVIDIAs of the world as transformative technology, I even did this exercise with GM as well, the same idea. Pull back, but it's a buyable pullback. And I kind of framed this to everybody else that maybe it's overbought for a reason.
So that's the way. So with NVIDIA having, had this double-digit pullback, you feel like it's, I guess the question is, how deep might those become?
Yeah, and that's true. I mean, on average, like the example I brought last time, in semiconductors on average could be 20%.
Yeah.
We already got 16-ish already on NVIDIA. My guess is maybe we're 2/3 of the way there in terms of price, but probably only halfway there in terms of time. So my guess is it's going to have to muddle along for a little bit before it goes up and away again. But again, be a trend follower, mindful of your levels. These moving averages will trail up with price, and that will give you your exit point. So I can't sit here and guess. An example I gave you last time was, imagine if I got bearish in 1998 and totally missed out on the whole bubble. You know, you get tapped on your shoulder and you'd be out of a job.
If you look at other kind of intermarket things, I mean, a lot of people have been saying, look, credit looks fine, the cyclical parts of the market still holding up. Is any of that changing?
Yeah, that's starting to change. So I think we have to start looking at the macro again. We just saw since the debate, nominal yields are ripping higher. Oil's up 15% in 18 days. That's pretty impressive. But my cross-asset volatility work, my macro uncertainty indicator is starting to tick up. And what has really caught my eye is that credit spreads are starting to poke up. See, the Fed has hiked aggressively, but financial conditions have been relatively loose. But credit default swap spreads are starting to push up. And the work that I've done is that when the momentum, when it's a buy signal on CDXs, it's a risk-off environment. So that brings me to the conclusion of maintaining the allocation I currently have, which is low beta, high-quality stocks. But if that were to persist, because it does look like a base on the chart, that could be something that actually derails everything. It takes my cautious view off the table and something more long or lasting.
And so when it comes translating it into, let's say, S&P terms, in terms of if we did get some kind of a pullback, what threshold is there for where it's like more than routine?
More than routine, we're looking at somewhere around 5,300-ish. You break underneath there, then we start looking like we're topping. But really, that April low, that is it. You can't be outright, scared to death about the markets until you break that level. Until then, could just be a consolidation. It could just be a prolonged range. But I think it's premature to be outright bearish above the April lows.
All right, we got few percent.
Yeah, I got plenty of room for that. Yeah.
All right, John, great to see you. Thanks very much. Appreciate it. All right, up next, we are tracking the biggest moves as we head into the close. Pippa is standing by with those. Hi, Pippa.
Hey, Mike, we're seeing choppy waters for one group of travel stocks. All the details coming up next.
BWAQ, Blue World Acquisition, resuming and continuing to fall here now. Bravo Whiskey Alpha, Quebec.
That makes it easy to choose your loan, and if approved, get funds as soon as the same day. Your loan is on deck. The windows come down, the shoes go off, sleeves go up. Coast is there with open arms. Leave it all behind and settle in. Leave them alone.
Businesses everywhere are turning to Gusto for payroll, benefits, and more. Save time. Save money. It's no wonder Gusto is G2's #1 product for small businesses. Get started for free at gusto.com.
Do you feel overwhelmed by the constantly changing real estate market? You're definitely not alone. So many of our clients feel the same. That's why who you work with matters. I work with HomeLight to get the best deals for my clients. Whether you're looking to sell for the right price or hunting for that dream home, let's make your real estate experience smooth and rewarding. Start your journey at homelight.com today.
Want the effects of Viagra but faster? Meet Rose Sparks. They contain sildenafil and tadalafil, but Sparks dissolve under the tongue. Dissolvables work faster than old school pills. Connect with a medical provider at ro.co/sparks.
First on CNBC, John Ford's interview with new Amazon Web Services CEO, Matt Garman.
This message is brought to you by Shell Brothers Homes, building happiness.
Coming up on 20 minutes until the closing bell, the S&P trying to hold above the flat line. Let's get back to Pippa Stevens for a look at the key stocks to watch.
Hey, Mike, Hurricane Beryl is roaring through the Windward Islands and taking a bite out of cruise stocks. Carnival, Norwegian, and Royal Caribbean all lower after the storm made landfall in Grenada this morning. Royal Caribbean saying they are making adjustments to some of their sailings.
Coming up on 20 minutes until the closing bell, the S&P trying to hold above the flat line. Let's get back to Pippa Stevens for a look at the key stocks to watch.
Hey, Mike, Hurricane Beryl is roaring through the Windward Islands and taking a bite out of cruise stocks. Carnival, Norwegian, and Royal Caribbean all lower after the storm made landfall in Grenada this morning. Royal Caribbean saying they are making adjustments to some of their sailings. And Madison Square Garden on the move following news that the Boston Celtics majority ownership is putting the team up for sale as sports franchise valuations soar. MSG's controlling shareholder is the Dolan family, which owns the Knicks and the Rangers, and could be why the stock moved higher on the news. Mike?
Yeah, Pippa, hope springs eternal among Knicks and Rangers fans and investors. Thank you very much. Still ahead, shares of EV makers Tesla, NIO, and Li Auto all charging higher. We'll tell you what's driving those moves this afternoon. Closing bell, we'll be right back.
Okay, so we have a rejection. GME.
You can invest in some of the world's top tech companies.
DJT.
Leading the AI revolution before they go public. The future is now open for investment.
Is your shower trying to tell you something? Is getting in and out of the bathtub becoming a safety problem? Are you worried about the cost of a bathroom remodel that could go on for weeks and weeks? Well, now you can have a gorgeous new bathroom shower that's safer at a price you can afford with a one-day jacuzzi bath remodel.
It was done in the same day. We did not have to wait. It is amazing. Working with the jacuzzi design homes, it was a seamless process, and it really is an option for everyone.
I would give this whole experience an A+. I definitely wish I would have called sooner.
Jacuzzi has been making water feel great for more than 65 years. So you know it's a brand you can trust, and their products come with a lifetime warranty for a style you'll love for years to come. Plus, there has never been a better time to buy. We're waiving all installation costs and postponing all payments for up to 1 year. There are so many designs to choose from, including my Christina Preferred collection. Plus, we offer free, personalized, in-home design services to build the bath you've always wanted, right in your own space. And let's talk about accessories. From soft close shower doors and adjustable shower heads to features like grab bars and
PAGP Plains Group moving to the highs now on some volume. Papa Alpha Golf Papa PAGP.
for years to come. Plus, cleanup's a breeze with no grimy grout and no scrubbing. It just rinses clean. It's never been easier. Get your free design consultation, schedule your one-day installation, and start loving your new bathroom shower right away.
Call or go online right now for a limited time offer. Only weeks left to get waived installation and no interest and no payments for up to 1 year. Go to jacuzzibathremodel.com or call 800-990-6845. That's 800-990-6845. Call now.
Lung cancer is the leading cause of cancer-related deaths. Now Bioaffinity, a NASDAQ company, is commercializing CyPath Lung, a groundbreaking, non-invasive early detection lung cancer test, addressing a market projected to reach $4.7 billion by 2030. Bioaffinity's innovative lung cancer test has the potential to dramatically improve the survival rate of lung cancer patients. Bioaffinity, stock symbol BIAF on the NASDAQ.
We're Mizuho. Sound familiar? It should. That electric vehicle IPO? Mizuho was there. That Hawaiian clean energy deal? We were there too. Anywhere you need a corporate and investment bank, we're there. Mizuho Americas. a name worth knowing.
Welcome back. Shares of Amazon continuing to surge higher. Newly minted.
Oh, fuck a duck. 15 minutes left. The market has not even moved, really. Damn.
Knowing.
Welcome back. Shares of Amazon continuing to surge higher. The newly minted $2 trillion company is investing heavily in its AI future, planning to spend more than $100 billion over the next decade on data centers. CNBC's John Ford spoke with Amazon Web Services CEO Matt Garman in his first interview since taking the job. Here's what he had to say about the future of generative AI.
That OpenAI moment did galvanize companies to think about, okay, how do if the world is going to change, which it's going to, and I firmly believe that generative AI is going to completely transform every single industry out there in some way, shape, or form, and some of them very materially. And so kind of delivering 3 more percentage points of margin is not going to help them if their revenue is going down. And so I think people pretty quickly shifted to how do I innovate and how do I grow? And as soon as you get past, I put a chat bot on my website that was useful and was able to answer a couple of questions and was pretty cool. You get to, okay, I need to use my own enterprise data to go deliver some actual value.
You can get more of that interview coming up in the next hour on Closing Bell Overtime. Keeping an eye on shares of Paramount, and when are we not? Off the lows of the day on news, the company is looking for a streaming partner, and Warner Brothers Discovery could be in the running. Alex Sherman broke the story, joins us now with more details. Hi, Alex.
Hey, Mike. Yeah, look, the idea of pushing these two companies together may ring familiar to some people. That's because Warner Brothers Discovery actually looked into preliminary talks to merge the two companies earlier this year. They put pencils down on that deal, said it didn't really make sense. Investors didn't really like it. So step 2, chapter 2 to this story may be that Paramount Plus and Max could come together in some sort of joint venture. Paramount Global's leadership actually publicly stated their desire to move forward with a deal with someone, whether that be a tech partner or a legacy media provider that already owns a streaming service, in a employee town hall last week. The news today that I'm reporting is that there is interest from Warner Brothers Discovery in Paramount Plus, in that Paramount content, to match it with the content they already own in their Max service that would theoretically give consumers a more robust streaming offering.
So we have this potential combination or, joint venture, as well as the various media companies perhaps teaming up for this sports distribution deal in streaming. It feels as if just everybody feels as if they have to scramble for scale. It's obviously, the main thing for the players that are not, let's say, in the top 2.
Yeah, Mike, a couple things going on here I think that are important. Number one, a joint venture like this would actually take off, theoretically, Paramount Plus from the balance sheet of Paramount Global. So Paramount Plus has been losing hundreds of millions, billions of dollars every year. That may be good news for Paramount Global shareholders if this thing becomes a joint venture and is no longer on the books for Paramount Global. But really, in a bigger sense, it speaks to what you just said, that there is a re-rationalization of streaming assets going on. So all of these things have been launched, or they're about to be launched, like the sports service. And all the legacy media companies are kind of thinking, you know what, we've got to do this better. We've got to have more scale, more partners, better monetization of our content, new bundles, new packages, because what we've been doing has been losing us a lot of money. Maybe we're finally at the break-even point. Now is the point that we can make this business into a real money-making business for the next 5, 10, 20 years.
Yeah, as many of them sort of plateaued on subs, and I guess, reducing churn and cutting costs and all the rest of it kind of works on paper. We'll see, Alex, how it goes. Appreciate you bringing that to us. All right, up next, a volatile day for CHWY. That stock pulling back from its earlier roaring kitty-fueled rally. We'll hear from an analyst with how he's navigating that name after this break. That and much more when we take you inside the market zone.
Unpredictable and inconvenient, but with a Generac home standby generator, your
number one thing to prepare for is extended power outages. Don't make it so hard on yourself. Have a Generac home standby generator.
And special financing and low monthly payment options are available. Call or go online now to request your free quote. Power your life with Generac.
Working at CNBC is a blast. We're all about tackling this incredibly difficult thing, which is understanding the markets, understanding the economy. The ambition is the fuel that feeds that. Business is an amazing way to view the world.
When we're young, we're told anything is possible, but only a few of us go out and prove it. Witness the greatness of Anna Hall on a connection worthy of gold. Xfinity Mobile. Only Xfinity gives you the most powerful mobile Wi-Fi network with speeds up to a gig in millions of locations. And right now, Xfinity Internet customers can buy one unlimited line and get one free for a year. Get the fastest connection.
We are now in the closing bell market zone. UBS Global Wealth Management's Julie Fox is here to break down these crucial moments of the trading day and share her second half playbook. Plus, Oppenheimer's Rupesh Parikh digs into CHWY's latest wild swings, and Phil LeBeau with the latest on what's moving the electric auto stocks. Welcome to you all. And Julie, we have this year where obviously great gains, almost 15% for the S&P, only a 5% pullback along the way, yet a lot of complaints that it's just all been big growth over everything else, and maybe the economic message of the market isn't that strong. How would you be advising investors to navigate the second half?
I think right now the market's trying to tie up a few loose ends. How does inflation and job growth look over the next few months? How will the Fed react? How will earnings fare over the next few quarters? Earnings season begins in mid-July again, and how the political uncertainty of the presidential election may affect markets. Now, ultimately, we don't think any of these factors will cause sustained moves lower in the market, but we also don't see the broader market rising too much further from current levels. Our year-end S&P 500 target is 5,500. We're very close to that level now. But again, we're up 15% so far this year. So I think the bottom line is we think upside's muted for stocks this year, although there can always be volatility. The economic data reports, the jobs data, the inflation's data, that's going to be key for markets. And it's important to stay invested.
If it's important to stay invested, look, if you're an index investor in the big cap, S&P 500, you should be pretty happy. But you suggest maybe the index doesn't have a ton of upside. So within the market, where would you be looking to emphasize?
Well, I think there's really three key sectors right now that we're focused on. The first is tech. We remain constructive on technology stocks, even with the run the sector's had over the past year. Valuations for tech stocks are high and higher than their long-term average. But many of these companies are very profitable. They're on a firm foundation, and many of them will get bigger as AI is developed and serves more use cases. So I think tech is an important part of a portfolio. We also believe that the AI investment case remains intact. And then we like industrials. Those should benefit from resilient economic growth, improving manufacturing sentiment, and the tailwinds from the reindustrialization of the U.S. economy. And then lastly, small caps. I think while there's a lot of Federal Reserve uncertainty, we think the Fed's next move will be a rate cut starting in September. And rate cuts tend to benefit small cap stocks as those stocks are more reliant on debt. They're lower cost of capital. That helps profitability with the small cap stocks.
Yeah, that has been, kind of a big albatross on that group. We'll see if the path to Fed rate cuts changes that at all. Julie, thank you very much for the time today. Now, CHWY giving up earlier gains today. The stock had rallied in pre-market trading after an SEC filing revealed meme stock trader known as Roaring Kitty had taken a stake. Rupesh Parikh of Oppenheimer is here to discuss the company and the stock's prospects. Rupesh, great to have you here. Now, the stock has held on to some of the gains that seemed to be accumulating when there was speculation about this stake right here. But the company itself has been trying to, kind of prove it has a durable growth story. How are you thinking about the valuation right now and what the company has to do to kind of, justify it?
Yeah, so I think valuation right here in the mid-20s, it's very fairly valued. So prior to some of the speculation out there on Roaring Kitty, the stock was trading in the low 20s. So as we look at the outlook for CHWY, we think it's very mixed. So if you look at the pet food industry right now, you're still seeing a difficult discretionary backdrop. So given that you haven't really had the household adoptions in pet in recent years following the pandemic, you've seen some challenges in those hard good categories. So I think discretionary is still a headwind for CHWY. And then for the pet food industry, historically, food inflation is a big part of the growth, and right now you've actually seen no inflation out there in pet food, or actually even deflation in the latest reading. So I think those are really two of the bigger headwinds out there: challenges in discretionary, and then really the lack of inflation within the category.
And Rupesh, has CHWY sort of proven the business model at this point beyond just the cyclical pricing issues?
Yeah, they have. So if you look at their profitability, gross margins are now in the high 20s. They have an EBITDA margin of 4% plus, and they think they can get to 10% plus over time. I think where CHWY is really differentiated out there is really on the healthcare side. So they've done a great job with their pharmaceutical business. And now they've opened up these clinics in select markets. I was actually able to visit one in April in Florida at their grand opening, and I think they've done a great job with their clinic business. So I think that could hold potential longer term. So this is a great business model. I think it's really just lapping the pandemic headwinds with the pull forward and all the household adoptions, and really the lack of inflation out there. I think if I look at CHWY over the next few years, eventually I think they will get closer to high single digits, top line algorithm. But right now you're more in that low to mid single digit, and that's one of the key reasons why we're sidelined with the name.
I know the company's done some buybacks, but somewhat offset by new share issuance. I guess the question is, in terms of really getting to sustainable free cash flow, are they close?
Yeah, they're already there. Yeah, I mean, they already generate positive free cash flow. They announced that 500 million share buyback program on top of what they bought from BC Partners. So yeah, they generate a lot of cash. They're very profitable. It really is getting back to that top line algorithm that they laid out their analyst day in December. I think that's what the market's waiting for. And the other challenge is just driving positive net adds and customers. And they've been losing customers in recent quarters, so the market is looking for them to get back to positive net adds.
I know it's hard to predict, but do we know if pet adoption trends are going to turn in their favor anytime soon?
Yeah, so on their last call, CHWY highlighted that they were seeing green shoots in their business. So it seems like we're probably at the low point. Maybe we're starting to see, maybe some modest rebound. So, I think it's not going to get worse from here. The question is how strong a rebound we see in pet household adoptions. But yeah, there are green shoots out there based on what CHWY and some of my other tech companies, what they're saying out there.
All right, Rupesh, really appreciate you running through it with us. Thanks for the time today. Phil, we got Tesla up close to 6% on the day among some of the other EV makers. Yep. What's behind that?
Well, the Chinese EV makers spurred everything early this morning. You're talking about Li, XPeng, NIO. Look at the sales results that they had in the month of June or in the second quarter. Nice percentage gains here. Now, some of this is admittedly off a lower basis, but even when you take a look at BYD, now look at all these stocks for the last month and also factor in BYD. BYD's June EV sales, global EV sales, up 13%. Now, admittedly, there are some questions about whether or not there are price cuts that are going to be cutting into margins in China. But those numbers have people saying, what will we get from Tesla tomorrow? The street is not expecting much. The estimate is for deliveries of 433 to 436,000 vehicles. That would be a decline of about 6.5% compared to the second quarter of last year. What we're looking at is this momentum that seems to be building in terms of EV demand, at least right now in China.
Yeah, that would be a big, I guess, a turn and a tailwind. Phil, in terms of the future quarters, what's now on paper for Tesla in terms of deliveries?
Well, for the full year, the estimates now come down to about 1.82 million. Last year, they delivered 1.81 million, essentially flat. So
CVS, I think it is just like Walgreens. It's a dying industry. Nobody's going to the only time they go to convenience stores is for pharmacies. You know, they're pretty much convenience stores that have a pharmacy, and they don't. I feel like Walgreens and all of them, they need to start having sales. Like, I don't know. They do have photography and stuff, so it's just like I don't think much of CVS. I look at them all together. Like Rite Aid, Walgreens, CVS. You know, CVS is a good store, but I still think that there's going to be trouble at any minute with CVS also. I just think this business model of a convenience store, pharmacy, just, you know, if you want a dividend and stuff, you know, that's a decision you'd have to make. But I personally wouldn't even waste my time. I wouldn't even waste my time over there. Unless you have, like, some money you just, like, want to waste. You can throw some money there, but, you know, I just think the model isn't working. That's all. I mean, there's obviously something going on. Because, you know, all these things are down at the lows. That's it, guys. You guys have a great rest of your day. We'll be on tomorrow. I'll try not to get political and talk about how ridiculous these this guy of our president is. I promise I will try. So I won't bring that up. You guys have a great rest of your night. I'll put out the watch list. Very boring day. My sixth sense was correct. I figured if I did not catch that move on NVIDIA, that I was going to have to either sit all day or sit like all, you know, for like 2-3 hours to try and catch that reversal. And that's what happened. Which was NVIDIA. You guys have a good one. I'll see y'all later this afternoon. Again, I didn't do a watch list yesterday because of it was storming, had no power, and it was just something I didn't want to do. I didn't want to risk trying to do a live stream and record a video and everything go out. So, you guys have a great rest of y'all night. I will see y'all in a couple hours. Peace out.
There's not so much more caution than we've seen more recently with strategists. Are you in that camp?
To the extent the economy shows more